bit more. Yeah, but the problem it goes back to valuation. I mean, look at the equity. Let's talk about framing a little bit more. Right?
여러분 안녕하세요. 뉴스 읽어준 여자입니다. 안녕. 오늘도 매매를 해볼까나. 일단은 어제 같은 경우는 제가 진짜 충격받아가지고 제 감을 역시 감을 너무 많이 잃었어요. 어제 무조건 다이민이 괜찮은데 지금 매수로 들어가면 좋을 것 같은데 했는데 이게 뭐라고 이거 보세요. 이게 보세요. 와 진짜 너무 많이 떨어졌어 진짜. 어제 완전 멘붕이었어. 그리고 엄청 많이 잃었는데 어떻게든 살아남으려고 일부러 계약수도 늘리고 어떻게 좀 해보려고 했는데 근데 그 순간에 훨씬 더 많이 떨어졌어요. 이제 진짜 망했다 싶었어. 그때가 한 마이너스 60만원 정도? 60만원 정도 있었는데 결국엔 어떻게든 어쩌다가 한 수익은 2천원 정도? 와 그래도 마이너스 아니어서 진짜 다행이다. 와 진짜 어제 멘탈적으로 좀 많이 힘들었어요. 너무 힘들었고 진짜 힘이 하나도 없었고 그냥 망했다 이렇게 진짜 그냥 에라 모르겠다 이렇게 그냥 아무것도 하고 싶지도 않고 이렇게 이런 상태였는데 그래도 어떻게든 다행히 살아남았어요. 오늘은 그런 결과가 없길 바라고 그리고 제가 아무리 제가 오늘 파란색 옷을 입어도 오늘 아직 매도 갈지 매수로 갈지는 아직 모르겠는데 그때 차트 보니까 너무 많이 떨어졌어요. 엄청 많이 떨어졌고 지금 좀 올라가는 추세를 보이긴 하는데 좀 이제 쉽게 들어갈 수는 없을 것 같아요. 너무 겁이 많이 나가지고 진짜 어떡하면 좋을까? 역시 여러분 해외 선물은 위험한 거야. 위험하고 무조건 공부하고 나서 들어가야 돼요. 저는 완전 초보자라서 어떻게든 좀 운이 좀 있었는데 근데 운이 항상 있지는 못하고 공부는 중요하죠. 공부도 뉴스 분석 같은 거 이런 거 중요한데 중요하다 보니까 일단은 오늘 어떤 뉴스가 있었는지 그리고 어떤 파이프가 있을 건지는 알아봐야겠다. 오케이 일단 좀 알아보고 중요한 뉴스에 거기 영상에서 띄울게요. 이거 보고 참고하시면 돼요. 좋은 시간 감사합니다. 오늘은 직급 발표는 POMC라는 발표가 있고 새벽 내내 오늘은 발표들이 장난이 아닐 날이네요. 그럼 오늘은 발표가 여러 가지 발표가 많을 것 같은데, 그러니까 오늘 같은 날은 롤러코스터가 제일 심하지 않을까 싶어요. 근데 어제는 그냥 완전 급속히 떨어졌기 때문에 그때 롤러코스터 타고 싶다 이런 생각도 했어요. 근데 롤러코스터를 타지 못했어요. 완전 지옥으로 들어갔어요. 나스닥 100% 성장에 힘입어 4분과
for us and for our
잠깐만요.
customers. That conversation is coming up next, live from New York City this morning. Good morning. You're watching Bloomberg TV.
나스닥 주식이 많이 올라갔구나. 뉴스 보니까. 뭐지? 뉴스 보면 다 올라가고 있고 차트 보면 다 떨어지고 있어요. 뭘 보고 믿어야 되는지 모르겠네. 일단 최근에 올라왔던 뉴스를 넣었어요. 보시면 되고, 그리고 지금 뉴스 나온 거 보면 그거 봐요. 지금 나스닥 엄청 많이 아니지만 그래도 많이 떨어졌고 거의 0.76% 정도 떨어지는 상태인데 과연 오늘 저신지 이런지는 좀 파악이 필요할 듯? 맞아요. 오늘 폼스 미국 연준이 금리 발표. 오늘은 이런 발표 있는데 10시 30분? 10시 30분 다른 건데 10시 30분에 중국 제조 PMI 발표 있어요. 역시 주원씨 감사합니다. 주원씨 덕분에 좋은 정보를 얻었습니다. 그때 10시 30분 전에 어떻게 좀 버텨야 되는데 포지션을부터 정해놓으면 어떨까?
이 차갑고도 아름다운 세계. 누가 보기엔 그저 속덩어리.
저기요.
그러나 우리가
어제는
보기엔
했어요.
가능성
어제는
덩어리.
있었구나.
얼마를
10시
어떻게 깎아내느냐에 따라
10시 40
우주선이
30분
되고 스마트폰이
봅시다.
되고 심지어 우리 몸의 한 부분이 되기도
오늘이겠죠?
하니까.
오늘의 10시 30분
누군가는 우리를
일기침?
시작에 있는 일이라 하지만
그러니까
우리는
뜻침
솔루션을
별로
만드는 사람들.
아니구나. 발표 결과가 별로 좋지 않았구나. 엄청 많이 떨어졌구나 그때.
시작에서 솔루션을 찾다. DN 솔루션즈.
오늘은
시작은
밤 11시 45분
그렇게
1월
어느새
시카고 여는 PMI.
인생의 날개를
오케이.
다는 순간은 반드시
이
찾아온다.
발표 중요하겠죠?
투싼.
Too high.
It was, and look, if you
그때
parse through the
10시
numbers,
30분에
they told us, 6%
엄청 떨어졌구나.
revenue from generative AI workloads. That was 3% last quarter. So what that means is it went from 2 billion to 4 billion in a quarter. Now that's NVIDIA type growth. If you try to, model
오케이.
where those GPUs are going,
오늘은
and that too in
참.
inferencing. Remember, all these companies are trying to train their LLMs right now.
아직은
Microsoft has a
예측이
stat
안
where they are actually
되구나.
deploying this in AI agents, and this is all inferencing revenue. I think where they fell short of expectations was the co-pilot side. That didn't drive
어느
upside in
포지션을
that
잡아야
productivity segment,
될지는
but I think if this is any reflection, the trend is going to continue.
So this is the AI
잘
system
가야겠다.
Yes.
on your PC. How helpful is it?
Well, so that's where
방생이 많이
it did
떨어졌구나.
translate into
아하.
revenues because
네, 뉴스
people are still trying to
나왔는데
figure
잘
out
안
how to
봤어요.
integrate it in their workflow. Remember, this can do summaries, this can help you do long form searches, and it's still new. But where they are finding traction is companies looking to use their own data within the enterprise and building agents. That's what they mean by inferencing. And that OpenAI Microsoft stack is resonating in the market, whereas others are still developing. I mean, Google, I think Amazon numbers are going to be key because to me, Microsoft is clearly taking share in cloud from Amazon.
We were just hearing that too, especially because Amazon doesn't necessarily have the artificial intelligence capabilities that Microsoft and Google have. How do you gauge the fact that, yes, these numbers are completely solid, and yet people are responding badly to them? Does that mean that the market-based expectations are unrealistic? Or does it mean they've just been brought forward a year, 2 years, and things are just going to meander along in the meantime?
I mean, look at what happened with NVIDIA last year, right? It traded at the premium multiple, and they kept beating expectations.
지금
So
뉴스
in this case,
보니까
I think,
그
yes, Microsoft is trading at over 30 times PE.
덕분에
It's
아니야
rich
때문에
historically,
AI
but if
때문에
they keep delivering on the
그
Azure number, it's now
복장이
5% of their Azure
여러
revenue.
분야에서
If that
복장이
keeps
좀
growing at this pace, I think they can maintain that
많다고
premium multiple.
There also is a
하네요.
question
아,
of
지금
layoffs
마이크로소프트
and sort of
주식도
how they're
많이
going
떨어지고
to make their business more
있고,
efficient. We heard
와,
about
아마존,
layoffs and
애플,
then this.
메타,
The CFO
그
of Microsoft
페이스북,
talking about the company
와, 주식이
pivoting
진짜
to
많이
an AI-first
떨어졌구나.
workforce rather than hiring large numbers of new people to focus on the technology.
오,
Is this
나
going to
그
be
AI 때문에 떨어지고
AI person, AI at Microsoft?
I think it's too early for that.
그래서
Look, they
기대하는
have to
거야.
manage the margins. One of the biggest risks going into the print was their gross margins are going to get hurt because they are buying all this GPU capacity. I mean, remember, they raised their CapEx last night by 40%. And so this is huge. A digital transformation drove like 15 to 20% growth in CapEx.
네,
for
저도
cloud
AI
guys.
때문에
Now we're talking about
걱정이
40%
좀
from AI. So all that
많긴 하는데,
CapEx is going to kind of increase the
그래도
cost of
나중에
revenue,
좋은
and they have to manage the margins,
결과로
which they
이어질
said
수 있다고
are going to grow
생각해요.
1 to 2%. So that's what the street wanted to hear, that margin impact would be minimal.
I'm just happy you threw a person in there. Sort of AI person.
I mean, I
그러니까
figure
그쵸.
it's basically,
선물 지수가 떨어지죠. 그쵸.
auto-operated.
아무래도
Humans
그럴
make
수밖에
it lovely.
없죠.
That's sort of the image.
Our old days, I think 10 years away. I don't think
That's what it's
think
going to
it's
look
that
like.
soon.
not so soon.
But one thing we could get, Sebastian, I think this is a big change. Someone mentioned it in the previous hour. You could get real growth here at some of these companies, and they don't have to have the headcount grow at all, based on some of the changes we're looking at. How important is that to you?
I think expectations are high.
오늘은
How much efficiency
사실 오늘 같은
AI is
경우는
going to deliver.
발표가 너무
And
많아서
I believe in the efficiency. McKinsey's
엄청
putting out
조심해야겠어요.
numbers in the 3
조심하고
trillion
타이밍을 잘
efficiency
잡아야 되고 뭐
gains.
물론
This is the size of
언제든지
the
언제 항상
Okay, so there are
그
high
그 타이밍을 잘 잡아야
These are
되는데
great companies.
근데
They print
이런
cash
날에
flows.
더욱
Right
조심해야
now,
되고
we're neutral between
긴장
growth and value. In fact,
긴장도 해야
we're
되고
starting to lean towards value a little bit
지금
more. Not because we don't
지금
like AI and all the efficiency gains and the
차트가 왜
productivity
또
gains, just because we
멈췄네?
like to lean against the wind. And right now, the value stocks relative to the growth stocks are starting to look way more.
Everyone else likes AI. Everyone else seems to be on the same side of the boat at the moment. That's been the feeling over the last 12 months. You said 10 years before we see these big changes. Where does that number come from?
Well, just
지금 약간
looking at how AI
올라가고
is
있는
getting
것
deployed.
같기도
Look, right now, the
하고
focus is on infrastructure. Everyone
갑자기
is
떨어질
investing
수도
in
있으니까
infrastructure to feed the data, to
아직은
develop their
좀
models.
기다리는
All this is going to
거
translate into software. It's going
많은
to be
것
one step
같고
at a time. And then we are going to talk about robotics
서둘면
or,
안 돼요.
somebody who
제가
can
어제
take the jobs or,
너무
automate that. So it's going to happen in
약간
steps. Enterprise
너무
changes
빠르게
happen slowly
들어왔다
than,
보니까
what people expect. But I think this is
나중에
a real
발표
trend.
때
That's what you're going to find out,
그리고
from
그
these
시장이
companies
열
given-
때쯤 그때
What do you
완전
think the biggest surprise is
또,
going to be
또,
when
또,
we
또
get the
떨어졌기
results
때문에,
after Meta, after Apple,
그래서
after
진짜 고생
Amazon
많았어요.
tomorrow? Who are you
이거
expecting
고생이
to really
많아요.
sort of set a new
많았어.
tone other than good results, solid, just not good enough for some of the hopes and dreams.
Well, so look at the advertising side, right? We are going through a big change on the advertising side because these companies can't use third-party data anymore. Cookies are going to be deprecated. That will be a headwind for someone like Alphabet. And they are trying to pivot to AI agents to mine more data. So on the ad side, you are going to see changes. YouTube, I think, is going to blow through the numbers simply because streaming and connected TV is a real trend. You're going to see a nice acceleration on that front. So you are seeing that ad revenue shift over to streaming and all these AI agents over time, and that will be a big change.
One company we've not mentioned, Apple, reporting after the close tomorrow. Sebastian, can we finish on that? What's happened with the smartphone business and the companies associated with it? Have we met that saturated point, that saturation point we've all been worried about for a while?
Well, part of it in this case is China. Look, I think that we haven't seen, Mandeep maybe you can comment on this, but we haven't seen significant innovation in that space in a little while. The phones are starting to look and feel the same, and you kind of reach saturation. So, Jonathan, I think we're getting there, but we're talking about one of the companies that has a lot of innovation in the pipeline as well.
Sebastian Page, Seb, good to catch up. Great to get your thoughts alongside Mandeep Singh of Bloomberg Intelligence. Mandeep, thank you. Coming up on this program, coming up next, George Ferguson, the Bloomberg Intelligence Senior Aerospace and Defense Analyst, joining us to break down Boeing earnings and the company's response to the 737 MAX 9 crisis. Ramo, all of that and more, but Boeing in a tough spot.
Yeah, I just love the idea. This isn't good enough. Do better, Apple. This is sort of getting boring, right? I mean, that's sort of what we keep hearing, that we want something that, you know, is implanted in our brains and can
No, we don't.
export us.
No, we don't.
Yeah, exactly. I mean, that's what I'm saying, though. It's sort of, you know, what can you do for us now?
Mandeep, you're going to weigh in on that?
I think you want the LLMs to run on your phone. That's the next step of evolution, and it's going to happen. Apple is going to do it.
Been waiting for it.
Yeah.
Not the brain implant, although some people might think that's needed. But anyway, that's a story for another time. Equities on the S&P 500, negative here by 0.5%. Into the bond market, shaping up as follows. Treasury yields coming down by almost a single basis point. On a 10-year, 4.0241%. On a 10-year this morning in the FX market, the euro slightly negative. We're down 0.1% at 108.34. Waiting for the White House response to the deadly attack over the weekend, and still crude lower by more than 1%, Anne-Marie, 77 on WTI.
엄청 많이 떨어졌구나. 프랑스도 좋고, 버스도 좋고, 많이 들어갔고. 그리고 니케이 주식이 좀 괜찮을 듯? 대출 보니까 다 오르고 있구나. 조심스러워지네요. 그리고 나스닥은 계속 떨어지고 있고. 그쵸. 왠지 더 떨어질 것 같아요. 지금 뉴스도 보고 그냥 좀 가게 된다면 지금 천천히 지금 떨어지고 있어요.
How are you feeling right now about the state of the industry and what it's going to look like in the next couple of years?
The big picture is it has never been more, I would say, volatile. I mean, it has, but you know, it continues to be volatile. But like you said, we did see real signs of life this summer. So generally speaking, box office is down globally around 20% to 2019, so pre-pandemic levels. But this summer, it was 5% down. Right, so it would suggest that even though there were winners and losers of this summer, and obviously we had the two big juggernauts with Barbie and Oppenheimer, you know, movie-going begets movie-going, right? So when there's a season filled with, you know, good movies that people want to see,
잠시 티타임.
you know,
네,
I was
알겠습니다.
made to feel pretty optimistic
티타임
about
하고
what we saw in the
주원
summer.
씨도 다른 시청자분들도 티타임 지금 티타임을 준비한 것 같고 왜냐면 조금 있다가 본격적으로 뭐 발표 있을 거고 시장도 곧 열되니까 그때까지 좀 힘을 모아서 코피로 충전하고 다시 만납시다. 일단 저는 얼굴 좀 가릴게요. 제 멘탈 사사한테 한 20분 있다가 다시 올게요.
Here's the state of play, the scores for you. On the S&P 500, equity futures negative here by 0.5%. Underperformance from tech in the pre-market, dragging the Nasdaq down by more than 1 full percentage point. We get more from technology tomorrow after the close with Meta, Amazon and Apple. The small caps doing okay, positive here by 1/3 of 1%. In the bond market, 2-year, 10-year, 30-year shaping up as follows. The 10-year yield is unchanged at 4.0279%. The 2-year yield is lower by a single basis point, 4.32 on a 2-year. And to finish on foreign exchange, just a final read of things for you. The euro against the dollar, 108.34. That currency pair negative here by 0.1%. Under surveillance this morning, counting down to the Fed rate decision at 2 p.m. Eastern Time. Investors looking to chair Jay Powell's news conference 30 minutes later. The clues on the timeline for rate cuts. Traders pricing in a roughly 40% chance the central bank lowers rates at its next meeting in March. But most people we spoke to so far, Bramo, suggesting we won't get that guidance later on this afternoon.
I mean, unless we do, unless in the press conference he's like, all right, March it is, guys. I mean, at a certain point, the big surprise is going to come from the press conference, because otherwise, when it comes to actually the issue from the Federal Reserve, from the FOMC, it's going to be pretty vanilla, except for maybe taking out some of the hiking bias that they had previously.
That's the Federal Reserve. Should we talk about a single name?
Yes.
Should we do Boeing?
Yes.
Yeah, not good when you see this headline. Suspending forecasts for 2024. Bright red across the Bloomberg terminal this morning.
And the Boeing CEO, now is not the time to share financial objectives. It is a time to be reflecting on what's going on with their 737 production and the safety and all that. Basically talking about the production rate is now at 5 per month, but really so many questions here, even with them beating fourth quarter free cash flow and all of that. The suspension really is going to be what hangs in most people's minds.
Fourth quarter revenue coming in at $22.02 billion, the estimate 21.06. To Bramo's point, production numbers important. 737 production rate 38 per month. 787 program production rate now at 5 per month. If you're hoping for a ramp from here, Lisa, I think that's the difficult part of this. I think a lot of people hope that maybe they'll be able to ramp up production in the year to come based on the difficulties of the last few months. Maybe not likely.
This is a really tough earnings call, and this is going to be an even tougher one for the regulators, because a lot of airlines don't have a lot of choices. Are they going to wait for an Airbus for 3 years, or are they going to get a Boeing plane, albeit with some concerns around the edges? We heard from Ryanair saying, if you don't want your MAX 737, we want them. Give them to us. The price is right. How many others are going to really follow suit regardless of what Boeing does? It's sort of built-in base of buyers.
Let's get the stock price on the screen if we can. The headline crossing just moments ago, suspending the forecast for 2024. As Lisa said, now is not the time to share financial objectives. The message from Dave Calhoun, that stock is positive by almost 0.5%. George Ferguson, senior aerospace, defense and airline analyst at Bloomberg Intelligence, joins us now for more. George, we're waiting for the numbers. We've got them. Your first thoughts off the back of that?
Yeah, I mean, I think this this earnings call, actually, the right way to say it, is really going to be all about the future. So we kind of knew what deliveries were we had a decent understanding of what revenues were going to be and profits. I haven't had a chance to dig through all of it, but again, I think the forward discussion from David Calhoun and the management team is going to be what's most important about this call. I think it's going to be, you know, does the FAA agree that 38 is the current rate for the MAX production? And if that's the case, then this FAA cap on their manufacturing, you know, numbers is not going to affect them for at least 6 months. I would hope they could get pretty well through or not complete with the FAA review of their manufacturing by then, and then it wouldn't impact their, you know, their deliveries for the year. And I think that, you know, largely would keep the consensus view in place. But I think just the fact that they suspended guidance means that there's some concern about that. There's concern that's going to affect their, you know, their manufacturing cadence, and they're not going to get all those deliveries out in 2024.
Zooming out, can we just get a sense of how big a difference in profitability it would be for Boeing if their production rate were cut significantly? Their 737 production rate currently 38 per month. Let's say it goes down to 35. What would it go down to under a potential FAA cap, and how much would that potentially hit their bottom line?
So I don't think the FAA is talking about actually cutting from here. I think they're talking about, you know, restrictions on letting Boeing increase from here. So I don't see them cutting it. I mean, an adjustment of 10% or so, like you mentioned, isn't going to affect production, I think, you know, sorry, profitability dramatically. But I think the real, you know, sort of what we're all looking for from this company is to see production rates up in the 50s and 60s. We want to see them, you know, they need that increased rate to go through their supplier base, because their supplier base has been working inefficiently because they're working at low rates, not making any money. That's stressing them financially. You know, their supplier base is out there hiring people, getting ready to ramp to higher rates. To pause that will put some financial stress on them. So this, you know, a slowdown in their ability to ramp up cascades through Boeing and the entire base. So what we're really looking for is to minimize this cap, you know, have it not be an effect on their break to higher rates.
Meanwhile, the Boeing CEO, Dave Calhoun, saying increased scrutiny will make us better in a memo to employees today. Also noting that the backlog for Boeing planes includes more than 5,600 commercial airplanes. Do the safety issues of Boeing really matter in terms of just the potential orders, given the fact that it's a duopoly, that it's between Boeing and Airbus and they can't seem to develop the planes fast enough?
So I think it matters less until you have these problems continue for so long. The customers start to look other places, especially core customers. So the fact that United is already talking to Airbus about A321s is concerning. I wouldn't call them an anchor tenant in the Boeing, you know, backlog. They've got a lot in the Boeing backlog. Again, it's hard to go to Airbus and get in the queue for an A320 because I think you're waiting 5 or 6 years before you can get an airplane.
Wow.
So that keeps people coming to Boeing. But you know what we've heard from Bloomberg News even over the last couple of days is that Airbus has gone to some customers and asked them, "Hey, do you really need these airplanes in these years? We're trying to free up some capacity to go conquest a customer, which is United." So that's somewhat concerning. If you start knocking away these big core customers like Southwest, Ryanair, Copa, Alaska, that fly just Boeing airplanes, then I'm even more concerned. So I'd say right now, hasn't happened. United, a little bit concerning. If this continues and they start losing core customers, it'd be very concerning.
Elisa, as you mentioned, certainly not what we're hearing from Ryanair. Ryanair have basically turned around and said, if you don't want your Boeings, we'll have them.
Well, at a certain point.
At the right price, at a good price.
Yeah, well, I mean, at a good price, because that's what Ryanair does. I mean, honestly, though, to me, at a certain point, though, you have to wonder if they are safe and if some of the hype has sort of been overblown. You just tighten the screws, make sure to put them in, and you're going to be okay. Why not actually see people picking these up on the other side? I don't know. I mean, honestly, are others going to do the same thing, John?
George, Lisa's talked about this. Brooke Sutherland has as well. It's something we should build on. The culture of Boeing, led by Dave Calhoun. Dave is saying all the right things over the last few weeks. There was that very passionate address to employees that we saw a few weeks ago. George, what's going on with the culture inside of the company? As our friend Tom Keane would say, what changed at Boeing? What happened?
So I think it's very concerning, right? The culture used to be, I think, one of a very good engineering firm. I think that the playbook that they used prior to the pandemic doesn't work anymore. And that playbook may have been of less oversight and less training because they had very seasoned people on the line. The pandemic, and frankly probably the max grounding prior to that, has led to a large change in their workforce. And Dave Calhoun's going to have to put his money where his mouth is and spend more money on supervision and training on these production lines, go out and cooperate with the suppliers, make sure they're in financial health, make sure they're training, make sure that they're supervising, so he can ensure the product that he delivers is a quality product. And that's when we're going to know. It's great to go out and talk to everybody and tell them how much you care, but then you got to put your money where your mouth is. Spend that means the margins aren't going to look as good, cash flow might not be as good while you reconstitute the core of this company.
Boeing said that it's pausing 737 production for one day to refocus on quality. Is that sufficient?
One day is not going to make a difference. Again, this is all about spending the money over the long run to train people well and to supervise those lines. You can't count on really seasoned workers anymore. They've left.
George, conference call a little bit later today. Questions for the leadership at Boeing. What are they right now?
Yeah, I mean, I want to know what they're doing about improving that supervision of both them and their suppliers, right? They need to get down. We're probably going to find out that this problem didn't even happen in Spirit, but we knew there were other problems that happened in Spirit, and we've watched problems that Spirit's had with their suppliers affect the ability to deliver a quality 737. We're going to want to know how he's going to get down there and supervise, manage, oversee all those suppliers. And we're going to want to know what he's doing on his lines, again, to make sure he's got good supervision and good training.
Hey, George, thank you. We have to leave it there. George Ferguson there at Bloomberg Intelligence. Boeing in a hot spot right now, under the spotlight. Really, really tough times for that company. Here's the latest then. The numbers, the forecast, there isn't one. They've suspended their forecast for 2024. Fourth quarter revenue, hardly talked about it. It's okay. 22.02 billion, the estimate 21.06. The production rate for two planes, pausing the 737 production for one day to refocus on quality. The production rate at 38 per month. For the 787, the program production rate is now at 5 per month. Based on what you've heard this morning so far, Lisa, questions on the call? Conference call with Dave Calhoun later.
Do you think that one day is sufficient to refocus on quality? What kind of message does that send? And then also, what do you think you personally got wrong that you personally would like to change, considering that this has been an ongoing issue?
That stock is positive by 0.7% in the pre-market. Let's get you an update on stories elsewhere this morning. We can do that with your Bloomberg Brief. Here's Yahira Akes. Hey, Yahira.
Hi, John. Donald Trump has expanded his lead over President Biden in key swing states ahead of November's presidential election. The latest Bloomberg Morning Consult poll shows Trump leading in all 7 battleground states. The poll does show more than half of voters in those swing states wouldn't vote for Trump if he were convicted of a crime. Shares of Saudi Aramco fell as much as 2.2% in Riyadh on news of a revival of a follow-on offering as soon as next month. Bloomberg reports the kingdom is working with a group of advisors to raise at least $10 billion from the share sale. This comes after Saudi Arabia raised $30 billion in its Aramco IPO 4 years ago, which was the world's largest stock sale. Novo Nordisk became the second ever European company to pass $500 million in market value. The Danish drug maker expects a 26% jump in revenue and 29% increase in operating profits due to demand for its Wegovy and Ozempic obesity and diabetes medicines. Novo's CEO says the company is well positioned to grow its patient base.
We have access to some 50 million patients in the US, and we are only serving a small fraction of that. So there's ample opportunity for competition, and this is really about growing the market, serving more patients than it's a matter of market share.
And that's your Bloomberg Brief. John?
Yahira, thank you. Up next on this program, investors betting big on AI.
AI. Can't say it enough. Productivity is going to be one of the keys to growth, and these are companies that are best in their industry. They've got the financial metrics, but again, they're pushing up against valuations.
That conversation coming up very shortly. Live from New York City this morning. Good morning. Equities pulling back just a touch. This is Bloomberg.
Every tap is a turning point. And parents should have a say in what their teens are doing online. That's why Instagram wants to work with Congress to require parental approval wherever teens under 16 download apps.
It's not a reaction to external pressure. It's core to who we are, what we stand for. And to a very strong extent, it's about future-proofing our business, right? You need to focus on sustainability to recruit. More and more, that younger consumer we're talking about, they want to work for companies that care about this planet, that do more than just kind of generate revenue and profit. You need sustainability to attract consumers. More and more, including that younger consumer, they care deeply about what are you doing differently? How are you making a difference? Investors, particularly in Europe, more and more place value on what you're doing in sustainability. Many of our partners have expectations on sustainability.
On the heartbeat of the tech sector across global markets.
Real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. That's a question I get all night.
Bloomberg, top experts, great questions.
Equities pulling back on the S&P 500 by 0.5%. A bit of weakness out there in equities. Yields just about unchanged on a 10-year, 4.0279%. Under surveillance this morning, investors betting big on one thing.
AI. Can't say it enough. Productivity is going to be one of the keys to growth, and these are companies that are best in their industry. You look at earnings growth, and flat's the new up. Tech earnings are revisions are up modestly, while the rest of the S&P 500 is decelerating. So this is a big test this week.
Here's the latest this morning. Microsoft and Google falling in the pre-market after struggling to meet AI-fueled expectations. Tomorrow, tech earnings resume with Apple, Meta and Amazon. BlackRock's Wei Li saying this. Excitement over AI spurred a rally in US tech stocks that buoyed the market in 2023. We upgrade broad US stocks to overweight on a tactical horizon of 6 to 12 months. Wei Li, I'm pleased to say, joined us now for more. So Wei Li, a little bit more constructive on equities in the United States. Is that all AI or is it other things as well?
Well, up until now, it has been all AI, and I say that both about market performance, but also about our investment view. So up until now, our overweight in AI have been offset by our underweight to growth equity market in the US. And then if we look at performance, you look at equal weighted US equity market S&P, it was up 5% in the last 12 months. And if you look at Nasdaq, it was up 50%. So very concentrated market.
여러분 충전 좀 했어요? 티나 커피 잘 마셔. 충전을 좀 했는지 제가 티타임 가진 동안 매수로 오늘 좀 매수로 들어가봤는데 맞는 선택인지는 잘 모르겠는데 지금의 상태는 지금 좀 올라가고 있으니까 좀 괜찮을 수도. 일단 안정하게 조금씩 이렇게 가는 걸로. 근데 어제처럼 결과가 나올 거면 저 진짜 앞으로 해외 선물은 안 할 거예요. 아직까지 충격이 너무 커요.
And where you see things going further out with inflation picking up again. Could you walk us through your thoughts around that? You seem to believe there's this window open at the moment to engage with the market in a more constructive way. But further down the road, we're going
근데
to have some
아무리
problems. Where do those problems come
생각해봐도 나스닥은 진짜 미쳤어요.
Yeah, so when I was in Davos,
오늘 어제만 해도 가격이 얼마였어? 일단 17,700원 정도? 근데 17,400원이잖아. 엄청 많이 떨어졌잖아. 아 진짜. 오늘은 좀 차근차근 가는 걸로.
Inflation and persistent wage start pushing up inflation. So we actually expect inflation to fall all the way to target of 2%. But
오늘은 잔시작 전에 입철해 넣으시고 다시 기다려야 될. 좋은 정보가 감사합니다. 네, 일단 좀 너무 꼽순이라서 봐봐요. 지금도 약간 괜찮은 타이밍이 싶었는데 갑자기 또 떨어지네. 아, 저 이제 무서워요. 소박한 욕심. 아유, 이제 좀 돈을 좀 벌어야 되는데 이틀 동안 못 벌었어요. 월요일에 들어갈 타이밍이 없었고 어제 같은 경우는 잘못 타이밍에 잘못된 포지션을 잡아가지고 정신 차려야겠다 진짜. 정신 차려. 할 수 있다. 초보자들도 할 수 있다. 여러분 믿으세요. 저도 믿어볼게요.
We actually prefer duration over credit at this point, precisely because of the valuation and time spreads that you
뭐 아직은 분위기 속 나쁘지 않아서 오히려 좋은데요? 오늘은 욕심을 좀 많이 부려야겠다. 돈이 없어요. 곧 월세를 내야 되는데 돈이 없어요.
Duration looks more attractive than credit, and also, frankly, if you want to take more risk, equities look more attractive as well. So a bit of a bad about duration and equity.
오호호호, 그쵸, 좀 괜찮은가? 오, 웬일이야 오늘? 좋았어. 수익이 좀 있는 것 같은데.
On a valuation basis, not as attractive, which is why we don't love it, but we're not forecasting terrible things to happen to credit either.
When we talk about a 3% inflation destination, what does that do just generally for a mix of a portfolio? Does that mean that equities will have a better place just going forward than the traditional 60-40?
혹시 중간에 엄청 많이 떨어지면 저 옷을 갈아입을 수도 있어요. 이 영향을 줄 수 있기 때문에 파란색 옷이 있나 좀 찾아봐야겠다. 좋았어. 많이 올라가고 있네. 역시 레버리지 바꾸고 나서 숫자가 달라지네요. 좋네. 보기가 좋네. 오늘은 좀 할만하네.
neutral rate as well, which in our assessment is about 1% higher than pre-pandemic levels. And when we look at that kind of environment, back to your earlier point about credit, private credit looks quite attractive. You look at the relative yield pickup, 650 basis point above the public equivalent, and
trust
and turn out some of the allocations. So private credit infrastructure, those type of exposures looks quite interesting in this context.
Wait, before you go, Chairman Powell a little bit later today, no change expected in the statement in terms of the actual decision. What are you looking for from the chairman in the news conference?
좋은 생각이에요. 스텝 바이 스텝. 조금 먹다가 빠져나가고 다시 들어갔다가 다시 빠져나가고 괜찮은 것 같아요.
He would push back against still quite aggressive expectations for rate cuts. So we think that rates will be cut this year, but maybe 3 instead of the 5, 6 that markets are hoping for. So we're looking for if he would push back. But given right now the prevalent backdrop is still inflation falling because deflation is very, very
괜찮은 것 같아서 계속 유지해도 되고, 근데 지금 시간이 9시 54분이라서 한 40분 동안 버틸 수 있나? 일단 계속 해보고 타이밍이 떨어질 타이밍이 되면 그때 빠져나가고, 그리고 발표 전에 다시 포지션을 잡는 걸로.
To pick up again, Lisa.
We heard a little bit of this, or the possibility from Bruce Kasman over at JP Morgan when he's talking about once the good disinflation kind of works its way through the year comparison figures. You start to look at the strength, and you start to wonder if we do see a little bit more lift in prices to this 3% world that Wei was talking about.
Will Chairman Powell push back when he seemed to lean in that December meeting?
You know, right now it doesn't seem like they have any incentive to really push back against this because inflation has kept coming in. I'm really curious to see, frankly, the jobs numbers on Friday and how much wage inflation's come in. To me, that's going to be maybe even more important than what the Fed talks about today.
2 p.m. Eastern time for the decision. 30 minutes after that, the news conference. Then on to Friday for payrolls Friday.
근데 제일 신기한 거는
Let's check out shares of Boeing just briefly.
제가 원래 다른 유튜브 분들도 보고 얘기하셨잖아요. 제가 매수 들어갈 때마다 다른 분들을 매도 들어가요. 근데 이럴 때만 제가 수익을 많이 나고, 다른 유튜브 분들은 손해를 진짜 많이 봐요. 지금도 그래요. 막 봤는데 다들 매도하고, 아니 지금 타이밍이 괜찮은데 왜 매도를 하나. 누군가가 지금 손해를 보고 있는데 제 담보금이 거기 왜 있죠? 제 담보금보다 금액이 더 커요. 역시 이런 사람들이 손이 참 커요.
Transfer a self-directed individual brokerage account over to Robinhood and receive a one-time match bonus of 1%. The larger the transfer, the larger the match. You transfer, we match. Offer ends January 31st.
Starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined On as Chief Operating Officer in March 2013. Martin Hoffman arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a firm that
분위기가 좋네. 올라갑시다. 쭉쭉 올라갑시다. 근데 앞으로 함부로 제 감에 대해서 얘기를 안 할 것 같아요. 오늘 분위기가 좋네요. 오늘 감이 좀 좋네요. 오늘 같은 경우는 아마 매도일걸? 안 할게요. 방송할게요. 죄송합니다.
actually feel the CFO makes you a better CEO, and the CEO makes you a better CFO.
Wow, wow.
Understanding what you build as a CEO helps you to
수익을
understand
벌써
the numbers,
20만
understanding the
원이라니.
numbers helps you what are the right things to build.
너무 좋네.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials.
오케이.
Analyze markets.
단축 올라갑시다.
Or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think this will probably go down in history as one of, if not the largest financial crime ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community. When someone says, I'm going to give a
오늘은 다행히 기분이 좋네요. 아, 오랜만에 기분이 좋아졌네.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in?
I'm in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
From our studios in New York and San Francisco.
10시 15분 전에 입출하시는 게 나으실 듯? 그럴까? 잠시만요. 지금 좀 틀어지고 있는데 그때까지 좀 버텨볼까나? 근데 사실 지금 나가도 좀 좋아요. 벌써 20만 원이나 20만 원이나 벌었는데 좋았어.
I think it's a very, very tight rope that the Fed is walking. What we expect him to do is to lay the ground for why a March rate cut makes sense.
자수 발표가 있네요. 아하. 이때까지 당연히 잘 봐야겠네. 저 오늘 좀 욕심을 많이 부리고 싶진 않아요. 어느 정도 욕심이 있어야 되는데 아니면 저 진짜 월수도 못 내요. 욕심을 좀 있어야 되는데 근데 오늘은 좀 소박한 욕심 끝까지 좀 나가야겠다. 지금은 10시 1분? 오케이, 그 전에 빠져나가야겠다. 그럴 거면 타이밍을 잘 봐야 되겠죠?
We've got it. We've got that 2% inflation. We've got a green light to go.
New York Fed President John Williams, in the hours after Chairman Powell delivered the news conference in the middle of December, we aren't really talking about rate cuts. Do you think they're talking about rate cuts at this meeting?
100%. If they say that they're not talking about rate cuts or try to back away from that, people will laugh. I mean, that's just not possible because everybody is expecting them to probably remove some of the heightened bias from their language. Key question to me is what is the metric? What is the key determining feature for them to pull the trigger and actually cut?
Democratic colleagues down in Washington, D.C.
I doubt.
Would like them to cut rates right now. Senator Warren and 3 Democratic colleagues together now with Senate Banking Committee Sherrod Brown in a letter to Chairman Powell, 2 separate letters.
지금 나가기엔 너무 아쉬운데.
Sherrod Brown right here, quote, while more must be done to address the fact that costs remain too high, it is becoming increasingly evident that restrictive monetary policy is no longer the right tool. So they're edging on Powell to cut. To Jonathan, to your point, they know he's going to cut at some point. So why are they almost goading the Republicans to come out and make this an election
It's bizarre. You've mentioned it a few times that the calendar might be on the president's side. If the economic data continues to be okay, consumer confidence starts to turn around, that perhaps on the economic side of things improved. Then we introduce a new topic, immigration. Our latest poll here at Bloomberg with Morning Consult, just not great for the president whatsoever.
욕심이 아예 없었으면 해외 선물은 시작도 안 했을 거예요. 어느 정도 욕심이 있으니까 지금 이거 하는 거예요.
65 and over, those swing state voters, it's a tie between the economy and immigration. When it comes to immigration, the president gets full of votes.
All 7 swing states, Bramo.
인간 자체가
President Donald Trump.
Right, we heard that from
욕심을
Greg
좀
Valliere.
있어야
If the
돼요.
election were held right now, Trump would win, and this seems to be something that's not necessarily on the front burner yet because we have
요즘의
9 months of
세상이
an election
얼마나
season, a general election
무서운데
that's going to be the longest ever in
그
history. So we have a long
조금이나마
way to
욕심이
go,
없으면
and a
못
lot can happen.
살아요.
But it's interesting to sort of gauge where people's minds are at.
Feels like we're a year in already, doesn't it? Another sort of 9-10 months to go. Exciting stuff.
I mean, I just wonder how much this is going to evolve. You know, you were talking about this earlier. How many debates are we going to see? Probably not that many.
I don't think we will see
Maybe
any.
zero.
Yeah,
And
I think there's a good chance, Anne-Marie, we won't get one.
Yeah, there's a chance that neither of these men show up for debate.
지금
So how does the narrative
타이밍이
change from now
좀
until then? It's going to be really economic
좀
and it's going to be
애매한데.
event-driven with other potential geopolitical issues.
Absolutely, but when you come back to the economy, I'm so keen to learn about what the unemployment rate is going to be Friday. Because if it's under 4%,
지금
that's 2 years
빠져나가기엔
exactly
좀
of under
나쁘지
4%
않을
unemployment rate. And this is
듯.
something the Biden administration is going to take to those swing
10시
state voters and say they're
4분인데
delivering on an economic rebound.
The estimate right now, if you want a sneak peek of our survey, 3.8% is the estimate, just up from the previous read of 3.7. Payrolls, 216 last time around. The estimate, Bramo, 185. 185 is still okay.
고민이구만.
The focus, I think, for the Bears and some of the economists looking beneath the surface is just the breadth of those payrolls gains. Really starting to narrow. Just a few industry groups driving things at the top level.
Construction, for example.
떨어지네.
We've seen very specific drivers of that.
빠져나갈까?
I'm also watching wages. How much are wages continuing to accelerate or decelerate as so many people expect?
Let's turn to the price action for you this morning. The stage set as follows going into the opening bell in about 85 minutes time. 80 futures look like this. We're down by 0.4%. Yields are going nowhere on a 10-year 4.0298%.
빠져나갈게요. 일단
Again, by 1.3%, $76.79 on WTI. Coming up this hour, Michael Shaul of Market Field Asset Management on the Fed's path forward. Bloomberg's Michael
일단
McKee
욕심
breaking
더
US
안
ADP
부리고
data and the Treasury refunding announcement through the next hour. And former Federal Reserve economist
지금
Claudia Sahm on why she thinks the Fed should pass
나가버렸지.
sooner rather than later. We begin with our top story, counting down to the Fed rate decision.
에헤이,
Michael
그래도
Shaul of Market Field Asset Management saying
16만
December's
원인데
data shows quote,
앞에
considerable progress made
23만
in the fight against
원이었는데
inflation, but it also contains warnings about the potential for a
사실
bottoming
지금
of the Fed's preferred inflation gauge,
올라가도
PCE deflator,
저는
early this year. Michael, I'm pleased to say, joins us around the table.
후회가
So Michael, let's start with
후회 안
China
해요.
now. What are you looking
왜냐면
for
또
in the news
많이
conference?
떨어질 수 있었을 텐데 저 어제 중격으로 좀 조심할 수밖에 없어요.
to make a big decision in March, and I think he'll do his best to keep his options open and talk both sides of his book.
It's a big decision. Is it an easy one, based on what we've seen in inflation recently?
I don't think they need to cut rates, but they've kind of talked themselves into the position that the market has put a lot of pressure on to cut rates. I mean, I really feel that December meeting, they moved a lot further than they had to.
일단 시식을 좀 해보고 시식을 해봤으니까 조금 있다가 식사를 해야겠죠. 그러니까 오늘 지금 약간 에피타이저 느낌으로.
I think the Fed had created something of a rod for its back. It said another way, the Fed feels that it's winning the fight, and it doesn't quite want to say it's won, but it wants to hint that it's winning. But yeah, they're under some pressure.
But Michael, does it matter? I mean, I know that you're one of those people who is concerned about inflation reaccelerating later this year. Is that a concern regardless of what the Fed does?
I don't think a 25 basis point cut in March really makes any difference to the underlying economy, but it does
잘 나가버렸으면 조금 더 떨어질 것 같은데.
And what they don't want to be is a yo-yo Fed. They don't want to be a Fed that cuts and hikes and hikes and cuts. They really
오늘의 롱이 그렇게 길지 않았어요.
ahead of an economic cycle, which is taking interest rates down when they have to, keeping them where they should be
조금
when they have
있다가
to.
다시 들어갈게요.
But they certainly don't want to be a yo-yo.
When you talk about asset price inflation, I wonder if there's a lesson from the recent earnings that we got from Google and Microsoft yesterday. Is this asset price inflation, or is this fundamental hopes and dreams that are either borne out or not by the actual earnings?
Well, I think they're both the same thing, right? I mean, one's hopes are inflated by, things like interest rates. In other words, the market has a chance to look at good news and bad news, and sometimes it really emphasizes.
근데 오늘따라 큰 그림이 안 그려져요, 사실은.
In the fourth quarter last year.
원래 같았으면 그냥 전체적인 그림을 보고 오늘 왠지 쭉 올라갈 것 같아 이런 생각을 원래 들었는데 왠지 오늘은 이런 느낌이 별로 없어요. 역시 제가 감을 다 잃어버렸나? 아니면 오늘 진짜 좀 상황이 너무 애매한가?
When you think about how Alan Greenspan used to think of price stability, it was inflation so low
I
that
don't
prices would
know.
not impact daily decisions of everyday Americans. I'm not seeing that in polls or stories I'm reading about how people feel about the economy.
Well, I think people got a big shock in 2021-22, and although the inflation numbers feel better, people don't really feel better because you sort of remember what things cost 3-4 years ago, and although they're not going up in price in 2024 very quickly, they are a lot more expensive than they were in recent memory. And so, the aftershock of the big hike in prices in COVID, still remains. It's only gasoline which is kind of back to where people would expect it to be.
We've said it so many times, the cumulative inflation since 2020. The scars are still running deep. Let's talk about the stock market and get some of your thoughts on things. Framing matters, according to Sebastian Page at T. Rowe Price. He joined us in the previous hour. He said stocks up 2% in the last 2 years. Sounds cheap. Markets at all-time highs. Sounds expensive. How would you frame things in the stock market now?
Well, I mean, I think it's, again, being it's technology and everything else. I don't think tech looks cheap and it's not up 2%. We didn't have $3 trillion companies 2 years ago, and we do today. And the concentration of ownership in that portion of the market is much higher than it was 2 years ago. But S&P equal weight, or a lot of the cyclical stuff in the S&P is not expensive, and this so far has been a pretty good earnings season for sort of general economic activity.
Michael Schaub, going to stick with us and pleased to say, Michael Schaub there of Market Field Asset Management. Some of those tech names this morning, very lofty expectations just coming short. Those stocks pulling back in the pre-market. Equity futures negative by 0.4% on the S&P 500. 10시 15분에 발표가 있다고 얘기하셨죠?
Hi, John. Boeing has suspended financial guidance for 2024
발표
as it
4분
signals to
전
investors a renewed focus on
그때
safety. The aircraft maker's earnings report took a back seat to Boeing's latest 737 MAX
좀 많이
crisis, where a near
떨어지면
catastrophic panel blowout on an
그때
Alaska
다시
Airlines
매수로
flight
가버리지
triggered groundings
뭐야.
and the FAA to step up scrutiny of the
하면
company.
되지.
Fourth quarter profit and cash flow surpassed analyst estimates.
욕심을 뿌리면 되지.
2.2% in Riyadh on news of a revival of a follow-on offering as soon as next month.
뭐
Bloomberg reports the kingdom is working with a group of advisors to raise at least $10 billion
절대
from the
나쁜
sale.
거 아니에요.
This comes after Saudi Arabia raised $30 billion in its Aramco IPO 4 years ago, which was the world's largest stock sale. Media mogul Byron Allen has made a $14.3 billion offer for all of Paramount's outstanding shares. Allen is offering to pay a 50% premium to recent trading, according to people familiar with his terms. The total value of the deal, including existing debt, tops about $30 billion. In a statement to Bloomberg News, Allen Media Group says this offer, quote, is the best solution for all of the Paramount Global shareholders, and the bid should be taken seriously and pursued. That's your Bloomberg Brief. John?
Yahara, thank you. Coming up next on this program, it's the appetizer to Friday's payrolls report.
How much cooling do we need to see in the labor market, and can we continue to destroy job openings without destroying jobs? If we can do that, then the path to 2% without a recession should be relatively smooth.
Live from New York City, the ADP report is coming up next. Michael McKee is going to break that down ahead of payrolls Friday. Equity futures on the S&P 500 trying to bounce here negative by 0.4% into the bond market. Your 10-year yield in America basically unchanged going into the Fed a little bit later this afternoon.
Every tap is a turning point. And parents should have a say in what their teens are doing online. That's why Instagram wants to work with Congress to require parental approval wherever teens under 16 download apps.
낼 수밖에 없죠.
Welcome to the world of decentralized finance.
You can see the massive
gains for the OG
crypto coin.
Breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
오케이 15분 허허 올라가고 있는데
Gonna do this. It's a monthly event. It's something we say we don't care about. Then depending on what the number looks like, the market decides it cares about it. Equity futures going into the ADP report look like this on the S&P 500, negative by 0.4%. Tech earnings disappoint.
뭐지? 아직은 잘 모르겠어.
We're down 0.9% on the Nasdaq. With the ADP report, here's Mike McKee. Morning, Mike.
올라갈 거야 말 거야? 올라갈 거야 말 거야? 얘기해.
107,000 jobs according to ADP. That is significantly lower than the 151,000 that economists thought ADP would find. Most of the employment is in the service providing sector, 77,000 of the jobs there, 30,000 in goods producing, 2,000 of those in manufacturing. Most of that is in construction, 22,000 there. So it looks like the categories of jobs
아직은 이게 뭐죠? 주원 씨 이게 뭐죠? 아직은 좋은 정보 감사합니다. 왠지 올라가고 있는데
7.2% so we're still ahead of inflation in terms of pay, but we are definitely not getting the kind of jobs that a lot of people think we're going to get for the payrolls report on Friday.
Not a lot of drama.
아니요. 아직은 좀 타이밍을 보고 괜찮은 타이밍이 있으면 그때 잡고 왜냐면 어차피 제가 한 40분 있다가 1시간 있다가 밥을 먹어야 돼서 제가 정해진 시간이 있어서 그때 지금 가야 되는데 그 전에 좀 괜찮은 타이밍을 좀 잡아야 되는데
But the problem with ADP is
제가 왜냐면 혼자서 하는 거 아니라서 그 친구랑 같이 먹고 있기 때문에 그 친구가 퇴근하고 나서 우리 같이 밥 먹고 있기 때문에 그때까지 타이밍을 좀 잘 잡아야 되는데
pretty much only
당연히 있었으면 해요.
the jobless rate numbers, and so this may affect people's thinking. But given the big jump in the jobs plentiful to get yesterday in the conference board, I think most people are leaning towards a stronger job number Friday than they are looking at something like ADP.
Mike, before you go, 8:30 Treasury refunding. What are you focused on, given what we've already heard in the last 48 hours or so?
Well, the decline in the amount that the Treasury has to borrow has markets backing off a little bit from the idea of a major move on these data that come out at 8:30. But basically, they're looking to see if Treasury is indeed increasing the auction size as they said they would last time, and whether or not there are going to be any buybacks announced. Treasury said they're going to start buying off-the-run Treasuries. The question is, when do they start doing that? And then the mix of bills and notes and bonds is going to be important to the markets, whether the Treasury is still going to rely heavily on bills to make up much of their funding.
Mike McKee, thank you, sir. Catch up with you in about 12 minutes' time. Let's go back through that data. 107, the ADP report coming in at 107,000. The estimate 150 going into payrolls tomorrow, or rather on Friday.
그래도 조금 올라가고 있어. 쭉 올라가고 있어.
For Friday payrolls, the previous number 216. So downside surprise on ADP. Here's the reaction to it.
전체적으로 봤을 때 오늘은
in the equity market on the S&P 500, negative by 0.4. On the Nasdaq, down by about 0.9. But you do see a very subtle move at the front end of the yield curve. The two-year yield came in just a little bit. The two-year right now is down about 3 basis points, 430.56. Down a single basis point on a 10-year maturity to 4.0184%. We'll be talking about treasuries a whole lot more in about 11 minutes' time. Just to finish on foreign exchange, just a touch of dollar weakness, and I mean just a touch. The euro positive on the session by about 0.01% for a heartbeat. Bramo 108.45 on the euro. It's the smallest of downside surprises in the grand scheme of things.
Especially given the fact that EDP is not necessarily a predictive feature. And what we heard from Mike there was 5% for job stayers in terms of wages increasing and 7% for job switchers. It's not exactly getting back to some sort of level of wage inflation that could give the Fed true comfort. So it's not really going to move the needle. Michael
Shout of Marketfield Asset Management still with us around the table for some final thoughts. Michael, let's talk about the economic data. How much is payrolls Friday going to move the needle for you?
I think if it's anywhere between 150 and 200, it's not going to really matter. There'll be a little bit of excitement around it. Look, I think that you may get something big in the household survey. Last month we had this very weak number of people employed in the household survey, coupled with weak participation rate. I think maybe we get the opposite this time, because that survey does bob around. Maybe we get more people being added to the labour force in the household survey and a better participation rate. So we still don't move you free that much. Look, I think the labour market is basically chugging along. It's tight. We're not adding a lot of new jobs. I do think, as you said, people are going to be looking at the different sectors. The JOLTS report suggests that openings are sort of broadening in some of the sectors which haven't created any new jobs. But what nothing is showing, or no piece of data is showing, any significant layoffs in the core economic sectors of the economy. So we sort of remain in a full employment environment with plenty of wage gains running ahead of inflation. It's not a wage price spiral, but it's in no way weak.
Lisa raised this question a little bit earlier this morning. Just how relevant is the JOLTS report? Job openings yesterday, the quits rate still quite elevated. How relevant is that?
I think it's a reminder that things really aren't getting worse. I mean, I say what we see, we can have a long argument about how strong the economy is, but you can have a very short argument about how weak it is. There's really nothing out there that suggests this economy is pre-recession.
So how much are you contrarian at this point, given the fact that everyone kind of has coalesced around that view? It's a strong economy, things are going to go well, the Fed's going to cut rates, that's basically baked into valuations. Where do you push back?
Yeah, I think the risk of a meaningful acceleration is much higher than the market and most people do. I think what we've been through is an economy which was distorted by COVID, and then we remove that distortion, which looks like the beginnings of economic weakening. I think all of that transitory weakening is now falling out of the data pretty fast, and we're going to find the sort of core economy, the non-COVID distorted economy, is running hotter than people expect.
Which raises this question about when we're going to see this in the data. Right? I mean, I think about what Wei Li was talking about, where the journey feels pretty good, the destination looks a little different. What's the pivot point? What are you looking for?
Yeah, I think the ISM getting back above 50 would be a sign that this destocking cycle has run its course. I think that would be the beginning of the change. I think that would feed through to all the durable goods deflation, which is really what's pulled PCE down, falling out of the
보니까
data.
발표가 좀 발표 결과가 좋지도 않았고 나쁘지도 않았어요. 그냥 뭐 팩트 전달.
They're going to be very sticky, very sticky in the high twos and low threes.
On the flip side, in Europe, you do see the disinflation, you do see the weakness as well. German CPI came out just a bit ago, 3.1% versus the estimate of 3.2%. Are you leaning into Europe and away from the U.S. because of that, or do you say the U.S. is really the only game in town?
I don't think Europe's giving you any obvious reasons to be there. I mean, Japan's a really exciting global market. I mean, the Nikkei, since I was a kid, the idea of the Nikkei at 38 or 39,000 was like a sort of mythological target. I think I'm going to see it before retirement now.
Are you looking for a hike from BOJ anytime soon?
I think they're going to be very, very, very patient. I think
Do we need a hike to make that Japanese equity trade work? The rally we've seen in the banks, the hopes that interest rates and that regime is going to end?
I think the banks probably do, but again, the core, it looks like Japan is having a bit of a consumption-led cycle for the first time in many, many decades. And you talk about a country in which consumer sentiment has been lousy for, the majority of people's lives. That might actually be changing.
What else is working outside of US
타이밍
tech and
잡기엔
Japanese equities?
애매해요.
What else is working?
아직 셔스럭 들어가기엔 좀
Not bad. It's
그렇고.
not far off its all-time high. So this has been more than a tech-driven rally. It's just tech has sort of over-rallied versus the rest of the equity market. I mean, you do see there are some industrial stocks at all-time highs. There's even portions of energy at all-time highs. So, you can look around, and the global equity market has plenty of individual names, but if you're looking for sort of institutional and retail flows into an index, the S&P and the NASDAQ still dominate everything else, and until that changes, I think the returns will show the same.
찬스를 기다리는 준스. 뭔 말이야? 준스.
Across those three names that reported after the bout yesterday, the likes of Microsoft, Alphabet, and AMD. This is where we are right now. Microsoft numbers were decent; they were strong. We're down only 0.2%. Alphabet is where the question mark is. We're down a little more than 5%. I think people easily spooked around the search business, Lisa, given the potential threat that's coming from elsewhere and AI.
I think that's well said. Everyone's been talking about the sort of Google search and the disappointment for ad revenue. Let's put a number on that. It was $48 billion. That was the revenue in Alphabet's core search business. It missed the projections by the entirety, $48.15 billion. This wasn't exactly this massive miss. It's just a matter of expectations being very elevated.
Doesn't take much to spook people.
Exactly.
Around Google search at the moment, the threat of Bing and AI and ChatGPT.
I buy into it. I know you don't, but I think that, well, I mean, let's be honest. I don't like Bing a lot, but occasionally I'll try to see,
Make it sound like a bad habit.
I just like to check out the AI-fused Bing.
Okay. Coming up next on the program, the quarterly Treasury refunding announcement and a market reaction with Bloomberg's Mike McKee and Ira Jersey. That's up next from New York. This is Bloomberg.
AI might generate 10% of all growth to global GDP. That would be $10 trillion. We think that this will impact most companies, most people. Fortunately, at Columbia Threadneedle Investments, we have a wonderful team of analysts, and we're following the thread that goes between one industry and another.
오, 많이 떨어지네. 오. 외도로 들어가도 괜찮을 듯? 이거 제 생각이에요. 절대로 제발 따라하면 안 돼요.
One of the ones we're working on at the moment is how do we charge back into Ukraine as soon as the European authorities say it's safe to fly in Ukraine again. Now, nobody knows when that was going to be. But we were Ukraine's second largest airline when the Russians invaded on the 24th of February last year. We would be Ukraine's biggest airline. The week after, they tell us it's safe to go back in there because we're going to charge back in there. Initially, we have a plan to open up about 30 routes from 4 Ukrainian airports back into the European Union. And then we want to, I think, within 6 to 12 months, open up 3 or 4 large bases in Ukraine. And we're talking to the Ukrainian authorities about creating an environment cost agreement on which we could lead the charge of air travel into a post-war Ukrainian recovery.
You were offered a money-losing women's basketball team, and you said, I want to be in the other sports as well. Is that right?
Well, yeah, you got to be smart about this.
60 minutes away from the opening bell, your stock market looks like this. It's pulling back a little bit on the S&P 500. We'll talk about tech earnings in a moment. Down 0.4% on the S&P, on the Nasdaq down by
갑자기 왜 그래? 지금 몇 시야? 아하, 10시 39분이야. 오케이, 다른 발표가 있었구나. 제가 놓치고 있었구나. 그쵸.
Yields are lower by 2 basis points, call it 3 on a 10-year. That's a break of 4%.
오, 많이
3.99 on a 2-year, down
올라갔구나.
about 6, 4.28 on a 2-year yield. If you're looking at the FX market, the euro looks like this. The euro against the dollar, 108.45, totally unchanged. Some inflation data, Bravo, and the eurozone
갑자기
a little bit
떨어지면.
earlier. Does that move the Dow for you in any way, shape, or form?
It's basically pretty consistent with both France and Germany coming in below expectations. CPI in Germany 3.2% versus
오케이. 오, 안 들어가서 진짜 다행이다.
The disinflation trend is strong there, and they have the weakness that the U.S. doesn't have. So, all the prognostications could the ECB cut rates even before the Fed.
손들으면 안 돼요. 절대로.
Nowhere. I promise you that update on tech under surveillance this morning.
지금이다 싶으면 지금 아니야. 아니야.
At its fastest pace since 2022, yet investors still wanted clarity on the future growth from AI. Google reporting weakness in its core search business, raising concerns as to how much it could continue to keep up with AI competition. Amazon, Apple, Meta, all on deck, all reporting after the bell tomorrow. Apple over the last year up 30%, Amazon up 54%, Meta up 168% over the last 1 year.
I would argue Thursday, tomorrow is going to be more interesting for some of these tech earnings, especially with questions around Amazon losing cloud share to Microsoft, and then also this question around Apple and the hardware of it. Are we really getting bored of our phones? Are people not necessarily upgrading? Is this what we're going to hear? What about China? How about some of the questions around a number of the antitrust issues? These are some of the things that I think are going to make for more interesting.
The headwinds in China are fascinating because there's some Chinese policy about having foreign tech in some certain workplaces and taxing some issues there when it comes to the iPhone. And this analyst last night puts out this report about the semiconductor components. And what this analyst says it shows is that shipments of the upcoming iPhone 16 will decline 10 to 15% in China.
We haven't talked about this yet. Let's turn to another story. A Delaware judge striking a blow to Elon Musk's fortune. The Tesla co-founder's 2018 $55 billion package voided by a Delaware judge after a shareholder challenged it as excessive. Musk reacting on, guess what, X, formerly known as Twitter, writing, quote, never incorporate your company in Delaware. I'd recommend incorporating in Nevada or Texas if you prefer shareholders to decide matters. Lisa, your thoughts?
I go back to what I said before. I think that Elon Musk is realizing it's a lot more fun to run a tech company than it is to run a car company, and it's a lot more fun to run something that's private than public, because right now, when it's public, he's not very happy with some of the scrutiny that is entailed. That's all I can say about this, because honestly, at a certain point, he wants 25% of the company. He wants to change it to a tech company. It's a car company, and people are buying cars. Where is the stewardship of that?
Well, when it also comes to ditching Delaware, more than 70% of Fortune 500 companies are in Delaware. They're incorporated there for a reason, given their unique laws, given their unique how they deal with tax policy in those courts. I don't think he's actually leaving there anytime soon, but he did say to his ex-followers that they should win.
아니다. 그
So maybe he will
11시
actually go incorporate to
45분
Texas if his followers say
That's what's
going to
guide things.
That's what he was saying. Yeah, exactly. Vote here. 90% are like, yeah, you should move. I mean, is this all just basically, I mean, it just seems like a little bit high school. It's like vote.
High school.
It feels, you know what I'm saying? It's sort of
over like 50, $60 billion pay packages.
위험한 거?
Slight difference.
위험한 거 별로
well, it's just sort of like respond to me, like this video, you know, like whatever the
You should buy a sports
expression
team.
is. You think so?
Just buy a sports
Now
team.
take a page from somebody else who we know.
AC Milan. David Rubenstein, not buying AC
I was about to say, do you want him to buy AC
Not
Milan?
buying. If he's got the money and he's willing to spend it on players, absolutely. I'll take anyone right now. David Rubenstein, the Carlisle Group co-founder, leading a consortium of investors, get a deal to buy Major League Baseball Baltimore Orioles for $1.7 billion. The group agreeing to buy a 40% stake from current owner Peter Angelos before acquiring the remaining stake when he dies. The 94-year-old bought the team for $173 million, Lisa, back in 1993.
Well, David Rubenstein is from Baltimore, and next time we have him on, we'll have to
Talked
ask
about this for a
this.
while, about whether he'd be interested in doing it.
And he is, and this isn't his first investment in a sports team, we know that, but it's also, there have been a series of them, which I think is kind of interesting. And I wonder how much this is about profitability and how much it's about nostalgia. It's kind of like the Steve Cohen, investment in the Mets, and that was something driven from, a certain passion.
If I had the money, I'd do something.
You would?
Oh, yeah. I'd buy AC Milan. Without a doubt, I'd love to do that.
Yeah.
I'd love to do that. Even though Italian football is not what it once was in the 90s, I'd still buy AC Milan.
Your first change?
My first change? I'd bring Paolo Maldini back to help me run the club. That would be my first change.
All right.
Number one decision on day one. That is exactly what I would do. Let's talk about treasuries, less about football. The Treasury refunding announcement just crossed in moments ago. Mike McKee has the details. Hey, Mike.
Wow.
John, we also have the employment cost index, and between Treasury refunding and employment cost index, while you guys have been chatting, we've had a big market move. So something in there is really affecting the Treasury markets. The employment cost index comes in up 0.9%, and wages and salaries up 0.9%. Strong gains, so that may have had an impact. Now, in terms of Treasury refunding, basically it comes in as calculated, expected by a lot of people in the Treasury market after the borrowing needs number came out on Monday. $121 billion offered, refunding $105.1 billion in maturing bills, raising $15.9 billion in maturing cash. 3-year note auction next week, $54 billion. 10-year note, $42 billion. 30-year bond, $25 billion. You note that they are all increased as Treasury promised at the last refunding. They're raising the size at this particular auction, and they're going to be raising the quarterly size of auctions for most of the tenors, except for the 20-year going forward. Treasury by the end of the quarter up $9 billion, the 2-year rather, the 10-year up $2 billion. And in terms of other news there, this is the last quarter of increases to coupon auction sizes, they say. They're going to maintain bill sizes at about the same level into late March. By late March or early April, they will start reducing the size of bill auctions. Of course, April is when tax payments come in. And they're going to start doing some small value test buybacks in April. They said that they are going to start doing the off-the-run buybacks, but not yet. They'll do some tests and then announce the first regular buyback schedule when we get to the May refunding numbers. So it looks like at this point, strong economy, and Treasury still has some debt issues to deal with. But one interesting note, I'll throw this out there because I know Ira's coming on. The Treasury Borrowing Advisory Committee, which gives the Treasury Department advice on what it should be doing, notes that market concerns around large deficits, which were partially responsible for driving yields higher, appear to have waned. So less concern about deficits in the markets than there had been.
Mike McKee, thank you, sir. Initially, there was a reaction. It's faded since. We're down about 2 basis points on a 10-year. If you're looking at the 2-year yield, we're down about 3 basis points, 3-4 basis points lower at 429.94. I'm not really sure what that excitement was about in the last 5 minutes or so, Lisa, in the bond market.
I would suspect it has something to do with the employment cost index more than the Treasury refunding announcement, because
the Treasury funding announcement pretty much in line with where they were in November and basically where we were guided to earlier this week. The employment cost index coming in lower, though, materially lower than people expected, just sort of speaks to this fact that even though we have strength in the economy, disinflation continues to the degree that can give the Fed some comfort to cut rates.
Do you think we're overemphasizing materially lower on the ECI?
No, are you suggesting that
매도로 한번 들어가 볼까?
No, I'm just kidding. 0.9% versus the expectation of 1%. Well, I mean, honestly, it's a subtle downside surprise, but it's down from 1.1% the prior quarter. So that's a material.
These things matter. I'm just asking a question.
Oh yeah, just theoretically putting it out there.
Just exactly. On the equity market at the moment, on the S&P 500 down about 0.5, on the Nasdaq we're down about 1 percentage point. Ira Jersey with us from Bloomberg Intelligence, Chief US Interest Rate Strategist. Ira, your thoughts on what we just heard in the last 10 minutes or so?
Yeah, so I have not looked at the employment cost index. I've been focused, very keenly on the quarterly refunding announcement, which did have in the details a few little surprises. So what particularly for me, and that was that the Treasury Department is going to be increasing 2-year notes and 5-year note offerings, which will happen at the end of February, more than certainly we had expected. So they're actually increasing 2-year notes $3 billion a month for the next 3 months. So that's another $9 billion of 2-year notes that we're going to get up to $69 billion every auction, which I'm pretty sure is a record. If memory serves, 67 was the old record. So even though deficits are certainly moderating slightly compared to what they were in the second half of last year, and becoming much more seasonal and normal, there's still going to be this net issuance that the government has to do. The other big thing was the announcement that they are going to be starting buybacks in the next quarter, it sounds like, and if they do that, then they'll probably have to increase the on-the-run coupon auction just a little bit more, and in order to conduct those programs. But keep in mind that might actually help market liquidity a little bit, which hasn't been particularly good of late, John.
What's the significance, Ira, of increasing the 2-year and the 5-year maturities in terms of just what the market is prepared to absorb? I'm not seeing that much reaction in markets, and if anything, yields were lower on those maturities after this announcement came out.
Yeah, I'm not sure why everyone decided to go buy 2-year yields, 2-year notes when they're going to be a lot more supply. That didn't quite make sense to me, and I think that'll get worked out over time, particularly when we see the auctions themselves. So I think there's two things. I think one is there's an acknowledgement by the Treasury
너무
Department
아쉬운
that
거는 제가 매도 때 타이밍을 놓쳐버렸고, 그리고 지금 매수 타이밍이 있었는데 이것도 지금 놓쳐버렸어. 참 내가 타이밍을 역시 잘 못 잡아. 왜 그럴까?
Basically, they're starting to term out debt a little bit here, and I think as interest rates come down further, the Treasury Department will look to term out the debt and increase the average weighted maturity of all of the Treasuries outstanding, because that's shortened quite a lot as they've issued a couple of $1 trillion in T-bills over the past couple of years.
Ira, I'd love just stepping back, your view on what the Treasury Secretary has done with respect to some of these borrowings in terms of actually surprising to the downside how much we're going to be borrowing in the first quarter, and then pushing that out in potentially medium-sized duration. All of these sort of machinations to try to keep some sort of common markets. Do you think that it seems like it's savvy, or do you think that it will sort of be the bill that hits later in the year when we have to increase issuance that much more?
Well, I think there's a couple of things. One, keep in mind that the amount that the Treasury Department raises has to do with what it thinks the deficit's going to be for that quarter. So that's not a choice that Janet Yellen or anyone at the Treasury Department makes. That's actually a choice that Congress makes, and it just happens to be that they're going to be about $56 billion less of the deficit this quarter than they had projected 3 months ago. By the way, I thought that there would be a lower deficit than there was. So it definitely surprised the consensus, but it didn't surprise everyone that there's going to be slightly lower deficit. The other thing is, and I think that there's some people in the market think that the Treasury Department is doing something unusual and issuing all of these T-bills. If you go back to the 1980s through now, the Treasury Department almost always increases the amount of T-bills as a share of their portfolio when interest rates are high, and then when interest rates are low, it turns out that debt. You could argue that maybe they should have, done a lot more 10-year and 30-year debt when interest rates were near zero. Sure, you can definitely say that, but at the same time, this is a very typical cycle that the Treasury Department does. The difference now between now and say those prior cycles is that you normally don't have growth as strong as it is with deficits as high as they are, right? Normally deficits are low when growth is as strong as we've seen it the last couple of years, and I think that's a major difference between this cycle and others, is that you don't expect $760 billion of net borrowing when nominal GDP is running at 5%, right? That just is not a normal environment, and I think that's a bit of a challenge for Treasury in trying to manage how much it's issuing of different debt and keeping the cost to the taxpayer in terms of interest rates low, because it's hard to do when interest rates are at 5% for short-term debt and 4% for longer-term debt.
Ira, we appreciate the modesty. It's good to catch up. Ira Jersey there. It was a surprise to you, but it wasn't to me.
I mean, I understand all these small little victories. You're like, I got it right. Why didn't anyone listen?
I like how you're calling it a small little victory.
No, it's a small little victory. It's understanding mechanics, honestly. Ira, thank you for your contribution.
Thank you, Ira. We appreciate your contributions, sir. Let's give you an update on stories elsewhere this morning. Here's your Bloomberg brief with Yahara Hackers. Hey, Yahara.
Hi, John. House Republicans are moving toward impeaching Homeland Security Secretary Alejandro Mayorkas. A GOP panel approved 2 articles of impeachment, sending the vote to the House floor. However, the effort is likely to die in the Senate. Mayorkas is in the hot seat as security at the U.S. border with Mexico remains a hot-button issue. Activist investor Nelson Peltz has a plan to fix Disney's profitability in streaming, and it involves bundles. Peltz's firm, Triumph Fund Management, will recommend the company seek to bundle its ESPN Plus service with a larger player interested in sports, such as Netflix. Triumph controls close to $3 billion in Disney shares and is seeking 2 seats on Disney's board. Lamborghini has sold out of its supercars until 2026. It's an indication the world's wealthiest consumers are showing few signs of being affected by a broader global slowdown. The Italian luxury car brand posted record sales of more than 10,000 vehicles last year, driven in part by the introduction of its first plug-in hybrid model. That's your Bloomberg Brief. John?
Yahara, thank you. Up next on this program, looking ahead to a Fed rate decision.
What the Fed's going to do today is open a door, but basically tell us it hasn't decided when it's going to walk through it. And I think there's a story here about inflation coming down that's encouraging them.
That's coming up next on the program, live from New York City. You're watching Bloomberg TV.
How are you feeling right now about the state of the industry and what it's going to look like in the next couple of years?
The big picture is
다른
it has
유튜버분들 지금
never been more, I would
매매
say
안 하고
volatile. I mean, it has, but it continues to be volatile. But like you said, we did see real signs of life.
힘내주세요, 여러분.
So generally speaking, box office is down globally around 20% to 2019, so pre-pandemic levels. But this summer, it was 5% down. Right, so it would suggest that even though there were winners and losers of the summer, and obviously we had the two big juggernauts with Barbie and Oppenheimer, movie-going begets movie-going, right? So when there's a season filled with, good movies that people want to see, I was made to feel pretty optimistic about what we saw in the summer.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
심심하니까 얼굴이나 바꿔볼까? 제 모습을
from New York, counting you down to the opening bell, 42 minutes away
찾았던
from
것
the cash
같아요.
open. Equity
잠시만요.
futures on the S&P 500 negative here by almost 0.5%. Under surveillance this morning, looking ahead to a Fed rate decision.
What the Fed's going to do today is open a door, but basically tell us it hasn't decided when it's going to walk through it. And I think there's a story here about inflation coming down that's encouraging them. But there's also a story about the economy looking pretty strong here, which is raising questions about how restrictive actually 5.5% policy stance is.
The Federal Reserve expected to hold rates steady, but the timing of cuts remain in question. Senate Banking Chairman Sherrod Brown saying this: while more must be done to address the fact that costs remain too high, it is becoming increasingly evident that restrictive monetary policy is no longer the right tool for combating inflation. Claudia Sam, former Federal Reserve economist and founder of Sam Consulting, a good friend of this program, joined us now. Claudia, wonderful to catch up with you. We have to tackle the politics first, if you don't mind. How unhelpful is it to hear from senators weighing in on Fed policy ahead of the Federal Reserve, which is gearing up to cut interest rates anyway?
It's not a good thing. I mean, everybody can express their views, and we've certainly heard it on both sides of the aisle. Everybody's got an opinion about what the Fed should do. I do also. And the Fed is going to have to try really hard just to not listen at all. But the Fed is political. It's in DC, not partisan. But they are in the crossfire, and they always are. And in election years, this is not helpful given the big decisions they have. But this is where we are.
You think they should go sooner rather than later? Do you think the calendar influences that in any way, shape, or form, just in terms of the election being in November? If you need to go, let's get moving.
Not so much with the timing, and honestly, the biggest factor this year is the Fed. I mean, they drag their feet, and it's clear that that's where they're headed. So it's more about the calendar is whenever you start cutting, that is going to have some constraint on how much you can cut.
2월 5일,
And the politics are already
2월
going
5일,
in full force. So
오늘이
there's
아니구나.
nothing about the calendar that's going to
2월
help.
5일 2024년 회계 연도 2분기 실적 발표 예정. 아하, 그때 발표가 있을 거라고 얘기했는데 좀 준비를 마음 준비를 해야 될 것 같고 2월 5일에 또 다시
They should be cutting this afternoon. Frankly, the case is there. Inflation is coming down. We're headed to dual mandate. Nobody's asking for 200 basis points this afternoon. Right, 25 basis points get moving. And yet, I see May as the absolute earliest that the Federal Reserve is going to cut. They just like it's not
언제 터질지는
they are always
조심히
and they're going to do it here now. It may not matter
해봅시다.
much. I worry a lot about
여러분도
credit markets.
무리하지
I think that's where it
마시고
would matter first than being slow.
천천히
And yet, I mean,
해보세요.
come on, it's the Fed. But they have the case. Neil is absolutely right. The case is there.
What's the argument to really start cutting sooner if you have credit markets that are wide open, you have financial conditions that have gotten really quite easy, you have people where you get economic confidence picking back up, MasterCard just came out a bit ago, people still spending. What's the argument for the Fed to make a move?
The dual mandate. I mean, by the time they get to 2% inflation, and it's kind of hanging at 2%, they should be out of the way. Now, we can argue about what that restrictive, not restrictive interest rate is, so the infamous R-star, but there's no way that we're not above it. I mean, the Fed says that too. If they don't get going with the cutting, and we see the inflation rate really coming down, they're going to miss it. Like, they're not going to be out of the way when we get to 2%, and that's a big problem for them. And Jay Powell said at the last meeting, and this was so important, that the Fed does not think to get inflation down, they have to have slow growth. And that was a big change for them. So I should be on the prize here, 2% inflation.
That final point is such a good point. Can we just talk about the other side of the dual mandate and talk about what's happening in employment? In the labour market, Claudia, when you look at the surface level stuff, things still look okay. South of 4% unemployment, jobless claims in at around 200k. You're far better than me, far better than most, actually, when it comes to the labour market. Claudia, what do you see right now? Do you see signs of weakness emerging?
there are signs. When you look under the hood, there are places where they're showing some weakness. Now, I still look at the labor market and say this is good, and it has a lot of strength, and it's still in a resilient place. We are in this place where it really looks like we rebalance. Like things have gotten, the job piece, it's slower, absolutely, than a year or so ago, and yet it looks like before the pandemic. Quits rates, a lot of pieces look like before the pandemic, which when we had a good economy. But as things are slowing, it could be rebalancing. That's what I see. But it could also be this slow grind down. And once it gets going south, it's really hard to stop it. So yeah, there's signs, and we're going to see more on Friday as to how much these are really flashing yellow or not.
Just to put a bow on that, Claudia, you did coin the SOM rule, and I know you've pushed back. It's, in terms of just how it's applied. How close are we to triggering that kind of increase in unemployment, just the pace of the increase? How much are you looking for this Friday?
So we're nowhere near triggering the SOM rule. The unemployment rate smoothed out is up 0.2 percentage point relative to a trigger of 0.5 percentage point. Like if we manage that trigger on Friday, I will have passed out dead or something. Like there's just no way we have those kind of moves. I'm not kidding. So I think the consensus is we see a little bit of a drift up in the unemployment rate to 3.8%. But I mean, come on, we have the longest stretch now below 4% unemployment since the 1960s. This is really good.
Pretty amazing. Claudia, you're one of our favourites. It's great to hear from you on Fed Decision Day. Thanks for being with us. Former Federal Reserve economist Claudia Sahm there. You mentioned Neil Dutta. Neil wrote in just on the Bloomberg moments ago, the Dove should be fighting tooth and nail. It's over.
Well, he's right.
It's over. I think Claudia would agree with that as well.
Yeah, she basically said they should cut this afternoon. I love Neil. They just all caps, Doves have all they need, go. Here's the question. What's the risk of not going now? Is there a material risk of that downturn? We have heard that from absolutely very few people. I mean, some people have, I guess, Don Cosmo. I was going to say no one, but I can point to a couple people who are worried about the downside.
시청자분들이 좀 있으니까 일단 좋아요 좀 눌러주시면 저 진짜 감사할 것 같고 그리고 제 채널 추천해주시면 또 좀 괜찮을 것 같고 해외 선물 초보자든 해외 선물에 관심 있는 사람들한테 좀 추천해주시면 재밌을 것 같고 우리가 이렇게 같이 레벨을 하면 좀 괜찮을 것 같고 저도 재밌을 거고 여러분들도 이렇게 제 영상 밑에 이렇게 소통할 수 있으니까 좀 많이 좀 참여해주세요. 저도 추천 같은 거 받고 싶습니다. 그리고 제 채널에 사실 영상 하나밖에 없는데 제가 올리는 거 라이브 말고 올리는 영상 하나밖에 없는데 앞으로 조금 다양한 그 영상을 올릴 생각이고 지금 그냥 그 해외 선물 대해서 자세한 내용 이런 영상이 있는데 나중에 더 정확한 정보 그런 알려줄 의향이 있으니까 기대하셔도 좋아요. 기대해주시고 구독해주시고 그리고 좋아요 눌러주세요.
In 2016. Was it as messy as we thought it would be? Probably was, and I tell you why, because of the fundamental mismatch between, if you like, ration policy in the UK and what was in a sense performative ideology in the UK. And I think that was the problem. We could have had the deal, the so-called Windsor deal, several years ago, but the Johnson government simply did not want a deal on those terms.
But I think for the short to medium term, the next 3 to 5 years, the Brexit will be net negative on the UK economy, no question about it. What happens over the longer term depends on what the British establishment or the future UK governments do. One, I do think ultimately they will finish up in the next 10 15 years, putting some kind of, I call it a trade deal with Europe similar to Norway or Switzerland. I disagree with Declan. I think they will pay into the European budget. I think they will have no choice. It is too big. The fundamental strength of the single market is something that is too attractive for the UK economy to be excluded from.
Maybe the messier part is yet to come.
지금 차트 보니까 들어가도 별 소용이 없을 것 같고 들어가도 계속 뭐 왔다 갔다 할 텐데 아마 결과적으로 그냥 뭐 영원? 빵원? 빵원 볼 수밖에 없어요.
You need to focus on sustainability to recruit more and more that younger
들어가면 좀 좋은 결과를 얻고 싶은 마음이 있는데
You need sustainability to attract consumers. More and more when they're younger consumers, they care deeply about
들어가기엔 좀 선이 애매해요. 그쵸?
Investors, particularly in Europe, more and more place value in what you're doing with sustainability. Many of our partners have expectations on sustainability.
짱. 먹방 타임 끝났어.
From New York City, for our viewers worldwide, I'm Manus Crane in for Jonathan Farrow. Tech, the ego has taken a bruising. The field of dreams has just been punctured. Tech is bruised. Countdown to the open begins right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Coming up, big tech delivers a big letdown, pulling futures lower for a second day. This as investors turn their attention to the Fed. We begin with the big issue. Big tech, big miss.
혹시 찬스인가요?
Numbers, but the expectations were huge, and there's a real issue of travelling and arrival. Markets have been rallying strongly, not just in mega cap tech, but broadly speaking, these are not bad numbers. These companies
아니면
are
조금 더
generating
떨어지면 또 갑자기 더 올라가고 계속 이렇게 이어질지 아닌가 싶어요.
Was likely to be limited given the expectations that have been priced in.
이럴 거면 재미없잖아요.
Roundtable, it is BlackRock's Kate Moore and Jim Bianco of Bianco Research. So, as Peter just said, as travel and arrived, the expectations were so high. When you look at this mini drawdown case, it's almost sort of like, I think it's sort of quite a relief, really, to see a little bit of the air come out of the tires.
Yeah, I have to say, it is a healthy bit of a drawdown. You know, there was a lot of angst in the last couple of weeks about how strong the performance of tech had been year to date. We know it's the best performing sector, up over 6%, and taking a little bit of air out makes sense. But let's be very clear, the earnings that came out last night were excellent earnings by any measure. They just maybe didn't meet the loftiest of lofty expectations. And we have a lot more tech earnings to get through this week. I think we're going to find that the sector is an extremely strong health and that there's a lot of opportunity to stay invested in tech throughout the course of 2024.
So, Jim, good morning. Good to see you. For you, these record highs in equity markets that we've seen cascade in pretty much every day last week, it's had a slightly different ramification for you on the corporate bond issuance. That's at record highs. What are the ramifications of high equity markets for you in the credit space?
Well, I think that it is a loosening of financial conditions and the ability for companies to want to not only issue, but have it issued. And we've seen that with record corporate bonds. And I think it filters through to the economy as well. And
지금
really makes the case
11시인데
that the Fed shouldn't be in any hurry to cut rates. I know they like to talk about being restrictive, but with record bond issuance with an all-time high in the stock
설마
market,
오늘은
with economic data
저수로 가야
being
되나?
left and right,
전체적으로 봤을 때 좀 떨어지지 않을까 싶습니다. 여러분 생각이
When you
어떠세요?
look at what's happening with equities and with corporate bonds, you have to kind of turn around and conclude that the economy's okay and there shouldn't be any hurry for them to cut rates.
Well, you bang on the money. It's not restricting anything because we have COVID hangover. We've got a structurally different work week. We've got a fundamentally different economy. Let's dig a little bit deeper into these tech earnings because they have skewed the risk this morning. We're off to a shaky start. Alphabet, Microsoft, AMD, all dropping short of the lofty expectations. Mandeep Singh is Bloomberg Intelligence. He joins me now. The nuance you say is to understand perhaps the difference between Microsoft and Google in terms of AI. Just differentiate for me.
Yeah, I mean, look, in the case of Microsoft, we know AI contributed about $4 billion in revenue, and it was 6% of their Azure growth. So clearly, and it doubled from last quarter. So a lot of momentum for Microsoft, and not to, just with large language models or copilots, it's the entire stack. In fact, they gave a metric, the number of enterprise customers for GenAI were around 51,000, and 1/3 were new customers. That tells you something. If Microsoft is signing up new customers, I mean, given their enterprise footprint, the GenAI thing is real and it's helping them expand their customer base. So Microsoft is becoming the most sticky product when you think about it from an enterprise perspective, both on the application side and the infrastructure side. In the case of Alphabet, I think the search is the real concern, how much it could get disrupted, but the cloud revenue did go up, and that's what Street wanted to see.
Do you think the advertising was that disappointing? I mean, on paper, it doesn't look huge, but we've written a monstrous amount about the disappointment there.
Yeah, look, they have the 90% plus share, and they keep growing, in double digits. The concern is, can they sustain that double-digit growth, or it's going to taper off to high single digit? And I think based on the commentary yesterday from management, it sounded like they said the base is too high, and search may not be growing double digits in the next 2-3 quarters, which is why I think you saw this kind of reaction.
Okay, it could be a long variable lag in the advertising and on the search side. Mandeep, thank you very much. Mandeep Singh on the tech reporting. Let's take it back to BlackRock's Kate Moore. Kate, this is what you write. We entered 2024 with a pro-risk portfolio on the back of a resilient U.S. economy, supportive disinflation plans and trends, and a core belief that peak rates are behind us. As such, we've been tactically adding to our portfolio risk, capitalizing on cheap vol and using derivatives. I mean, this must be one of the days that you relish. A little bit of a spike in vol, but things cheapen up. So where do you deploy to broaden your reach on days like this?
Yeah, so I would say there hasn't been a lot of trading in the last 2 days as everyone's been waiting for the FOMC decision and, of course, the 40% of S&P 500 earnings that are getting released this week. So there is so much to digest, and positioning super aggressively ahead of that doesn't always make a lot of sense. That said, we have been, to my note, pro-risk and have had higher beta than normal because we've seen great opportunities across the equity market. I want to go back to a point that Jim made earlier, which is that higher real rates have not really been cramping the economy. And we've seen this across a wide variety of sectors. Company management teams have been telling us activity looks good, our prospects look strong, and even with these higher rates, we still see a prospect for significant earnings growth in 2024 after earnings contraction in 2023. So it's kind of hard to step away from the market. That said, we have been using derivatives very aggressively. We see volatility in certain areas as being priced very low, and it's been a great opportunity for us to buy vol at those levels.
I'm curious, Jim, for you, when you see a lot of people come on one after the other talking about low vol, low MOV, low VIX, a prime opportunity to pick up protection. In that lowish volatility regime, how does that manifest itself for you?
Well, it does because of the stock market going up. There is an investor skew involved and it goes down. But I've always contrasted it with what you see in the bond market. And in the bond market, the volatility numbers are above average. And in the last month or so, they've been way above average. And you've seen a lot of volatility there and in the commodity markets, too. I mean, we've almost grown accustomed to, take one example, crude oil moving 2 or 3% a day. That, I'm old enough to remember when that was a big deal. Now that's Thursday or that's Wednesday in the crude oil market. So yes, the vol numbers are very low in equities, but when you start drifting away from them and you start looking at fixed and you start looking at commodities, those vol numbers are much, much higher. And I think that represents an uncertainty about Fed policy, about global monetary policy, about the state of inflation. The stock market has decided that it's gone. Inflation is gone. The Fed needs to cut rates. Everything's okay. But I think when you look at commodities and fixed income, they're not so sure.
Jim, don't worry, you're not the only one that can remember moves in crude oil. In 1991, I think I got my first Bloomberg, and I understand what the crack spread was. Traded it very badly. And the Band-Aid's about to come off in the Bank of Japan. What's that going to do to dislocate flows around the world in the bond market? Jim, briefly.
I think that it may be a big dislocation because the Bank of Japan or the Japanese are the largest treasury buyers in the world, even larger than China. If they allow their rates to go up and compete with the U.S., you're going to see money being diverted back to Japan.
Kate, you're a buyer of Japan in what kind of scale? I've had various people that talk about it since I came to live here, but it's not a big theme. You are behind Japan in the medium term?
Yeah, look, and we've had a modest overweight to Japan, and a modest overweight that we're looking to add to, and particularly to domestic-oriented stories. We're seeing, greater momentum in the Japanese equity market and in Japanese consumption, and we think it makes a good relative bet and a balance to what is also our highest conviction country weight, which is the U.S. The one thing I will kind of note here is that a lot is going to depend on the inflation trajectory. We have great hopes for a little bit of inflation in Japan and this rotation in terms of BOJ policy. But at the very heart of it, we see strong fundamentals for Japanese companies. And I think earnings, whether that's in Japan, in the US, or in pockets of Europe, are going to be what leads the equity market higher this year.
Okay, hold those thoughts. Kate Moore and Jim Bianco, my guests this morning on the panel. Let's stick with stocks. Guess what? Ahead of the opening bell, bit of a thought. Could be tech, Abigail Doolittle.
It could be tech, and it is tech, Manus. Let's start off with some of those shares that are really falling and pressuring some of the major indexes, starting off with the shares of Alphabet down more than 5%. This, of course, after the Google ad revenue missed on tepid search growth. Investors not liking that, down 5.6%, given the fact also that the stock had been up more than 8% year-to-date alone. Just not good enough. AMD down 4.1%. Their fourth quarter was lackluster.
여러분,
revenue forecast disappointed. Microsoft kind of flipping between gains and losses.
와, 마이크로소프트 진짜 계속 계속 떨어지고 있구나.
It seems investors maybe want a little bit more. Some analysts are saying that the cloud disappointed, and others are saying that it was just a little lackluster overall. Paramount Global, on the other hand, looked at that stock
계속 올라가고 있고.
15%. This is media mogul Byron Allen has made another bid for
다른
Paramount,
주식도 계속
$14.3 billion this time.
떨어지고
That equates
있는데
to $28.58 per share, as you know,
전
Manus.
이거
The stock
궁금하지
not even
않은데 전
40 to 45% of the way there.
보고 싶은데 네, 지금 계속 뭐 그냥 뭐 들어가고 싶어도 타임이 없어. 애매해요. 아 참.
Looking ahead to Chair Powell and the Fed. That conversation we're counting down on Bloomberg.
그냥 뭐 물론 오늘 뭐 16만 원 벌었기 때문에 좀 괜찮긴 하는데 욕심 안 부려도 괜찮은데
with financing from Capitals.
잠시만요. 한슨 다 들어주고 있고 나스닥 같은 경우는 어디요? 오케이, 나스닥 들어주고 있어. 0.76%. 근데 어쩌라고 씨. 어떻게 해야 돼?
Would you say race relations in the United States are much better than when you were growing up in Mississippi, or do you think we've made less progress than you think we should have made?
Both. I think much better than when I was growing up. There's so many people who occupy areas I never thought I was even in. But I would have hoped it would be better. It's been a lot of progress, and somehow we're in an era now where, in spite of the progress, race relations in certain areas has become very scary. Some of the things that one reads about now remind me of growing up in Mississippi.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg.
Watching the Fed, of course, we know that the Fed isn't going to do anything. It's probably going to remain on a pause, on hold a little bit longer here.
The Fed's in a really tricky spot.
It's a very, very tight rope.
Officials will more clearly outline how they're thinking about rate cuts over the next year.
They'll move to a more kind of balanced language.
We're going to hear Powell more in this careful camp.
It's, in Powell's best interest to be neutral here.
They may send a signal to help people begin to ground their expectations.
Probably going to maybe pull back a little bit in terms of the expectations that is already in the market about March.
The Fed's just going to be essentially validating at least some of what markets are pricing in.
They'll keep the door open.
I think he's going to say that there's been progress.
If you look at the amount of progress you've had on inflation, it's been really substantial.
The Fed can take some credit for that and some comfort in that.
Things are moving in the right direction.
The Fed has been reluctant to wave the victory flag, but maybe they'll start to raise it
그러니까 계속 기다리고 있었는데
the tailwinds of the economy.
Nobody's taking a victory lap yet, certainly not at the Fed.
들어가고
Investors are looking ahead
싶어도 들어갈
to the discussion
타이밍이
today. The
없음.
latest rate decision will come at 2 p.m. Eastern, followed by the chair.
아우 좀 롤러코스터 좀 따봅시다.
30 minutes.
여러분.
Bloomberg's Mike McKee joins us from Washington D.C. with a preview. So Mike,
어디
what will the
디즈니랜드
shift
가서
in the nuance be?
아주
Perhaps in
큰
the FOMC statement?
위험한
Let's start
롤러코스터
there. What
따봅시다.
as the shift first of all?
Yeah, Menace,
봐요.
that's a good way
계속
to look at it because it's been since
왔다 갔다
July
하는데
and we've been talking about it's more important what the
흥미가
Fed
없어요.
says than what they do.
흥미.
Since they haven't raised rates since it was warm in the summertime. No rate move again expected today, but it is a question about what they say in the statement. They've been talking about additional firming for all of those months. Now that part of the statement is likely to go away, and the Fed will find some way to massage it to suggest they have hit the peak. There are no new economic forecasts and no dot plot this time.
예측할 수
So
없어요.
we probably aren't going to have anything to chew
진짜.
over about what the Fed thinks is going to
오늘은
happen. And so we probably won't get any guidance
감이 안
on rate cut timing,
오네요.
possibly some talk about the balance sheet. Jim Bianco was talking a little earlier about what is the Fed restraining? Well, maybe job growth. ADP comes in low, 107 this past month. That is well below what was anticipated. And if that's the case, then we could see the market be wrong about what it thinks is going to happen on Friday with a forecast for 185,000 jobs and a jump in the unemployment rate. Also, no real change in the year-over-year average hourly earnings. But there was good news from the ECI today, the Employment Cost Index. It went down, not down, but it grew at a slower pace, 0.9%. That is still ahead of inflation, so you're still getting a benefit there, but it on a year-over-year basis is annualized to about 3.5%, which is what the Fed has been looking for in employment compensation. So there is a slowing economy, and we'll see on Friday if we have a slowing labor market. The Fed at this point can stand pat and probably not say as much as people would like them to, Dennis.
Probably, Mike. They'll be pushing them on timing and on QT. Mike, thank you very much. A very clean run through on the data. My guests this morning are Jim Bianco and Kate Moore. Jim, I want to take it to you first of all. I mean, there's a fine line. There's a wonderful phrase the Brits use, which is, loose lips sinks ships. How does he thread the needle today to deliver neutrality and, I presume, optionality for March? Should March still be live at the end of this press conference tonight, Jim?
Well, March is live now. If you look at the latest probabilities from the market, it's essentially 50-50, and what he says will have a long way as to which way it goes. I think he preserves his optionality by stressing, the old saw that the Fed likes in data dependence. If the data continues to warrant the idea that inflation is moderating and the economy can see some kind of room for them to lower rates, they will. I might add, 2 weeks ago, the probability that they were going to cut rates in March was 85%. And now we're down to 50-50, and I think that represents that the data has been a little bit stronger than the Fed needs. So if that continues with that stronger data, then all of a sudden March might be pushed into May.
Kate, I asked this to many equity investors. The velocity of the equity rally, the ramp in the NASDAQ, the ramp in the technology side relative to value has to a certain extent been predicated on rate cuts. How much will it interfere with your overall thesis if it's 3, 5, or 6 rate cuts? I know there is a differential between 150 basis points and 75 basis points, but materially from an equity investment point of view, how much difference will that make?
Yeah, it will make very little material difference, in my view, to the equity market direction over the course of the year. I mean, we're at a point where we're talking about when, not if, the Fed adjusts policy rates over the course of 2024. And most importantly, the leaders across technology and across these other sectors are not dependent on lower rates for performance. What we want to see is kind of a glide path of the economy where we have growth, but perhaps a modest deceleration. The consumer looks good. Demand for things like AI, software, and tools continues to stay robust. I mean, that's the best story for their earnings in the S&P 500. What I will say is, this is a very different market from balance sheet, from leverage, from dependence on debt than it had been in previous rate hiking and rate cutting cycles. So we need to acknowledge that there is not an easy comparison and acknowledge that the health of these companies, particularly in the tech sector, the return on invested capital, the free cash generation, are at levels they've never been before. So I don't want to sound like a wild bull here, but I think we need to be constructive. There is a fundamental reason, not just a rate cut reason, why these equities are outperforming. I think we're going to get fits and starts, periods of trading consolidation, and perhaps we're entering one of those right now. But we'll continue to make new highs throughout this year, and it pays to be risk on.
Yeah, I think for most of us, it's probably just that hesitancy and a sharp intake of breath at the speed with which we got here. We got to the end of 2024 targets for a lot of houses almost done and dusted with very little breath left on the upside. Jim, can I take it back to you? One of the best lines I've heard, and I've heard many, is from Claudia Song.
그러니까요. 그 전시장 10분 전인데 그때 좀 롤러코스터 딸 수 있을려나 모르겠다 진짜.
Get out of the way, Fed. But can you be that bullish, and therefore what does that mean for loading up on this mini handbrake turn in yields?
Yeah, I think that the risk of that idea that the Fed needs to get out of the way is the presumption that we've got inflation linked. I know that everybody says we've got inflation linked. They also said it last year. They said it 2 years ago within transitory. And it just continues to be the story that there isn't an inflation problem. Count me in the camp that thinks that there still is. Yes, we had transitory inflation that got us to 9%. But once that smoke dissipated, I still think we're in a 3 to 4% inflation world. I think the last mile has already been run, to use that metaphor, and that we're probably near the lows of inflation, and that's going to be a problem for the Fed. Now, if that is, then this presumption, get out of the way, let's just cut rates, let's just declare victory, could look a lot like what we saw in the mid-70s when the Fed did the same thing, and then you fostered a resurgence of inflation. So let's be sure that inflation is done and behind us. And I think that we're in a post-pandemic world and that the economy's changed enough that people are more in a spending mood, that if you give them more stimulus, you're going to see more inflation. And that's what my concern is.
By the way, I want to remind you, the world didn't stop at 5% rates in the 90s or 6%. The world did continue to run. And we bought houses and we did different things. So, Kate, let me bring it back to you. I want you to live in a world of where the last mile is tough and there's a stickiness at 3%. It's not that much of a challenge for you in 30 seconds.
Yeah, I don't think it's much of a challenge at all. And as I mentioned, companies have made significant changes to the way they approach debt, termed out their debt and locked in very low rates. We know that for the S&P 500, the average effective debt rate is around 3.4%. So I think we're in good shape. A 3% environment where we have moderate growth and consumer stays high and we have lots of reasons to be optimistic is a great environment. I'd rather be there than a 0% where we're concerned about recession.
Shape up and look large. Case and Jim Bianco, my guest this morning. No fear in either of you. Coming up on the show, your morning calls with JP Morgan's Bob Michael on why he sees a soft landing in the US economy. That conversation next.
Transfer a self-directed individual brokerage account over to Robinhood and receive a one-time match bonus of 1%. The larger the transfer, the larger the match. You transfer, we match. Offer ends January 31st.
London will stay a financial center. It will stay our EMEA hub. We'll just have a rebalancing onto the continent. And actually, the numbers of who has moved across aren't that big. So it's sort of in the 200 level. And if you think about 15,000 people, that's sort of not that material.
여러분, 시작
and so I do think
5분
both
전.
will basically continue to grow and continue to be very relevant. What will change, though, and the big thing that's changing is
일단은 제
actually the
계획은
risk-taking is what's going to
시작하고 나서 조금 기다리다가 주스를 보고 그때 들어가는 걸로. 게다가 11시 45분에 중요한 발표가 있으니까 그때까지 잘 버티고 그리고 다가 어쩔지 모르겠지만 잘 버티면서 롤러코스터 좀 타다가 이렇게 하면 좀 괜찮으려나 모르겠네. 뭐 재밌게 좀 해보자.
Stock set for a lower opening. It's like a field of dreams where tech came to be pricked this morning. You've got Tesla under pressure on a pay deal. You've got AMD down on the guidance. But let me get you up to speed with your morning calls. Here's a look at what some of the analysts are scribing from the street. First up, Morgan Stanley downgrades Sophie Technology to underweight, seeing headwinds in the near term to revenue growth. Next up, Barclays downgrades Verizon to equal weight, expecting limited upside given the stock's rich valuation. And finally, Argos downgrades UPS to a hold, highlighting the company's disappointing results, the tepid outlook despite the job cuts that we saw yesterday. Coming up with me, it is JP Morgan's Bob Michael, setting the stage for the Fed. Are you nervous?
삼 분 전 여러분. 기본전.
Regional sports networks. There's a lot of, it's a business that seems to be collapsing. Leagues have sort of toyed around with, should we do something ourselves? Some teams are doing like local TV and streaming. How do you see that shaking out?
So, I don't think I'm right on this, but my instincts keep telling me this is what's going to happen. Because if you remember the WWE, they launched their own network that had their own content, had their own pay-per-views. And it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time, and they sold their content to, what was it, Peacock. Yeah. And that was really smart too, because they were able to leverage that number as high as possible. So they always zagged where the money was when the opportunity was. I think the opportunity.
여러분 지금이야.
The NBA with the local
지금 시장 열기 전에 일본전인데 지금 좀 느낌이 왔어. 일단 매수로 들어갔는데 잘 올라갔으면 좋겠어요.
Compare financials. Find people. Analyze markets. You can enter phrases or ask questions.
뭘 붙잡고 큰 그림을 보는 거예요, 그냥.
Visit Search Go to find answers now.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Why do the biggest names in business choose Bloomberg?
That is a great question.
Great question.
가봅시다. 하하, 이게 무슨 상황일까, 여러분?
Technology market has had a puncturing of optimism this morning. The Nasdaq set to open down by 1%. S&P 500 also
물론
low.
아직
Do you see this as
판단하기
an
좀
opportunity to step in? If you get a drawdown on Microsoft, on Alphabet, on the likes of Tesla, on different stories, is this your opportunity to step in and buy the proverbial dip? Camera's out, the bell is ringing, the moment is live. We're live for equities. It's a lower opening. And in terms of one stock to watch at the open, I mentioned it is Alphabet, the search engine revenue.
시장이 열었는데 첫 번째 대비 좀 별로 안 좋은데 아니다 괜찮다고 봐. 오늘은 성공적인 날이에요. 이틀 동안 진짜 완전 개망했기 때문에 오늘은 좀 결과가 괜찮을 것 같아요. 괜찮을 수도 아마 제발.
Does suggest that the search demand on Google, because it was the Google ad revenue, that it's waning, it's not quite as strong. And one analyst is describing this from the standpoint that that is the cash cow as they try to move more into AI. A lot of analysts think that they're behind on AI.
옷을
Their
갈아입어야
Gemini
되나?
product, of course, launched recently. That it's just not great to have these kinds of ripples with their cash cow stream of business, that revenue line, that ad revenue from Google. As for the stock, 9% up into the year, into today, up more than 50% over the last year into today. Price perfection, they didn't get it. But there was that big bright spot that I think you were alluding to, Manis, and that, of course, was the cloud. Revenues there more than doubled, but against the backdrop of that disappointing search and ad revenue outcome, investors just don't care. The stock down 5.4%.
괜찮아요. 아직은 너무 왔다 갔다 하고 있기 때문에 아직은 판단하기가 어렵고 그냥 지켜보는 걸로 계속 봐야겠다.
Cloud growth that disappointed some investors. Ed Ludlow is with me. Ed, I mean, if you look at the AI component here, it is boosted sales by 6%. But there seems to be a disappointment, not so much with that number, but with the lack of huge forward guidance on AI.
Yeah, high bar quarter, elevated expectations. Dan Ives at Wedbush has this note that Satya Nadella delivered a masterpiece that should be in the Louvre. The market doesn't agree. We're basically flat on the stock. But you are right. What they needed to do was demonstrate how all the hype around AI and the investments they've made in AI translate to both the software that they sell to customer and enterprise and on the cloud side. And so a top and bottom line beat. Azure, the cloud unit growth was 30% in the quarter, up 1 percentage point sequentially from the prior quarter and ahead of estimates. And you're absolutely right that Amy Hood, the CFO, told us in an interview, in terms of size and scope, that AI had around a 6 percentage point benefit to that growth rate on Azure, but very elevated expectations. And I guess one looks at the run-up in the stock toward the end of 2023 and the beginning of this year, taking Microsoft to that $3 trillion market cap and above Apple as the world's most valuable company, and then compare and contrast with Alphabet, for example. You know, when I interviewed Ruth Porat, the president and CFO of Google or Alphabet, they had similar growth in cloud and gave some evidence that AI was a contributing factor there, just not as much evidence as Microsoft gave. The muted reaction is we're up 0.3%, but I think Microsoft this morning probably still the winner of the 3 AI names that reported last night.
Listen, I think it's very much about front-running the scale of delivery of AI, and that's going to be at a different pace in different companies. This is not an NVIDIA story inside Microsoft. This is an AI adoption story. Let's talk more about the chip story. AMD giving a weak forecast, disappointing investors despite a new prospect.
아직까지는 축하인데 10분 있다가 어떻게 해야 될지는 모르겠고.
chip, and as you're seeing in the shares this morning, that alone wasn't enough to offset the weak guidance that we got from the company. Specifically here, the chip maker said that first quarter revenue will be about $5.4 billion. That is well short of the $5.77 billion that analysts had been looking for. And really, this report echoes concerns from what we heard from Intel last week, that you take a look at customers and they're holding off on buying PCs, servers, and game consoles, and those are AMD's core markets. So that's weighing on the stock this morning, even though you did have analysts cheered about its push into AI accelerators, like you mentioned. Specifically, we're talking about that MI300 chip. That's designed to help companies develop their AI models, and it's supposed to help AMD compete against industry leader NVIDIA. And it does see sales of more than $3.5 billion for this chip this year. That is up from an earlier forecast of $2 billion, but it's still below the most bullish fantasies for what sales were going to be. And of course, AMD is still early in this expansion. You add it all together, shares off by about 4% right now.
Okay, Katie, thank you very much. It is all about the forward guidance. Let's stay with the earnings. Starbucks lowering the full-year sales outlook while maintaining confidence in its profit goals. Simone Foxman has the details. Simone, what have we got?
Yeah, Manus, we're seeing shares rally in early trading despite the fact that there was not much good news in this report. The company missing estimates for its latest quarter and lowering its
저 지금 짧게 가고 있어요. 아직은 계속 올라가고 있기 때문에 아직은 좀 많이 뽑을 수 있을 것 같고 뭐 물론 지금 좀 불안하게 떨어지는 것 같은데
comp sales expected to rise by 5%. The expectation had been that they would rise to 6.4%. That is the most recent past quarter. Underperformance in every geographical sector, but especially China and international. This is the slowest growth in a year. Earnings per share narrowly missing ticket size, also rising less than anticipated. And for the full year, Starbucks saying it's going to see just 4 to 6% comparable sales growth, down from as much as projections of 7%.
더 올라갈 것 같아.
That is one of the bright spots. Maintain its EPS growth guidance of 15 to 20%.
아니야. 올라갈 거예요.
In part because of the maintenance of that guidance. Wells Fargo also saying that full year 2024 targets are more achievable now that it's set that lower expectations. But maybe what we're seeing in the stock is simply a reaction to the fact that shares are down 13.8% this past year. So maybe seeing some room for profitability ahead, Manus.
Okay, Simone, thank you very much. On Starbucks, one breaking news headline, one stock which is in focus. I just want to bring it to your attention. It's a New York Community Bank Corp. Stock down 41%. This is one of the regional lenders. It bought deposits. Take your mind back. It bought deposits from Signature Bank. $38 billion of assets from Signature. 25 bucks of cash. 13 billion of loans. A surprise loss for the fourth quarter. Cutting the dividend. It's talking about loan loss provisions soaring.
너무 많이 떨어지네.
Credit quality. Lowering the quarterly payout to shareholders. Canaries, coal mines. Make of it what you will.
아이고야, 안 볼래.
Of New York Community Bank Corp. Join me now. It's JP Morgan's Bob Michael, looking ahead at today's Fed's decision, and this is what he's got to say. The Fed has done a very good job of getting us to a soft landing. The moderation in inflation has given them reason to guide the market to rate cuts in the first half of 2024. That's not just the FOMC decision. We've had the Treasury refunding size, boosting the size of its quarterly issuance on longer-term debt for the third straight time. Bob joins me now. Bob, good to see you. What is today's objective for Powell with this market? You're talking about front-loading rate cuts. Everybody else has come through here has said to me back half of the year. Why are you locking for the front half? Good morning.
아이고야, 어디까지
Good
떨어져?
morning, Manus. Manus, I'm going to tell you today is the best day ever for the Fed and Jay Powell to walk in and give a 30-second press conference. He should walk in, survey the room, and say 6-month annualized rate of core personal consumption expenditures, 1.9%, 2% inflation target. Look at unemployment. On Friday, we're going to have the 26 consecutive months of 4% or lower unemployment. Full employment, box check. And today, we got the employment cost index. It was up 0.9% on an annualized basis. That's 3.5%. That's the 2% inflation, 1.5% productivity gain. Box tick there. Told you so. Take the mic, drop it, and walk off the floor. We're in a soft landing. They've done a brilliant job.
It's like you two playing in Las Vegas, isn't it? Drop the mic and walk off. Treasury yields dropped. A very short end of the curve, Bob. Look at this. 421. We are down 10 basis points. Now, part of this is to do with the quarterly refunding. Part of it is to do with the data. When you look at the quarterly refunding, what did you make of that?
제발 올라가자.
I think it was pretty straightforward. I think the market is looking at the totality of everything and saying if we're in a soft landing already and you still have rates at 5.25%, 5.5% and full balance sheet runoff, then the risk is to the downside again. So the Fed can start cutting rates sooner than the market is anticipating. And then the Treasury didn't surprise with an enormous amount of quarterly refunding. It came in a little bit lighter. We were told that a couple days ago, and they came in true to form. The market's ready to absorb.
Bob, if you're ready to have Powell drop the mic and have his Stardust moment, do you think they would cut by 25 basis points in March?
I don't think so, only because 2021, I think, is still very present to them, and they were a little bit slow to hike. They can't take the task on being wrong on inflation again. So I think all things being equal, June still looks like the right date for them to have those discussions about cutting rates. But I think they have to start. They have to start telegraphing to the market that they're ready to cut rates. Because when you look back at 1995, which is the one soft landing everyone talks about,
저도 하고 싶었어요. 근데 타이밍을 놓쳤어요.
1995. So they started to take pressure off the system. They can't leave rates where they are. They can't keep running down the balance sheet at the current pace. They need to start dialing those back. I don't know if it's May or June, but somewhere in there strikes me as the right time.
I'd come back to the QT in just a second. I'm looking at a slightly longer chart of bonds. 417 was the mini recent peak that we have. We're down at 395. So is that back up? I call it a mini U-turn in yields rather than a backup in yields since we last spoke. So we've given some of that back. Is this the beginning of the next significant bull run in preparedness for what you've just laid out in front of you?
Manus, I have conversations every day with clients on when do I get into the bond market, where do I get into the bond market, how do I get into the bond market. And everyone wants to get in back where rates were in October or November, and they're a little bit frozen here. The one interesting bit of data is to look at the aggregate bond index. Today, it yields 4.7%. December 31, 2022, so 13 months ago, it yielded 4.7%. And at the end of 2022, we were looking into 2023, the Fed hiked rates 4 more times. As we look through 2024, we should see at least 4 rate cuts. You get a total do-over. you should be getting into the market at these levels because once the Fed starts bringing down rates are going to fall a long way from here.
And a lot of that, Bob, is of course fear, frozen, looking at it going, you know, I want to time it, I want to be perfect. But nobody ever gets the timing of this thing perfect. And if you're swinging around, if you're in or out late for 50 basis points, it's not the end of the world. Tell me this now. US corporate bond sales, $188 billion in January. The spreads are tighter than a proverbial. Were you more of a buyer? I'm interested. Are you more of a buyer of credit relative to treasuries in this January? I mean, it was like the January sales, like Christmas ran on forever, wasn't it?
So we are, but let me go back to your comment that people are a bit frozen and want to buy backup. They're also incredibly comfortable in money market funds and collecting 5.5%. And it's hard to shake them out of there. So once they see the Fed beginning to bring money market rates down and cutting interest rates, that's going to have them piling into the bond market. And that's what worries me about where yields are. And I know everyone's worried about the amount of Treasury supply and corporate supply. Simply the fact that Treasury yields are completely below the Fed funds rate and corporate bond spreads are where they are tells you that supply is not an issue for the market. It's completely absorbed it. If anything, we could use a little bit more because we've got $6 trillion in money market funds, and a fair percentage of that is looking to come into the bond market.
Bob, make sure the JP Morgan Asset Management truck is at the front there to load up with those treasuries when they come. Good to see you setting the stage for the Fed's decision this evening. Coming up later is the morning consult poll. What does it reveal?
오늘은 매도였구나.
There still is time for the public to feel the economy is getting better. There's still an outside shot for an immigration deal, but there's a lot of potholes.
The latest developments out of Washington, D.C. and what it all means for markets.
Transfer a self-directed individual brokerage account over to Robinhood and receive a one-time match bonus of 1%. The larger the transfer, the larger the match. You transfer, we match. Offer ends January 31st.
진짜 할 말이 없네. 저 오늘 이번 주 아예 완전 나가리. 돈이 제 온 어디 갔을까?
Names in climate finance are on Bloomberg.
I can't tell whether you're optimistic or pessimistic about climate finance.
A lot of great stuff is happening.
미쳐버리겠네 진짜.
No, it's not enough.
I'm biased. I'm a huge investor in both fission and fusion and hoping that it comes in time. Transition is not going to be an event. It's a process.
But at the end of the day, it's the right thing for the planet, it's the right thing for the industry, and there is business opportunity.
어떡해. 지금 그냥 매도로 깔았다 볼까? 아니다. 지금 그거요. 올라가고 있는데 근데 제가 깔았다는 순간에 또 쉽게 올라갈 수 있으니까 진짜 쉽게 못할 거고.
Women who are making most of the purchasing
조은 씨
decisions in
어떡해요?
households, whether that's cars or that is home or financial services, and who are going to drive the wealth of the future? It's women.
Obviously, we have our car business and we need to have games here and all that sort of thing. But what else can we do? How do we grow the platform? The whole ticket pricing process. It used to be very yellow sheet of paper with some numbers around it. It was not a lot of science behind it. We're now in the world that have been for many years, as most other similar businesses are, in dynamic pricing. So our pricing per seat may change hourly if we see demand for that, all driven to maximize revenue.
The balance sheet is so important to the success of the team. And a big part of my role is to make sure that the balance sheet stays strong and that we are prudent stewards of capital. So there are things that we can do that are irrespective of winning or losing. Take a look at the first budget that comes from one of the teams and ask questions about, do you really need to spend that much? Are you really shooting high enough when it comes to partnership revenue?
Matthew and Keely Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything.
Get you a fresh piece of economic data. It's crossing the Bloomberg terminal. Mike McKee is with me. What have we got from Shai?
A little bit of a sour bit of data. The Chicago MNI Purchasing Managers Index falls to 46 from a revised 47.2. It was thought to rise, so this is a disappointment in that sense. It follows the Empire Index from New York and the Philadelphia Fed's Index in going down significantly. So we'll see tomorrow when we get the Purchasing Managers version of that, the national number. ISM manufacturing expected to fall just a little bit, but maybe manufacturing is in more trouble than we know, Manis.
Okay, Mike, again, another piece of the jigsaw, perhaps about the economy, the real economy, from Mike McKee in Washington. So from the economy to the Hill. A Bloomberg News Morning Consult poll reveals this. President Biden trails Donald Trump across 7 critical swing states, but more than half the voters wouldn't support the GOP frontrunner if he was convicted of a crime. Amory Hordan is with me side by side. So, Amory, the top takeaway here is obviously Biden is trailing Trump, but there's a real risk for Trump in this analysis, isn't there?
Yeah, there's vulnerability for Trump, and that comes down to the indictments against him. And you have more than half of the swing state voters saying that they are not going to vote for him if he was convicted guilty. But let's look at some of the issues that the current president is facing when you look into this poll. He's trailing Trump in these key critical
역시 45분에 발표가 있었는데 발표 결과가 좀 괜찮았을지
the economy still continues to be a chief concern. We are seeing more respondents in this latest iteration of this poll that say immigration is becoming top line for them, and that's one of the key issues. So you see the margin now starting to close a little bit between the economy and immigration.
오늘도 아닌 것 같아요.
65 and older, they care about its
운빨이 다 떨어졌나 보다.
So people might start feeling a little bit better about the economy, but they're worried about the border. And why this is so important is because right now, Manis, in Congress, they are discussing a potential border deal. And President Donald Trump has told Republican colleagues of his in Congress, these lawmakers do not accept a deal unless it's perfect. And obviously, it's not going to be perfect for the Republicans because they're dealing with a democratically controlled Senate and a Democratic president.
So, I mean, the issue is this. Immigration has gone right up the agenda. And of course, we did the poll January 16th through 22nd. And this was before the famous words from the president where he says he wants to shut down the border right now. So that's trying to re-grasp the narrative. This tells me that the GOP is winning the news battle relative to the Democrats.
When it comes to immigration,
yes.
When it comes to also crime, when it comes to how Americans feel about who would be better in terms of two wars right now.
So they trust Trump more than that?
In Gaza and Ukraine, they still trust Trump more on some of these critical issues. But also when it comes to winning the hearts and minds of Americans when it comes to immigration.
Yes.
If you also look at some of the data in the media landscape, conservative media talks about immigration a lot more than what you'd see in some of either progressive left or mainstream media. So also that's capturing some of these issues. But it's interesting because immigration is still an issue in places like Wisconsin. That's nowhere near the southern border.
Yeah, but this is almost, I mean, it's a bit of an extrapolation here, but I spent many years stuck in the Brexit mire. This is very reminiscent of the politics of Brexit, which is about putting up borders, closing down immigration, save our jobs, save our nation, America first, Britain first, whatever else. It's a quasi-escalation in a Brexit context.
Well, also what's happening in the southern border right now is it's record numbers of flows of migrants coming in. Some days it's 10,000 or more. So it's become also a huge humanitarian crisis. When you also ask voters about who is to blame for this, that blame falls to President Biden mostly and Democrats in Congress, but also these voters understand there are geopolitical tensions at play here. They talk about famine, corruption in a lot of these countries that they understand why migrants and why people want to flee to the United States.
And again, that plays much more then to the foreign policy of the United States of America if you want to remedy some of the immigration issues. Anne-Marie Jourdain,
Root causes.
Root causes. Up early and staying late.
한
That's what we like to
지켜보시죠.
call Bloomberg politics.
계속.
Let's get a little bit more
아,
sector
오늘
action. Abigail Doolittle
하루 종일 지켜보고만 있어.
is on the desk with me.
Well, Manus, with this 0.6% decline for the S&P 500, not surprisingly, more sectors are down, not by a lot, just by one, but communication services being weighed on by Alphabet, down 3%. We also have tech down more than 1%, being weighed on by AMD and others. Energy down 0.7%. To the upside, we have some of the defensive sectors like healthcare and utilities. So this is really risk-off. Relative to the month of January, though, it's interesting because communication services is the top sector, up nearly 6%. Tech right behind it, up nearly 5% to the downside. Today's top sectors, real estate and utilities.
나아지 때문에 그때 지금 기다려야 되고 친구가 보장 챙겨서 올 때까지 기다려야 되고
AI might generate 10% of all growth to global GDP.
제 인생
that would be
완전
$10 trillion. We think that this will impact
계속
most
기다려야 돼.
companies, and that's a great
오케이,
opportunity
지금
for us as
좀
investors.
나아지는 것 같은데 제발 올라가자. 조금 더 올라가고 빠져나갈 수 있으니까. 그러니까요. 오늘 잘못하면 안 돼요. 아, 돈 벌어야 돼. 이걸로라도 돈을 벌어야 되니까. 아, 잘못하면 안 돼.
You're a famous photographer, you're a conservationist, you're an activist. How would you define yourself?
I think I'm just a human trying to figure out how to be a better steward of our little planet. I am a biochemical engineer by training. I studied marine biology, fisheries, aquaculture. And then I realized that the ocean is very much out of sight.
오케이. 좋았어. 올라가자.
And thank goodness I was good at it.
When did you realize that actually photography was your passion and you could make
제발.
a real difference to our world?
You know, I didn't start out as
신이셔.
a photographer, so it was not until 1990-something, 96,
마이너스에서
when I picked up the
빠져나가고
camera and I became a professional
그리고
photographer.
매수에서
So now-
빠져나가야 돼.
And it's
진짜.
one of those things that it's like learning another language.
아, 운빨이
You
진짜
learn
다
a few
떨어졌나
words and
보다.
you put a few sentences together, and one day
좋아.
you might be able to write poetry.
Your fixed income fix. Watch Bloomberg Real Yield at its new time Friday at 12 p.m. Eastern.
좋아.
Right here on Bloomberg.
올라가자.
Context changes everything.
안 돼.
It's a brutal day for tech, there's no doubt about it, down 1.1%, and Google is taking the heat as the ad spending number is just not on the ticket. Keep an eye on those tech stocks. We're all eyes down today for, of course, the Fed. 2 p.m. Eastern Time, followed by Chair Powell's news conference. Bob Michael, line of the day. Walk in, do it in 30 seconds, and then drop the mic. Qualcomm, those earnings hit the tape after the bell. More on the chips business. Tomorrow we turn our attention to Bailey at the Bank of England, and Amazon, Apple and Meta earnings hit the slate. Finally, Friday, you got it. Jobs report for the USA. That is countdown to the open. This is Bloomberg.
아, 잘못했어 진짜. 아이야, 아프다. 완전 잘못하고 있어 지금. 아, 또 힘이 빠지네.
Would you say race relations in the United States are much better than when you were growing up in Mississippi, or do you think we've made less progress than you think we should have made?
Both. I think that much better than when I was growing up. There's so many people who occupy areas I never thought I would see them in. But I would have hoped it would be better. It's been a lot of progress.
그러니까요. 되게 크게 잘못하고 있어요 지금.
Somehow we're in an era now where in spite of the progress, race relations has become very scary. You know, some of the things that one reads about now remind me of growing up in Mississippi.
아, 알았다고. 아우 얄미워 죽겠어 진짜. 아, 알았다니까.
What happened was you were offered a money-losing women's basketball team, and you said, I want to be in the other sports as well. Is that right?
Well, yeah,
욕심이 아니야. 딸이 놓쳐버렸어. 지금 나가도 마이너스야. 지금 욕심이 아니고 그나마 최소하게 성애를 보지 않게 괜찮은 타이밍을 기다리고 있는 거예요.
Transfer a self-directed individual brokerage account over to Robinhood and receive a one-time match bonus of 1%. The larger the transfer, the larger the match. You transfer, we match. Offer ends January 31st.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. Bloomberg Intelligence. Alex Steele is still on assignment. She is jetting back from Italy, so I hear. Hopefully with the wine I requested. You think, John, she can come back with that wine? Well, I wanted a nice Barolo. Is that too much to ask?
You have to go to Florence for that.
Can't pick it up downstairs. Anyway, we've got Emily Grafeo from Bloomberg News sitting in for Alex Steele. Coming up, we're going to check in with George Ferguson. He's a Bloomberg Intelligence aerospace analyst. Figure out what's going on with Boeing. They just reported some earnings. And then Matt Winkler, the founder of Bloomberg News. He's going to come in. He's got a fascinating opinion piece here on Mr. Elon Musk, Tesla, profit margins. He gets into the numbers there. And then we're going to bring on Herman Chan. He covers regional banks for Bloomberg Intelligence because we got a problem there with the New York Community Bank. And is that an issue for regional banks in general here? So that's all coming up. But first, let's kick it off with a Bloomberg Business Flash, Mr. John Tucker.
All right, let me start off with that because that's an eye popper on the screen. New York Community Bank, 38% lower. Overall, tech-heavy NASDAQ selling off right now. It is down 1.2%. Tech giants, of course, weighing on the stock futures stocks as earnings failed to live up to the high expectations. After their earnings, Google shares down 6%. Microsoft recovering somewhat from the earlier sell-off in the pre-market, now down just to 0.7%. The decline of the NASDAQ might be worse if it weren't for lower Treasury yields. The 2-year was down 6 basis points. Part of the reason for that, Treasury increasing the quarterly debt sale, but suggesting no more boosts are coming. Meantime, as the Fed wraps up the two-day policy meeting today, Julia Coronado at
오케이.
Perspective sees the first
좀
rate
괜찮은 것
cuts
같은데.
in March.
I do expect it to move in March. I don't see there's a reason
어떡해요?
holding them back. We expect as long as the January inflation data don't repeat the surge that we saw last January, if it looks more like the last 6 months, which is very benign, I think that they go ahead in March and get this process started.
And then on the data front this morning, numbers from ADP this morning showing companies adding fewer jobs than forecast at the start of the year, consistent with a gradually cooling labor market. Again, S&P 500, 32 points lower. That's down 0.7%. The Dow is up 5 points. We'll call the Nasdaq 100.
그러니까 지금 너무 유심히 보고 차트를 너무 유심히 보고 있는데 제발 좀 올라가자. 빠져나가고 싶어.
Emily and Paul.
John Tucker, thank you so much. We appreciate
진짜
that.
내가
Emily or fail.
이게 하는 순간에
Sweeney, we're live in a
떨어지는
Bloomberg
거야,
Interactive Brokers
진짜.
Studio, streaming live on that YouTube thing. So head over to youtube.com and search for Radio Emily. Thanks so much for sitting in today. Alex
아,
is
욕심이
still on assignment in the
아니라고. 욕심이 아니라고. 좀 느렸어.
It's Fed, which means Tom Keene.
빠져나 여기 나가고 싶었어. 나가고 싶었는데 아 타이밍을 놓쳐버렸어 진짜. 욕심 아니라고.
Exactly after the surveillance nap. So with all that's coming up for you later today. Right now we're looking at red and green on the screen. As John was saying, the Nasdaq down 1.2%. A couple of the tech stocks underperforming here on the back of some a little bit weaker than expected news. We'll break all that down going forward. Let's check in with Norma Linda. She covers equities for Bloomberg News. She joins us here in our NYC studio. Nora, what are you looking at today?
Let's kick things off with Paramount Global. That is the biggest gainer in the S&P 500 right now. Paul, I know you like this space, but media mogul Byron Allen made yet another multi-billion-dollar takeover offer. This time it's for $14.3 billion. It was a bid to buy all of the outstanding shares of Paramount Global, offered at 28.58 cents each for voting shares of Paramount and $21.53 for non-voting shares. As we know in the past, he's made several bids, some of those ranging from EW Scripps. He wanted to get some of those TV stations. And then separately, he made a $10 billion offer for Walt Disney last year to buy all of its ABC TV networks and a few of its other subsidiaries that it has there. But BI on the intelligence side here at Bloomberg, they said that they're skeptical of a deal happening soon, given Paramount's $15.6 billion in debt.
Yeah, he's certainly a major player in the media space, Byron Allen, but I'm just not sure what capital he has behind him here. I'm not sure what he would bring to the table here. I'm kind of the opinion. I mean, there's certainly the issue here for getting a deal done is that why we might get a deal done is because their control shareholder Sherry Redstone, she signaled that she wants to do a deal. And that's kind of all you need. If she's ready to do a deal, now it's just a matter of the math. Who's got the higher number? Who's got the better capital structure? So I still think private equity is an option here coming in here for these assets. And that's still stocks up nice.
Right. I mean, you mentioned it's pretty unclear as to whether or not where this money will be coming from in the event that he would pay for a takeover. So that's definitely in focus. And there's really many options that people are speculating, but that stock is jumping as much as 15% today nonetheless.
All right, good stuff for them. What else you got?
Looking at the regional bank space, I know we just spoke about this a bit ago, but New York Community Bank shares are plunging as much as 46%. That's the biggest drop that they've had on record, and they're plunging to their lowest level in almost 24 years. This is really interesting, especially with it falling after reporting a surprise loss for the fourth quarter and a cut to its dividend. The bank lowered its quarterly payout to shareholders to 5 cents. Stevens analyst Matt Brees calls this a game-changing miss.
Yeah, I mean, they purchased Signature Bank's deposits. So they actually, requires, I guess, additional capital levels. So this is really a surprise for the marketplace. We're going to speak with Herman Chan, Bloomberg Intelligence, in the 11 o'clock hour, and he's going to break it down for us. But again, this is definitely some of the concerns for these regional bank investors, which is some of these balance sheets at risk here.
Yeah, and the Bloomberg News article that talks about New York Community Bank Corp said that a worsening credit outlook contributed to the unexpected loss. And I feel like for the last few months, everyone's been saying, oh, the credit market looks okay. This is kind of surprising. I'm interested to see.
그만 떨어져 좀.
Yeah, and you wonder how much of this is tied to New York City commercial real estate. So again, we'll be interested to get the reporting on that. We'll talk to Herman Chan on that because again, you just look around, a lot of empty buildings here in Manhattan still.
Right. It feels like these regional banks really can't catch a break, and especially with that tied to the Signature Bank, it's really got investors a little bit in turmoil.
We also had some tech earnings last night. What are you seeing in the marketplace?
Felt like we heard from everyone.
Yes.
But a lot of these tech companies are really working hard to progress in developing AI, and it feels as though it doesn't matter what they do, investors' expectations for the technology industry is just really high, and it seems that it's really hard for some of these companies to meet the expectations. We've got Microsoft and Google, who are obviously two rivals in the software and cloud computing space. They delivered mostly good news in their reports, but it still elicited a bit of skepticism from investors. Microsoft, its revenue increased at the fastest rate since 2022. This is spurred in part by AI products helping to drive adoption of its data center services. We've got the NASDAQ slipping as AMD, Google, and Microsoft are all in focus. AMD shares are down as much as 5.5%, Google down as much as 6.9%, and Microsoft, as though it's paired some of those losses, it's down as much as 0.8%.
All right, Norma Linda, thank you so much. We appreciate that. Norma Linda, she covers the equities for Bloomberg News. We appreciate getting a few minutes of her time here. One of the other earnings news, Emily, was Boeing. They put out some good numbers for the quarter, but they put out guidance. There's a lot of questions as to what the regulators are going to ask them to do about some of their aircraft and some of their delivery capabilities and things like that. Pulling guidance is, to me, a big deal.
Right.
Yet the stock's up 3%.
It seems like it's working for the investors. They say, oh, we're going to pull the guidance, we're going to focus on safety, and that was enough to bring the stock up 3%.
All right, so let's bring in somebody who actually does this stuff for a living. George Ferguson, he's a senior aerospace, defense, and airlines analyst for Bloomberg Intelligence. He's been following Boeing for decades. He knows what he's talking about here. George, first, give us your takeaway from the quarter, and then second, I guess more importantly, is what's behind their decision to pull their guidance, do you think?
Yeah, so thanks for having me on, as usual. So I thought the quarter's numbers looked, pretty much in line with what we expected, maybe a little bit better commercial airplane. Some of the cash flow generation was a little bit better, a lot of it from deposits, that they're getting from airplanes as they move through production. So I wouldn't call that sort of, that's good cash flow, but I wouldn't call it super high quality, right? Like when you're generating a lot of cash from your core operations. Their global services business had some very nice margins, even better than we expected, and that's been a star performer. It's good to see that holding up. But yeah, I think the real story here is about going forward, how they nip these quality problems in the bud. And so I do think that as I think about it more, sort of pulling back guidance, I think that indicates that management is ready to do whatever it takes to get these quality problems in hand. And so, my sense is maybe they think, we may not want to be beholden to an exact number of airplanes in 2024 as we dig through our manufacturing process, through the supply chain processes, and make sure that we're getting a quality airplane out the door every single time. So if pulling guidance is all about that and the efforts around that and what it's going to take, and focusing again on quality over just management metrics, I think that could be a very, very good sign. Again, the management team is crystal focused on this is what we have to do.
How different is that than, oh, sorry, go ahead.
No, go ahead, sorry. No.
Well, I was going to say, how different is that than what the company has already been doing for the last few years? Were they not as focused on quality and safety beforehand? Like, how much of this is a truly a change?
So I think the business has just materially changed. I was at an aerospace defense conference last week, and I didn't go to the conference to tell me this, but I was surprised that it was persistent, and what I heard from people at the conference over and over again is that finding employees and employee turnover is still a problem in this industry. It's still a problem. Now, I think that the higher you up in the tiers, like a Boeing an RTX or a GE. It's easier to retain employees because you provide great benefit packages. Everybody wants to be there, but even they have had a lot of turnover. And so I think pre-pandemic, you could potentially fall back on the thought in the manufacturing process of Boeing that you had very, very seasoned folks on the line that have been well trained, seen years in and years out of the business, and we're always going to get it done right. But I think with the amount of turnover they've had, they really need to go back and rethink, how they supervise the line, how they train the employees, and they have to create more stability by investing in those people. And so I think this business has materially changed since the pandemic. I will also say that Boeing has been sort of pushing this outsourcing of the business. Again, they were doing this pre-pandemic, and this is all about, they want to sort of turn it into the auto industry where you outsource the subcomponents, you bring it together in rent, and you put together an airplane. And that's turned the supply chain into a much bigger, portion of what you're doing. And it's global as well, right? You're making some of these doors in Malaysia. Things are coming from all over the world into Renton to turn into an airplane. And I think that's making it more difficult to keep track of the supply chain and the quality in the supply chain and what folks are doing down at those factories. And so I think it's materially changed, and that's the problem.
So George, and that sounds like a problem to me that was probably decades in the making, i.e., going more to subcontractors and as part of globalization, perhaps. Is there a sense that this is really a long-term fix, that investors should not expect anything months, maybe it's going to take years here?
Well, so I don't think they're going to stop production. I do think they're going to dig through the supply chain, sort of hopefully methodically and figure out where there could be sources of problem. But I think what it means is that you're just not going to see potentially the margin and the cash flow out of this business that you saw pre-pandemic for years, while they spend more money and more time and invest in people and go down and make sure that everything works. Some stuff may need to be reconsolidated back at sub-tier suppliers or even at Boeing if they can't get comfortable that they're going to get the quality out of it. I think it drags, like I said, in earnings, cash generation for
George,
years from now.
At the same time, what I hear from you and from others in the airline business is there's a big demand for new aircraft out there. So how do they balance maybe slowing down the line a little bit with the fact that their customers need more and more of their product?
So I think it hurts. I think you'd like to be breaking to higher build rates now. Airbus will get market share, but I think in the long term, if you don't fix the quality problem here, you'll lose long-term share and competitiveness, and that would be really, really bad.
What does this mean for Boeing's stock price? Because like we said, it's up today, but you compare it to Airbus, it's underperforming on a year basis by 33 percentage points, Boeing versus Airbus. So is this enough to bring investors new money into Boeing? Or is Airbus still going to be the outperformer here?
So I think, Boeing investors are going to have to take the long view here, right? Because again, I don't see any quick fix, quick leaping to much higher build rates, much better cash generation, because I think they need to invest back in their business. Airbus doesn't apparently have this problem. I think more of the supply chain is still in-house at Airbus, or at least better controlled. And so I think you're going to see that Airbus is going to perform fundamentally better here.
Is there a regulatory risk here for Boeing? Is there any sense that, Washington, I'm not sure which agency would say, hey, we're going to be kind of paying a lot more attention to you guys, forcing you to slow your line down, anything like that?
I definitely, right? The FAA has already said they're going to increase their oversight of Boeing and the suppliers. Look, in a perfect world, you wouldn't want to have these quality problems, and you'd like to be filling out less paperwork. You can make your business more efficient. They're just not going to get that here. We could all understand the FAA's reputation's been hurt as well. So they are going to have more regulatory oversight, and that will be a drag.
All right, George, thanks so much for joining us. We appreciate that as always. George Ferguson, he covers the aerospace companies, the defense companies, the airlines companies, that whole ecosystem. That's where George's investment research focus is. And so he's our go-to person on Boeing, the other aerospace companies, and then the ultimate customers, the airlines. And then, what we hear from the airlines is traffic's back. We need new planes. We need more planes. We need more more efficient planes, and that's good news for the the Boeings of the world and the Airbuses of the world. But as George was suggesting, probably top of order for Boeing is to kind of get their quality issues addressed, as quickly as possible, because that's the long-term health of the company.
Yeah, there's been a lot of focus on Boeing.
Yep. So yeah, absolutely. So Boeing, I mean, just looking at the stock here again, it's up about 2.9%, $206. It is down about 21% year to date. So definitely been under pressure, and as Emily pointed out, really underperforming its competitor Airbus. But I guess if you're Boeing, you have to take a long-term view here and maybe sacrifice some near-term stock price performance in order to kind of focus on the long term. Looking at these markets more broadly here, the S&P is off about 0.7%. The Dow pretty much unchanged on the day. The Nasdaq off about 1.3%. That's what we've seen some of the tech companies, particularly Google, performing a little bit on some.
Transfer a self-directed individual brokerage account over to Robinhood and receive a one-time match bonus of 1%. The larger the transfer, the larger the match. You transfer, we match. Offer ends January 31st.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. In the run-up to the Fed decision today, Treasury yields are lower. The 2-year, which I always say is more policy reactive, right now that is down a whopping 11 basis points. Right now at 422. Now, part of that story is a flight to quality. Some jitters with New York Community Bank as its shares are down 35% right now. The major averages lower to little change for stocks, and tech, of course, taking it on the chin. Tech-heavy NASDAQ down over 1%. Investors not too thrilled with earnings from Alphabet and Microsoft, as well as Advanced Micro Devices. Again, the Magnificent Seven continue with their earnings tomorrow. We're going to get, among others, Apple. Right now, the S&P 500, 35 points lower. That's down 0.75%. We're at 48.89 on the index. The Dow Jones Industrial Average is up right now, up 33 points, up almost 0.1%. And the NASDAQ 100, 236 points lower. That is down 1.4%. And we check markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Em and Paul.
All right, John Tucker, thank you. Appreciate it. Emily Rufeo, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. There's somebody new every day to see. I gotta stay on top of it. We also on Bloomberg. We're also on YouTube. So go to youtube.com, search Bloomberg Radio. Check us out on the video side. It is Fed Day. 2 o'clock is the announcement. We'll have a press conference at 2:30. Bloomberg Radio and TV be covering it. Tom Keene, Lisa Abramowitz, John Farrow, I believe, at that 1:30 p.m. Wall Street time. So we'll have full coverage there. What are we going to get from this Fed? I don't know, but the markets are certainly pricing in a dovish 2024 in terms of rates. Let's check in with somebody who actually gets paid to do this stuff. Glenn Smith, Chief Investment Officer, GDS Wealth Management, Flower Mound, Texas. Glenn Smith, thanks for joining us here. Where's Flower Mound, Texas?
Absolutely. We're about 10 miles north of Dallas.
Nice. See, just say Greater Dallas. I mean, you know, Flower Mound
actually,
is nice.
Are there flowers on the mound?
You know, there actually is a flower mound. It's very small, I think it's about 7 acres, but there's definitely a flower mound.
Awesome. Check it out next time down. All right, Glenn, what are we doing here with this Fed? We're going to hear from them later this afternoon. The market certainly says, hey, 2024 is going to be a year of rate cuts. How are you guys kind of pricing that in?
Absolutely. We think that the Fed is going to talk about how resilient and strong the economy is. Consumers are doing really good. We have inflation dropping, not quite at their target of 2%, but we're at 2.9. We have unemployment numbers very, very low, and I think they can be a little bit patient here. I don't think they want to lower rates before they actually need to. In the 70s, obviously, we had Arthur Burns do that, and then what happened is inflation was persistent, and I think they want to do this right the first time, and because of that, we think rate cuts won't start until June of this year, and we will have 3 rate cuts every other Fed meeting in 2024.
Glenn, how are you thinking about the market reaction to the Fed today? Because like John was saying a little bit earlier, we already have the 2-year down 11 basis points today. So what do we need to move yields even lower? And if Powell isn't ultra dovish, does that mean that we actually see yields reverse higher today?
No, I don't think so. I think the economy is very strong, and that's what's giving them a little bit of a mulligan here for rates not to go up. We think that they have a little bit of margin for error because the economy is so strong right now. I don't anticipate rates changing until later in the year when inflation comes down a bit.
All right, so Glenn, what do we do here? I mean, Emily Graffair, she's long those Magnificent Seven stocks. She's been laughing all the way to the bank. Other folks like Matt Winkler and me, we are not so smart, so we weren't long those stocks. What do we do here in 2024 if we miss some of those big tech names?
I think the Magnificent Seven, if you own them and you're not overweighted them, you want to maintain them. But I don't think this is a great entry point. I think there's other sectors out there, whether it's financials, whether it's energy stocks. Specifically in financials, we really like JP Morgan right now. If rates do stay elevated, we have net interest margins that will be phenomenal for them and continue to give them earnings. And if rates are cut in June like we anticipate, the mortgage activity should pick up. JP Morgan had a bit of a downer in terms of investment banking the last couple of years, and we think that's going to turn around from in 2024.
What about
on the energy? Go ahead. Sorry.
I was going to ask about multi-asset portfolios because you're chief investment officer. So how are you balancing stocks and bonds and 60-40 this year? If it's not all big tech, how are you thinking about the whole portfolio construction for 2024?
Sure. In terms of duration, what we've been doing for starting around 2022, we shortened the duration in shorter-term treasuries and bonds, treasuries and corporates. Just lately, in the last 60 days, we've been increasing the duration in anticipation of interest rates dropping from different ETFs that are money marked like bonds into longer-term durations. In terms of the overall portfolio, we think it's important to look at different sectors other than just the Magnificent Seven. You want to be diversified in different parts of the economy.
Well, you're down there in Dallas-Fort Worth. You have to have a call on energy. What's your call on energy?
Absolutely. We love Diamondback Energy. Diamondback Energy is a Permian Basin developer. They have over 476,000 acres, 8,000 drilling locations. What makes them unique is that their price of profitability per barrel is only $50 a barrel, unlike many of its competitors. We think the valuations are much more attractive than even an ExxonMobil. The cash flow has been amazing. They have lower operating expenses than its peers. They've consistently paid a dividend, and we think that will continue for foreseeable future.
All right, well, I'm just looking at the map here. You guys are right next to the Texas Motor Speedway, which I helped finance back in the day. That is a monster speedway. You laugh, but we just raised a ton of equity, a ton of debt. We built Texas Motor Speedway, Las Vegas Motor Speedway.
What deal were you not involved?
We were active back in the day. Now, can you water ski on Grapeview Lake?
Grapevine Lake, absolutely. Not only Grapevine Lake, but Louisville Lake. Those are two
nice,
massive lakes. I'm originally from Northern California, so this was different. There are different lakes in California, but you absolutely can.
Grapevine Lake, yeah, that was cool. All right, very good. Appreciate it. Just getting a sense here what's happening on these markets. Glenn Smith, Chief Investment Officer, GDS Wealth Management, Flower Mound, Texas. It's just north of Fort Worth. Fort Worth is one of my favorite towns. Like, I'll stay in Fort Worth as opposed to Dallas and drive to meetings in Dallas.
What does it have that Dallas?
It's a real cowboy town. Like, Dallas is chic, you know. You're in Fort Worth, you feel like you're in Texas. Cowboys and stuff like that. I love Fort Worth. It's a great town. All right, right now, let's head down to Washington, D.C. We got world and national news with Amy Martin.
All right, thank you, Paul. TikTok promising to spend $2 billion this year on protecting children and other viewers on the video service. Chief Executive Officer Shou Chew is testifying before the Senate Judiciary Committee this morning, along with CEOs from X, Snap, Discord, and Meta platforms on what social media firms can do to safeguard kids online. TikTok has now surpassed 170 million monthly active users just in the U.S. A panel of Republicans has approved plans to impeach Homeland Security Secretary Alejandro Mayorkas, setting up an historic vote on the House floor. Critics denounce the effort as unfounded. Democratic Congressman Eric Swalwell calls it a political stunt.
Any shortcomings that Mayorkas may have, frankly, are your fault. He's asking for authorities to do more, to have more border agents, to have more resources.
Former President Donald Trump called on the GOP in Congress to not pass a border bill, which is very close to a bipartisan agreement now in the Senate. 6 in 10 swing state voters say President Biden bears responsibility for the surge in migrants at the border. A Bloomberg News Morning Consult poll finds that Biden continues to trail Donald Trump in 7 swing states. More on this with Bloomberg News national political reporter Gregory Cordy.
The economy is still far and away the number one issue among voters. But as some of these economic indicators that we're looking at, and especially inflation, starts to ease a little bit, that creates some room for voters to worry about some other things. And by and large, what they're worried about is the crisis at the U.S.-Mexico border.
The monthly survey serves as a warning for Biden, who lags Trump 42 to 48% across all 7 swing states in a head-to-head matchup. When a third-party candidate is added to that, Trump's lead grows by another 9 percentage points. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. Paul and Emily.
All right, Amy Morris, thank you so much. We appreciate it. Emily Griffeo, Paul Sweeney, we're live here in the Bloomberg Interactive Broker Studio, streaming live on YouTube as well, so check us out there. Tesla, I was just looking at the chart after reading opinion piece by Matt Winkler, the founder of Bloomberg News, and where Matt pointed out that the stock is 50% off its high. I said that can't be right. His numbers, his math, Shinpei's math can't be right. I looked at the chart, sure enough, it's right. The stock's down 50% from its high, still the 10th most valuable company. So, Matt, thanks so much for joining us here. We really appreciate getting your time here. Matt, you've got a piece out here today saying Tesla, let's get some profit margins there that, you know, maybe not getting the full attention out there in the marketplace. Tell us what your math found.
Always great to be with you. Thank you very much. And yes, after losing 50% of shareholder worth since November 2021, Tesla still is, surprise, surprise, the 10th most valuable company, and it has the greatest market capitalization of any maker of cars and trucks in the world. And there's a reason for that, why that is so today, and it's because Tesla's margins of profit margins are superior to any automaker, including, by the way, you could say its most interesting competitor, BYD from China, which, if you look at the last quarter, became the global sales leader for zero-emission vehicles, which of course is the Tesla space, which it is owned. And with all of that, if you like, bad news, Tesla still is holding its value. And I will say this, that if you looked at BYD over the past 6 months, it's actually trading at its low. It's declined significantly since August. So if there was, if you like, a reevaluation in the market, if anything, Tesla is more than holding its own, and if anything, BYD is depreciating. And the rest of the auto industry, of course, doesn't have anything close to the profit margins of Tesla. So that's the story. I kind of like it only because after last week, everybody seemed to be going in one direction. If you read the narrative, the prevailing narrative was, Tesla's days are numbered. Not so fast.
So why are people overlooking this? And is the fact that Tesla is down more than 50% from its all-time high, does that mean to you that this profitability is actually not priced in yet?
Tesla has been a volatile stock. And remember, we're talking about an adolescent here. It went public in 2010. And it's had many periods like this one where
Transfer a self-directed individual brokerage account over to Robinhood and receive a one-time match bonus of 1%. The larger the transfer, the larger the match. You transfer, we match. Offer ends January 31st.
A Fortune magazine, most admired companies. Tesla isn't there. Now think about that for a second. This is a company that has completely transformed the auto industry as we know it. It has essentially convinced people that zero-emission vehicles are the future, and even the very traditional auto giants it competes against have conceded that they have to make EVs. And you would have thought that would be in and of itself significant enough to be admired, but no, it's not there. So there's a lot of, if you will, noise that's associated with Tesla because of its co-founder, Elon Musk, and often the noise obscures the signal, which is the vehicle itself.
Hey, Matt, I know you've been a longtime owner of the Tesla automobile, so you follow this industry probably as close as anyone, just because I suspect it's always been of interest to you. I think the issue now for investors, not just for Tesla investors, is what is the ultimate demand for EVs out there? And now there's a question. We saw Ford pull back their production of the Ford F-150 Lightning, which I've test driven. It is an awesome vehicle at $94,000. It better be. What is your sense as to the demand picture for electric vehicles in this country?
Okay, so you're quite right. I do own a Tesla Model S. I've never owned the shares for obvious reasons because it would be a conflict of interest, and Bloomberg being Bloomberg,
yes.
we're very careful about such things.
Yes.
But I am at the 100,000 threshold on
nice.
my Tesla, and there's no sign of any kind of deterioration. And I would say that many people who write about Tesla probably don't have the experience of the people who own Teslas. And if you ask people who own Teslas, pretty much the satisfaction there is right near the top. And actually Consumer Reports bears that out. So I would say that the demand for EVs is only going to increase. There was recently a story on Bloomberg about more competition in California, which has been the state that has led.
But that's California. It's like a different country, let's be honest.
And in there, it's a case of, there are more people buying EVs, and they're not buying as just Teslas anymore. Tesla had a 70% market share, and now it's down to 60-something%. But Tesla's still growing, and that's the whole point, is that the pie is getting bigger, and Tesla's piece of the pie is going to get bigger as well.
Some people say, I want to buy a Tesla. I don't want to buy an EV. It's like I want to buy a Tesla because it's such a cool car, cool brand. But I'm not buying it because it's an EV.
Yeah, and look, here's the thing. Tesla makes only zero-emission vehicles. It's competing against companies outside of BYD and a handful of others that make all these other fossil fuel machines. That's a very complicated equation, which is why the profitability in the auto industry is inferior compared to Tesla. Tesla only has to focus on one thing. And so far, if you look at it, it's done very well. First there was the Model S, and then there was the Model X, and then there's the Model Y, the Model 3. All of these vehicles actually have made Tesla a very formidable company, and there's more to come. I mean, the reason why the stock fell as much as it did is because Elon Musk actually said we're going to take a pause, so to speak, to get an even cheaper EV model in front of people in the years to come.
Just one more minute, Matt. What do you think that China's situation is for Elon Musk from a competitive standpoint, selling those Teslas into China vis-a-vis BYD and some of the other Chinese manufacturers?
Look, the vehicle speaks for itself, and to the extent that consumers make that choice, it's a good thing for Tesla to be in China.
Yeah, absolutely. It's a huge market. They've done exceptionally well. Matt Winkler, thank you so much for joining us. Matt Winkler is the co-founder of Bloomberg News. He is the editor emeritus of Bloomberg News. Writes some fascinating columns. But you know what? Pretty much every Bloomberg opinion columnist is good. I mean, we haven't had too many duds come in. Let's be honest. These guys are good. Tim O'Brien, he knows what he's doing over there at Bloomberg Opinion. Matt, thank you so much for some good stuff. So check out Matt's work as well as all of our other friends.
Medical data is doubling every 73 days. 11 different analysts got involved researching weight loss drugs alone. At Columbia Threadneedle, we get to go figure out the world together with the hope of finding great returns for our investors.
That was a very pointed opinion column about what the United States military response should be in the Middle East. So there's lots of stuff like that. So we get some great voices here. We're going to go in just moments to a live simulcast with Bloomberg Television NASDAQ Chair and Chief Executive Officer Adena Friedman. He's going to be with Bloomberg's David Weston, so we'll bring him to you in just a moment. Looking at the markets here, S&P 500 off 0.9%. The Dow is absolutely unched on the day. Got the NASDAQ off 1.6%. Same for the Russell 2000 is off 0.6%. So a little bit of red on the screen here, digesting some of these earnings. Of course, we have the Fed coming up at 2 p.m. Wall Street time, and we'll have Bloomberg coverage starting at 1:30 Wall Street time. Right now, we want to go to that interview. NASDAQ Chair and Chief Executive Officer Adena Friedman sits down with our very own Bloomberg's David Weston. We'll bring you that right now. Let's listen.
For our Bloomberg television and radio audiences worldwide, I'm David Weston. I'm delighted to say we have now with us Adena Friedman. She's the NASDAQ Chair and CEO. Adena, thank you so much for being back with us.
Great to be here.
Earnings today, both the fourth quarter last year and the whole year. And looking at those, first of all, you exceeded expectations pretty much across the board, it looked like. Congratulations on that. At the same time, it's a bit different because you were adding a substantial new component. And it looks like there's almost two aspects of NASDAQ. One is what you traditionally have done, and the other is your solutions business. Explain how that works, because they seem to have very different growth patterns.
Yeah, well, thank you. And we are really proud of the results we delivered for the shareholders. Just a quick recap. For the quarter, we had 7% overall growth. And in the solutions businesses, it was 9% growth. And these are organic numbers. And of course, then we also added Adenza into NASDAQ in the fourth quarter. The two key growth areas for us in the quarter were our index business, up 26%, our anti-financial crime business, up 25%. But overall, the overall business continues to really show the power of that diversified portfolio that we talked about. Now, as you said, we have our markets business and we have our solutions businesses, and that includes like data analytics and software products. Maybe take a second on that. So, when we thought about how do we grow our business, we are a great, market operator. We're really proud of that. And what do markets do? They provide liquidity, transparency, and integrity. And when we think about how do we therefore partner more with our clients to help drive liquidity in the financial system, well, it's not just our own markets, but we provide technology to 130 other markets now. And now, with the acquisition of Adenza, we have our Calypso system, which provides risk management technology to banks. It gives them more ability to put more liquidity into the system. And if they manage risk better, they can put more liquidity into the markets. So that's the liquidity pillar.
Let me just pursue Adenza for a moment, because that is a big deal for you.
Yes.
It's very substantial. A lot of people, a lot of costs, a lot of revenue coming in. How is that integration going? Because as you know, most deals fail not because they're bad ideas, but because the integration doesn't get done.
Well, so first of all, it's been a great start to bringing Adenza into NASDAQ. We closed on the deal in November. We brought the team in right away. We created a new operating model where we have both Adenza and NASDAQ people leading the FinTech division. And the financial technology division within NASDAQ now is comprised of market technology, the technology we provide other markets, our anti-financial crime suite, which is in that integrity pillar, and then also includes the Adenza products, Calypso, risk management, and Axiom SL, which is regulatory reporting. So we now have a very complete suite of solutions we can offer banks, brokers, and exchanges around the world to help manage risk, manage their exposure to capital markets, and also root criminals out of the system. I would say that it's going really well, David, because when we assess acquisitions today, we really do a deep dive on the culture. We think cultural alignment, values alignment is actually a critical component of success. And so as we've been bringing new companies and capabilities into NASDAQ, we make sure that we have cultural alignment, and that actually really speeds the integration along. And so we're off to a very, very strong start now with Adenza as part of NASDAQ.
When you announced the deal, you emphasized the future growth opportunities and what this could mean for NASDAQ. You didn't talk much about cost synergies, which is unusual. Mainly acquirers talk about how much money they're going to save. Now you're doing the integration. Are you looking at substantial savings as well as the growth?
So we are looking at both. When we announced the deal, we announced $80 million of net expense synergies, and then over a medium to long term, $50 to $100 million of revenue synergies from cross-selling and expanding the business. So we do feel like we're on track on both fronts. I would say that with the expense synergies, we have a very clear plan, a very clear path of execution. We expect to achieve that over the next 2 years. And then we have an upcoming Investor Day, and we'll provide more details to our investors around that. But it is off to exactly the start we wanted it to be, and we have a very clear understanding of where we're going with that.
You mentioned financial crimes, and you have a report out for 2023 that certainly got most people's attention. $3.1 trillion globally in financial crime. And you divvy it up among drugs and human trafficking, which is stunning to me how large it is. But how is that business doing for you, and how much progress are you making with Verafin and the things you're doing at financial crime?
Yeah, so our overall anti-financial crime business, which includes our surveillance business for brokers and the Verafin business, which is true, like fraud and AML detection, that group grew 17%. Verafin being the one that grew 25%. And as you said, this anti-financial crime report really does expose how big is the problem. The problem is $3.1 trillion in money laundering and another $500 billion in fraud that's lost in the system. So, and banks can't solve this problem alone. So a large part of the report is what is the collective action that has to happen between banks and among banks, not just one bank trying to solve it on their own, but how can you use technology and data consortia to root the problem out more effectively, and then also partnering with the public sector, law enforcement. How do we make sure that the wheels are working as effectively as possible between the banks and the public sector? So the report is a big, broad report. Verafin does very specific work to help banks and complete workflows across AML and across fraud. And as I said, it's a big grower for us because the problem is so big.
I think I have a sense of what NASDAQ is providing in terms of financial crime. I think I understand something of what you're doing in terms of compliance. What about cyber attacks? Because we had another one just last week with Equiland. Is that something you can help the banks with as well, because they're struggling so?
Well, I would say that's a big, broad challenge that every industry, every company has, and it's something that you have to stay extra vigilant on. We do a lot within our own business, of course, to protect our systems, to have, we always say that this is not a problem for our IT security team to solve. This is a problem for every employee to solve. It has to be culture, people, process, systems across the whole company, protecting the NASDAQ, protecting our markets, protecting our systems. I think that in general, we do focus on that. Where we help within anti-financial crime, because some portion of fraud is through cyber attacks. And so we do help them try to, the criminals will get in by hacking into an account, business email compromise and other things. We help the banks try to find that and make sure that the victim is protected over time. But that's our role in that area.
Adina, thank you so very much for being with us. That's Adina Friedman. She's chair and CEO, and this is of NASDAQ, and this is Bloomberg.
All right, that was Adina Friedman from NASDAQ talking about these markets. And it's interesting, the exchanges, it's an interesting time because it's technological change roiling through those markets. So right now, what are we going to do there, Mark? You want to hang? What are you going to do? All right, we'll take the break at 50 past. We'll look at these markets, Emily and John. A little bit of sell-off here. Emily, what do you think we're going to hear from the Fed today? I mean, I guess it's kind of status quo.
Yeah, I'm worried it might be a little boring, a little status quo. I don't feel like he's going to be taking too much of a victory lap because the data already speaks for itself.
I'll push back because I go with Julia Coronado, the economist.
She is pretty smart.
Her own firm, who's usually right on the mark. She seems to indicate that they'll at least signal that March is in play at this point, and she thinks we're going to get the first rate cut. They're going to go ahead and start in March with a rate cut.
Well, we had some people yesterday, I can't remember who the guest was, but said basically they should have already been cutting. They're already behind the eight ball. They're going to be too late, and we've got inflation down to 2%. The economy's still decent, but we'll have to see. But nevertheless, we sent Michael McKee down to Washington. He got on his plane. I stress he takes the Acela. He swears it's better to fly. He's so wrong on that.
No, not to D.C.
I know exactly.
Oh, no, it takes forever on the train. I went to Baltimore, and I thought it was like an overnight trip
No,
from
you
New
do
York.
the Acela. It's like 3 hours. No
Door
fuss,
to
no
door.
Door to door,
The train is better.
Yes.
Jump in a cab, go right to LaGuardia. You're down there in like 45 minutes at the most.
Yeah. All right. That great debate. Now, I fly to Boston. He takes the train to Boston, so we're completely, not on the same page there. So, but somehow Michael McKee, he found his way to Washington D.C. He'll be reporting on that. He'll be at the press conference today, which is.
Transfer a self-directed individual brokerage account over to Robinhood and receive a one-time match bonus of 1%. The larger the transfer, the larger the match. You transfer, we match. Offer ends January 31st.
Now, your company news headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom with a look at some of the company news. So you all remember the regional bank crisis, I trust. In the debris that followed, New York Community Bank Corp purchased the deposits from Signature Bank. So far, so good, except the purchase of Signature Bank deposits moved New York Community Bank Corp into a regulatory category that requires additional capital levels. So fast forward to now, the shares falling. Let's get the update right now. New York Community Bank pair shares 35% lower after reporting a surprise loss for the fourth quarter. They also had to cut the dividend. Bank lowering its quarterly payout to shareholders to 5 cents. Analysts have predicted the dividend would remain at 17 cents. And the worsening credit outlook contributing to the unexpected loss. Worries over that even sent Treasury yields lower. The 2-year, for instance, 13 basis points lower. That's at 4.19. A bit of a flight to quality move there. Drew Redding's Bloomberg Intelligence headline, Paul, and am catching my attention because I love this. Home Depot and Lowe's can cash in on America's This Old House. My favorite program. Home improvement retailers such as Home Depot and Lowe's can benefit long-term from a housing stock with a median age now of 42 years. So that should boost maintenance and remodeling spending over time. Homes built in 1970 to 2009, according to Drew's research, over 50% of the housing stock and garner most of the spending. The median age in both retailers' footprints is near the U.S. median. Home Depot, if you go there, your home, according to Drew, is 1.2 years older than the homes of customers who visit Lowe's. So put that in the blender and mix that up. And that is your company news.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, looking at these markets right here, we got the S&P 500 off 0.9%. The Dow Jones is pretty much unched on the day. The NASDAQ, where you got a lot of technology names, that's off 1.6% today. We had Microsoft news came in a little better than expected. Google was a little bit weaker than expected, so there you go. Some other tech names, a little bit of a pullback there. Looking at the yields also pulling in pretty sharply here, down at 8 basis points on your 10-year. We're now at 3.95% on your 10-year Treasury. In the commodity space, WTI crude oil off about 1.5%, just under $77 per barrel. And Bitcoin, call that out for Tom Keene, it's off 0.5%. We're now at 43,350 on the cryptocurrency. Right now, let's head down to Washington, D.C. We'll get more national news with Amy Mars.
All right, thank you, Paul. While President Biden says he has decided how to retaliate against Iran-backed militants who killed 3 American service members in Jordan over the weekend, he's also said he does not want to escalate the war in the Middle East. Retired 4-star Army General Joseph Votel tells ABC that even if Iran did not directly order that strike, they still enable the militias.
Whether they are actually pulling the trigger or launching the drone, I get that that's probably being done by these proxy organizations. But the whole thing is enabled by Iran. They are responsible for this, and they need to be held to account.
Iran's UN ambassador warns the country will decisively respond to any U.S. strikes. As the Iran-backed Houthi fighters have continued their attacks on commercial ships in the Red Sea in support of Hamas, shipping industry executives admitted to Congress that these militants have effectively taken control of the waterway, which sees about 15% of the world's commerce. John Gold is vice president of the National Retail Federation.
One member has told me that they have had carriers ask for an increase of $1,500 to $3,000 per container, which represents a 38% to 73% cost increase.
Gold says many carriers are now considering new fees to ship their goods. Those are costs that could trickle down to consumers. House Speaker Mike Johnson will allow a vote today on a $78 billion bipartisan tax bill. Bloomberg Government's Jonathan Tamari reports this puts him on the side of corporations over a group of Republicans who'd objected to the package of business and child tax breaks.
This is something that's been up in the air. There's been a bipartisan tax bill that renews a number of business tax credits and also renews some of the expanded child tax credit that was passed during the earlier stages of the pandemic, early in the Biden administration. So one win for Republicans, one thing that Democrats really want. There was some question about whether it could get enough votes in the House because there are House conservatives that don't like the child tax credit. There are House Republicans from high-cost states like New York that want the state and local tax deduction to be fully restored like it used to be.
Bloomberg Government's John Tamari. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg, Paul and Emily.
All right, Amy Morris, thank you so much. We appreciate it. Emily, I've got a story that I want to discuss, but I'm not going to discuss it with you because you're not a homeowner yet. John Tucker.
She doesn't have to go through the trials.
No,
maybe in 40 years, I'll finally be able to afford a home.
Exactly. That's what the kids are saying. I got too much debt. I got school debt. All right, New York Republicans will get a vote as soon as next week on a provision to double the state and local tax deduction cap.
Salt
to $20,000 for married filers. That's according to a source familiar with negotiations. New Yorkers received a commitment from House leadership for a vote on legislation that would raise the $10,000 cap for married filers to $20,000. So they're not eliminating the cap.
Little background for everybody, like when Donald Trump became president, one of the first things he did was like retaliate against all the states that voted against him, like the high tax states like California, New York, New Jersey. But there are Republicans in these states too who are fighting back. So the SALT deduction, which used to be you could deduct 10% of your property taxes. New Jersey has the lowest property taxes in the nation. But that went away. So
yeah, that hurt.
Now they want to bring it back and make it 20,000.
Yeah, that'd be good. I mean, that'd be a help. So we're kind of getting there.
But could we do it for this year?
No,
I don't 2023 tax year.
I mailed this story to Matt Miller because he's sitting drowning under this massive mortgage, but he's got it for like 3% or 2.75%. So I'm not too worried.
Transfer a self-directed individual brokerage account over to Robinhood and receive a one-time match bonus of 1%. The larger the transfer, the larger the match. You transfer, we match. Offer ends January 31st. Transfer a self-directed individual brokerage account over to Robinhood and receive a one-time match bonus of 1%. The larger the transfer, the larger the match. You transfer, we match. Offer ends January 31st.
Business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Steve Purdy. He's the co-head of global credit at TCW. Folks, that is big. TCW, Trust Company of the West, they're based out of Los Angeles. They're a massive money manager out there in LA. The gajillions under management. Steve's one of the folks that runs that cash, so we'd like to get a couple minutes of his time to talk about the fixed income business. And then we tracked down Herman Chan. He covers the regional banks for Bloomberg Intelligence. He was, going to take the day off or something. Nope, we grabbed him, pulled him in here. He's going to explain to us what's going on with New York Community Bank, and do we have to worry about some of these other regional banks out there, because that is front and center today. But first, let's kick this hour off with a Bloomberg Business Flash, Mr. John Tucker.
All right, we'll start off with the tech-heavy NASDAQ 100, suffering right now a decline of over 1.2% after results from the first of the so-called Magnificent Seven. Google parent Alphabet, Advanced Micro Devices, and Microsoft delivering results that left investors wanting more. Now, specific to Microsoft, those shares right now, they are down 1.2%. They did post the strongest revenue growth since 2022. The profit did beat estimates. Well, analyst Dan Ives at Wedbush Securities says, the results from Microsoft actually were as bullish as anybody could have expected.
The cloud numbers here are off the charts. Remember, this is all about AI. Copilot, you have over 1 million customers right now from a subscriber perspective. Enterprises are lining up. Monetization's here. This is just the start of the revolution.
And right now, you have the S&P 500 39 points lower. That's down 0.8%. The Dow Jones Industrial Average actually in the green right now, 40 points higher. That's up 0.1%. And the NASDAQ 100 down 254 points. That's a decline of 1.4%. Two-year yield right now 13 basis points lower. This is now at 4.2% as we get ready for a Fed meeting, and also sort of a reaction to the decline in the shares of New York Community Bank. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Emily Paul.
All right, John Tucker, thank you so much. We appreciate that. As John was just reporting red and green on the screen here. Emily Gaffeo is with me. We're here live in our Bloomberg Interactive Broker studio. We're streaming live on YouTube as well. So you can go to YouTube, search Bloomberg Radio. You can go to YouTube and just look at podcasts, and you'll find a Bloomberg podcast. And you click on the live link, and that'll work too. Lots of ways to get there. We're also in CarPlay. We're in your dashboard, Android Radio, so Apple CarPlay. We're just kind of everywhere. Tom Keen's all over the new technology. He loves it. Even though he doesn't own a car, but he has a driver, supposedly. We'll see how that works out for him. John, we got mixed, just reporting, John Tucker reporting some mixed performance out there in the equity markets. But let's check in with Nora Melinda. She's an equities reporter for Bloomberg News. She joins us here in our studio. Nora, what are you looking at here?
Let's take a look at Boeing. Of course, this has really been a stock that has been in focus over the past few weeks. I know you all spoke with George Ferguson from BI earlier, but those shares are up and they're seeing their best day since November. It feels that we haven't had much positivity coming out of this company, especially as we've been hearing from a plethora of different airlines all coming and toppling on top of Boeing for the issues that came from that Alaska airline flight. But Boeing has reported revenue and free cash flow for the fourth quarter that beat analysts' expectations. And this is clouding the fact that it suspended its 2024 forecast. And so we've really got investors cheering the company on this morning. And we saw a few headlines coming through a bit earlier with the CEO actually taking accountability, saying that we did cause the problem behind the Alaska Air blowout.
I've got to wonder, George Ferguson was telling us that this is a long game for the Boeing investors, that we're not going to see any major improvements for a while. So anyone buying the dip right now is going to need to plan on holding for quite some time. But at least, that stock today, highest gain since a while.
What else you got?
Looking at New York Community Bank Corp, we'll be hearing from, of course, Herman Chan, as you mentioned, around 11:20 today. But those shares are plunging as much as 46% for the biggest drop on record and the lowest level in 24 years. This is all coming after it reported a surprise loss for the fourth quarter and a cut to its dividend. And this is really wrapped up. People are thinking about how the regional lender purchased deposits from Signature Bank last year. And so this stock has really been in focus. It's pairing a bit of its loss, but it's still a pretty substantial drop on the day.
All right, excellent. So, I don't know. You've got Starbucks on here, and it better be good news because I'm a Starbucks fan.
So you are a Starbucks fan. I should have asked you both.
Here's the thing. The greatest thing they've done recently is they've introduced a new size, the short, which is smaller than the tall. Now, why the tall is their small size, I have no idea. That's a whole different thing. But now I get the double short mocha, which is even less.
You're one of those.
Double short mocha, because I couldn't fit it. There's too much in the other side.
They had a Starbucks in this building downstairs.
Crazy.
You would go in there, and you look out the window, you could see the other Starbucks down Lexington Ave.
Now we don't have that Starbucks.
I don't know what happened.
Now we rue the day that they
How much are they charging for this? What did you say, short?
Double short mocha.
Double
I don't know. I
short.
just kind of put my phone up next to it.
Just throw it up there and hope for the best.
Yeah, it's fine. What do you got for us?
Starbucks is pairing some of its gains, but earlier it was up as much as 4.6, or seeing its best day since November. It had a first quarter comparable transactions growth beat, and this overshadowed the coffee chain's comparable sales growth missed. We had Stephens analysts say international results were potentially better than feared, and Wells Fargo said that investors were bracing for a miss, but U.S. comparable sales were better than buy-side expectations, and EBITDA margins were impressive. So I do have some good news for you, Paul.
All right, good stuff. First Starbucks I went to was outside the offices of Janus Funds in Denver, Colorado. I walked in there and I'm like, can I get a small coffee? And they're like, venti, tall, grunt, what?
I was being a nice guy. I was being a nice guy once, and while I was on the air, in between commercial, so I'm like, you guys want coffee? I'll go down and get one at the Starbucks downstairs. And Karen Moscow, everybody was getting, light coffee, black coffee.
No.
Oh, double mocha choco loco with a half shot of this and that. And it took like 10 minutes just to make hers. I ran upstairs to get back in. I was so out of breath. Marty Shanker heard me on the air. He goes, is he going to have a heart attack?
Well, now
That's my Starbucks.
Well, now you got
story.
7 and 8-year-old kids that go in there and can conjugate the whole thing. You know, they learn it from
The
birth
secret
now.
menu as well. Do you go?
There was that Bloomberg, I think it was a Big Take or Business Week a couple months ago about the hundreds of thousands of combinations
Crazy.
of Starbucks drinks
I
that
don't know.
exist.
Good.
Bloomberg
Who
analyzed
knew?
the whole thing.
Who knew we needed coffee? I never drank coffee until I went to that Starbucks outside Janice.
Now you're hooked.
When I went to LA, when I was on the SI side, Emily, as a sell-side equity analyst, my salesman would say you have to come to LA at least twice, preferably 3 times a year. If you go there, you see Capital Group, you see TCW. If you don't get those 2 meetings, don't even go, because those are the lockdown meetings you get. Now, when I went to TCW in these fancy offices in downtown LA, which I can still see here on the Zoom call with Mr. Purdy, I avoided the fixed income floor desperately. I just went right to the equity floor because they're much more fun there. Steve Purdy joins us. He's co-head of global credit at TCW. Fixed income, you guys do math. I don't like math, Steve, so that's why I stayed with your colleagues on the equity floor. I got to get the house call here for TCW. What are you guys doing in the fixed income market this year? There are actually some positive returns in 2023 for you guys.
Yeah, there are. And first of all, thanks so much for having me. Really appreciate it, and glad that you've been to our offices. And we'll welcome you guys in January anytime.
Yes.
Let's start. The big picture for us is we think that inflation has peaked, which means that the rate cycle has peaked. And you got to give the Fed a lot of credit for what they've done. Now the question is, from here, how quickly will they be reducing rates, and by how much quantum? And we think today is a bit of a non-event, but we do think overall the economy is slowing, and that's the real story. We think the Fed's got to get ahead of it, but we're seeing a lot of breadcrumbs in what we're hearing from companies that the slowing economy might be getting a little bit away from the Fed, and they need to be very aware of that.
So we've been asking everyone today, what do you think Powell is going to actually talk about in his presser? Is there anything that he could say that could move the markets today?
Yeah, I think everyone agrees, and we're with consensus that nothing is actually going to happen from a rate move perspective, but it's really going to be about his outlook and how hawkish that feels. And we think they'll probably remove some of the language to give themselves runway to begin the rate decline. But we don't think today is a big day. What's interesting is to watch is how quickly the economy is slowing. And the results from this quarter thus far have been overall pretty positive. But we do think we're seeing some signs of deceleration, and we hope that he speaks to that in his Q&A today.
Hey, Steve, you guys are talking about a slowing economy out there. I'd love to get that kind of surprises. I guess given that background, I was kind of surprised in 2023 to see high yield was the best performing fixed income sector out there. How do you guys think about high yield versus investment grade in 2024?
Yeah, it was a barn burner of a year in high yield last year. And I think, one, people were probably expecting the economy to slow in a more dramatic fashion than it actually did. That's one. The second thing is the triple C cohort, and there's a couple of sectors in there, really cruise lines being the most dramatic, which came into the year at very low prices. And as we had this kind of remediation and the peaking of rates, people stepping back into the asset class really drove outperformance there. We're now sitting at about 320 basis points over the Treasury. That's within the top quartile of tightness over the last 10 years. So our perspective is that credit spreads on the high yield side, and even more dramatically on the IG side, are going to have to widen throughout the course of the year. So we think you're supposed to be a little bit underweight high yield and wait for a better time to enter that asset class.
What about the fact that we might see a lot of debt maturing in 2024 and 2025 and 26? I talked to a number of fund managers who say this is really a cause for concern. These companies that locked in low rates now all of a sudden have to adjust to a much higher level of interest, and that's going to cause some kind of economic trouble that's going to then trickle down to the rest of the economy. How are you thinking about debt refinancing specifically for these IG corporates?
Well, I'll pivot back to what you guys were talking about, home ownership. I'm sorry that you don't own a home, because those who do have 30-year mortgages have locked in a very low rate for a very long period of time. And that is the luxurious position that investment-grade companies find themselves in. The average tenor is kind of 10 years plus, and so they've got a lot of time to wait and adjust to this new rate environment. high yield companies on average have about 3 years until they have to kind of climb that maturity wall that you are mentioning. And it is a challenge for certain of them. In the leveraged loan market, they have to reprice their balance sheet every month or 3 months. And we're seeing a lot more distress there as managers simply weren't prepared to pay an additional 200 or 300 basis points just to operate their business. And let's remember that when your cost of capital goes up, that doesn't impact your business at all. That's not marketing. That's not a new property that you're spending for. That's not new employees. It's just the same business that costs you more to run every day. And that's going to be a challenge. We think people are taking advantage of this new issue boom in January while the markets are open to rush in and try to kick out those maturities. But it's really a show me story by each individual credit over the next few years as they try to digest how to pay more money and how they're going to manage their businesses given that additional burden.
Hey, Steve, how do you feel about credit quality out there? If your house call is for a recession, I'm guessing you're asking your analysts to kind of sharpen their pencils and take a look at the ratios and so on and so forth. How do you feel about credit quality out there?
You know, the management teams thus far have done a really excellent job. During the pandemic, we saw balance sheets actually get into a much better place. Personal balance sheets, as an aside, people paid down credit cards. They weren't going out as much. Corporates didn't go on big M&A booms. Instead, they tried to say it's a cautious environment. I want to bring down my leverage because we don't know what the world's going to look like. So that all feels pretty good. So when you think of near-term defaults or a spike in default rates, we don't see that happening in the near term. But what we do see is credit spreads right now are kind of pricing perfection. And we don't think that's a reasonable case given what we're seeing. And so the other thing we're hearing from management teams, as our analysts, as you said, are kind of plugging into their models every day, is the numbers are fine, but the outlook feels a little bit more concerning. And now we're starting to see job losses roll through. I mean, every day we come into our Bloomberg screens and see a blinking red number across the top. Yesterday was UPS with 12,000 employees. That is a good signal that companies are not as bullish about the future as what they are now, and we think that's problematic.
So, you guys, just about a year ago, you guys being the folks in California, were kind of at ground zero in some of these regional bank challenges here. And we just got another reminder today with New York Community Bank. How do you guys think about the banking sector, the financials here today?
Yeah, it's kind of an old story that's come back to light this morning. First of all, so are there lingering effects of the regional bank crisis? First, let's talk about the good news. The Fed reacted quickly, and what they did with Signature Bank and SVB, really, they deserve to be commended for that because it put a floor quickly under deposit flight, which was critical. Now, it also showed us, by the way, that the large banks, the globally systemic banks, are the safest place you could possibly be. And we continue to believe that as an investment thesis. Shifting back to the regional banks, the real crux of the matter here is commercial real estate. And it's very difficult as an outside investor to get really granular views, asset by asset, on what type of commercial real estate portfolios they have. And I think when Community Bank bought the Signature Bank portfolio, they had to get their arms around that exposure. We've learned today there might be more problems in that commercial real estate, and particularly the office sector portfolio than they had envisioned when they purchased those assets. So we think this is not a brand new story. It's simply this delayed rolling impact of the commercial real estate issue flowing through the regional banks.
Yeah, we had Barry Sternlick, Chairman and CEO of Starwood Capital, on Bloomberg Television yesterday. He was talking about, he thinks the nut might be, $1 trillion of risk there, value add risk in the commercial real estate, particularly the office space. And so that is a big issue. And if that's the case, then that's going to have some pain for a lot of folks. Steve, thanks so much for joining us here. Really appreciate getting your time. Steve Purdy is co-head of global credit at TCW. Some real smart folks out there at TCW, both on the equity and fixed income side. And again, kind of the base case for TCW on the fixed income folks, the credit guys, they think a recession's coming. So they're kind of positioning their portfolio accordingly, kind of underweight high yield, a little bit more on the investment grade and focusing on the balance sheet. So that is certainly a take there. What are you seeing in the markets here, Emily? Kind of just a little bit of softness here in NASDAQ, kind kind of reflecting what we saw, I guess, from some of the tech companies.
Yeah, I mean, when you think about other Fed days, for the last 2 Fed days, we've actually seen stocks, the S&P 500, end up more than 1%. So I'm wondering what exactly can Powell say today, this afternoon at 2 p.m., to really turn this equity market around, or are we going to see a change? We're going to end the day lower, even after he delivers maybe a signal of a rate cut.
All right, so the timing there is 2 p.m. Wall Street time. We'll get the statement from the Fed. 2:30 will be the press conference. Our own Michael McKee is down in Washington for that press conference, giving us any breaking news there. And at 1:30, kind of covering this whole thing, will be Bloomberg Television Radio simulcast. Tom Keene, Lisa Bromwich, John Farrow, and they will be focusing on this Federal Reserve with some smart conversations, some smart guests. That's all we've got. This is
headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. I'm actually going to start off with yields. Two-year Treasury down almost 12 basis points. And a big part of this appears to be a flight to safety. It comes after renewed concerns over regional banks. New York Community Bank shares, They're down right now 35% after cutting their dividend, and we're going to get the expert analysis of all this, so don't go anywhere. Herman Chan is stopping by. As we look at the major averages, S&P 500, 35 points lower. That's down 0.7%, 48.89 of the index. The Dow Jones Industrial Average is up 54 points. That's a rise of 0.1% right now. And the NASDAQ 100, the tech-heavy NASDAQ 100, after earnings from Microsoft, etc., 234 points lower. That is down 1.3%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. And that's your Bloomberg Business Flash. Emily and Paul.
John Tucker, thank you so much. We appreciate that. Emily Graffeo, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, and we're also streaming live on YouTube. So head over to youtube.com and search Bloomberg Radio. As John was just reporting, New York Community Bank, surprise loss here. Cut the dividend, stocks down 35%. Let's break it down with Herman Chen. Herman Chen follows the regional banks for Bloomberg Intelligence. He joins us live here in our studio, here in our New York City headquarters. Herman, what happened at New York Community Bank?
New York Community. So if we go back to what happened in March and April of last year, they were the bank that bought the assets and deposits from Signature Bank. So they became a much larger institution, cleared that $100 billion threshold, which is like a step up in regulations. Now, it seems like they're a bit cautious with that step up in regulations and the upcoming stress test. So they're cutting the dividend, reducing loans, trying to shore up their liquidity and capital. And then on top of everything else that I just talked about, that they posted some weaker asset quality. So there's questions on if they're going to see more loan losses in apartment lending and office lending in 2024.
What do we know so far about why they're so uncertain about this credit quality outlook?
Yeah, so New York Community is largely an apartment lender in the New York City area, rent-controlled, rent-stabilized apartments. So those buildings are affected by recent New York rent rules that cap how much you can charge to your tenants. On top of that, you have higher interest rates, so it squeezes the landlords, and there's a lot of refinancing risk ahead. So they posted a big loss there in the fourth quarter, and there's questions ahead. They have about 4% of their loans in office exposure, so that's a touch higher than the median in our coverage universe. So there are some credit quality concerns ahead, and they built their reserves pretty much in line with peers in the fourth quarter to address that.
I'm looking at the Spider S&P Regional Banking ETF. KRE is the ticker. It's off 3.45% today on this news, presumably. How much is this a New York Community Bank problem versus maybe a wider regional bank problem?
Yeah, so New York Community is really the last of the larger regional banks to report their fourth quarter earnings. And pretty much across the board of their larger peers, everybody is actually pretty sanguine about 2024 credit quality. So this seems more of a New York Community specific issue of needing to shore up their balance sheet and facing a blip on their credit quality that they need to instill some more confidence in the market ahead.
Do you think someone's going to ask a question to Powell about this today? Or do the reporters already have their questions planned out?
No, that would be a good one because it's certainly topical.
Yeah, I mean, what would the Fed, how would you expect Jerome Powell to react to a question on, like, does this signal more weakness?
Yeah, I'd assume he would say something to the effect that the banking industry is resilient and you've seen stability in deposits and strong credit quality for the industry. And New York Community specifically had an issue with the fourth quarter. But I would say overall, the banking sector has been really strong and resilient ever since that March and April turmoil, and stabilized deposits, increased their capital. The larger ones are shoring up capital and liquidity ahead of tougher rules, so it makes for a much sound and safer system.
So where are we? Like, how would you characterize the industry in terms of getting to where it needs to be in terms of their balance sheets, their credit quality? Because it was such a shock, I guess, a year ago when we had some of those regional banks kind of hit.
Yeah, so ever since that March and April timeframe, a lot of the banks have been defensive in nature. They've pulled back on lending. They've exited some loan portfolios, exited relationships that weren't profitable. Just been very conservative with how they lend and how they operate. So they've had 3 quarters of conservatism that they've built up their reserves. So they've done a very good job of addressing some of these issues. And aside from what's happening today with New York Community, I think the market's been pretty receptive to the actions that the bank management teams have done over the course of the past 3 quarters.
And where are we just in terms of, kind of repairing the earnings capability of these banks? Because that's kind of what you told us all along, that this was going to be more of a challenge from the earnings power of these regional banks as they deal with higher rates and so on and so forth.
Right. So we're getting towards sort of the end of the weakness in the top line. The pause in rate hikes last year has helped shore up the pace of deposit repricing. So the margins, the net interest margins for the banks are starting to stabilize a bit, and we're hoping that once rate cuts start materializing, the industry in the back half of the year expecting a resurgence in lending and improving top line performance and improving earnings. But really all this is predicated on if we get the rate cuts and if we get a soft landing.
How are investors supposed to be thinking about the dividend cut for New York Community Bank, slashing the payout to shareholders to 5 cents from an expected 17 cents?
Yes, so that's an interesting thing, because New York Community has historically prided themselves on having a strong dividend. Had a lot of insider ownership of the bank, and so the dividend was very key to them and to their shareholders. They do skew a little bit historically to a retail investor base as well. So this was a decision that the CEO said they didn't take lightly, and it was more of another step to build capital ahead of the tougher regulations. They're pointing to a CET1 ratio of 10% versus the current 9.2%. So earnings generation and the slashing of the dividend could help them get there by the end of next year.
So I'm looking again at that Spider S&P regional bank ETF, up 33% from the recent lows, back in October. Is that, but that they haven't retraced at all. I mean, when you talk to investors, do they still think, hey, with a Fed that's likely to cut rates in 2024, there's still room to go with some of these names?
Yeah, it does. There's stocks have rebounded about 30%, as you mentioned before. There's some upside if we get that loan growth in the back half of the year. So that's what the management team seemed to be pretty optimistic about. They talked about building, loan pipelines, and so that all of these anecdotes seem to be positive that lending, which is pretty much flat over the past couple of quarters, can really start picking up again once interest rates get lower. So that's the upside. The downside is, do we get a downturn in credit quality, and do rates sort of stay higher for longer? So that's where we are today with the push-pull of the bull and bear.
And what are the banks? What are the management teams? What have they been saying about their expectation for credit quality over the next 12 to 18 months? Are they taking higher reserves, or have they already done that?
They are taking reserves, but it's been pretty measured. So loan losses they continue to normalize. So they've been pretty low ever since the pandemic period, with all the stimulus that was sloshing around the economy. And now they're pretty much back to pre-pandemic levels, which were still low by historical standards. So they've been taking this time to build up their reserves a little bit more due to some of the issues that are facing the industry, like concerns about office commercial real estate and leveraged lending and apartment lending. So those are sort of like the hot button places.
But we haven't seen, let me ask it this way: have we seen a regional bank cut their, office, write down their office portfolio? Have you seen that yet?
We've seen reserves increase. So there's a wide range in the reserve level. So the most conservative are banks like U.S. Bancorp and Citizens that have a 10% reserve. And then on the other end of the spectrum, there's some that have only like a 4% reserve. So there's a lot of questions of how this all will shake out.
I don't know. I think this commercial real estate, particularly the office thing, when we start seeing trades happen, like just a random office building in Midtown, 3rd Avenue trade, I don't know what the haircut.
It's still vacant.
It's still vacant. I know. I mean, I don't know what these haircuts are going to be. And again, Barry Stern, like, who knows from real estate yesterday, he's saying he thinks that haircuts are going to be huge, like 50%. I don't know. We'll have to see. I wonder how the banks react to that. Herman Chan, thank you so much for that. We appreciate it. Herman Chan, he covers the regional banks for Bloomberg Intelligence, so he's been extraordinarily helpful to us as we kind of deal with some of these regional banks and some of the challenges that they are facing. And again, New York Community Bank today, surprise concerns there, cut their dividend, raised their provisions, and that stock's down 35%. S&P 500 is down about 0.8%. Right now, let's head down to Washington, D.C. We'll get world and national news with Amy Mars.
All right, thank you, Paul. The chief executive officers of the largest social media companies, Meta, TikTok, Snap, Discord, and X, are all facing admonishment by lawmakers during today's Senate hearing. The CEOs are on Capitol Hill. They're talking about the steps their companies can take to protect children online. Republican Senator Lindsey Graham of South Carolina called social media companies dangerous.
They're destroying lives, threatening democracy itself. These companies must be reined in, or the worst is yet to come.
Senator Graham says he worries that in 2024, quote, our democracy will be attacked again through social media platforms by foreign actors. A panel of Republicans approved plans to impeach Homeland Security Secretary Alejandro Mayorkas, setting up a historic vote on the House floor. Congressman Michael Guest of Mississippi says the Democrats are turning a blind eye.
When Republicans are investing in technology, we're investing in retention bonuses, where we're hiring more agents. To hear my colleagues across the aisle say that we're doing nothing to solve the problem.
This hearing comes as the Senate inches closer to a bipartisan deal on a border bill. Democrats call this a political stunt to help former President Trump's campaign. More than half of swing state voters would not vote for Donald Trump if he were convicted of a crime. A Bloomberg News Morning Consult poll finds that Trump's court appearances are helping his campaign, but if he's convicted, those numbers change. Bloomberg News national political reporter Gregory Cordy.
53% of swing state voters said they would not vote for Trump if he is convicted in one of these 4 criminal cases he's been indicted in. And of course, if he's sent to prison, even fewer would continue to support him. So that's the area of vulnerability.
Bloomberg News national political reporter Gregory Cordy. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Lots of red on the screen right now. Disappointing results for the mega cap tech stocks, sending the NASDAQ lower. You had results from Microsoft, they're down 1.4%. Google shares, they're down 6% after they open their books. We're going to get Apple tomorrow. Money moving into treasuries. There's renewed concern over regional banks. As you just heard from Herman Chan, the 2-year treasury yield, that is down 11 basis points. And then the Fed wrapping up its 2-day policy meeting this afternoon. What are they going to decide about interest rates? Well, that's the question we put to Bruce Kasman. He's the chief economist at JP Morgan Securities.
I think what they're going to do today is open a door, but make it very clear that they haven't decided when they're going to take the step to ease. And I think we've got 2 payroll reports between now and the March FOMC meeting. We got 2 CPI reports, obviously other data.
And then in the swaps market, traders increasing their bets on Fed rate cuts this year, with the potential for a rate cut in March now being priced with about 2/3 odds, and just yesterday it was 1/3. Right now, the S&P 500, 45 points lower. That's down 0.9%. We're at 4879 in the index. The Dow, 38 points lower. The NASDAQ 100, 252 points lower. That's a decline of 1.4%. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Emily and Paul.
All right, John Tucker, thank you so much. As always, Emily Graffeo, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We're also streaming live on YouTube, so you can head over to youtube.com. That's where you can find us there. Again, Fed Day today. This afternoon, we'll have full coverage of that. People aren't expecting a whole lot here, but maybe a little body language about maybe when they'll think about cutting rates. Let's check in with a pro here, Christina Hooper. She's a chief global markets strategist at a little firm called Invesco. Christina, I guess the consensus is don't look for really anything today, but is it too much to ask for maybe a little body language on what the Fed's thinking about future rate cuts? What are you looking for?
Well, we might get a little more than body language. I think Chair Powell tends to be fairly candid in the Q&A session. Even if he doesn't necessarily want to be, it tends to come out. However, I do believe there is a very distinct goal of the Fed right now, which is to keep a lid on easing financial conditions. And so I think he will try to err on the side of hawkishness, but I do think we'll get some glimmers of hope during the Q&A.
What do you make of some of the more recent data that we've seen? You look at employment cost index increasing at a slower pace than expected, ADP, these were both today coming in a little bit lower than expected. How is Powell going to be thinking about these signs that the labor market is softening?
I think they will matter to the Fed because it tells the Fed, this mosaic of data we've seen, is that we are still very much on the D train. And by the D train, I mean the disinflation train. In particular, the employment cost index is a very, I think, has historically been a rather accurate gauge. And it's one the Fed relies on to get a sense of total compensation. So that's important. We know that the Fed does react to the data. I go back to June of 2022 when they had messaged before the meeting that they would only hike 50 basis points, but then they hiked 75 basis points. And Chair Powell pointed to 2 data points, CPI and Michigan consumer inflation expectations, as pushing them to do 75 instead. So clearly data matters, and these data points continue to tell that same story.
You know, one of the many reasons we like speaking to Christina Hooper is that she, like me, is a fan of Cracker Barrel. How about that? You got to be right up there in front. I saw that in one of your notes here, Christina. So, Christina, given that backdrop of the Fed's going to be cutting rates, we're not sure when, but we got a pretty good conviction that they're going to be cutting rates this year. What's your how are you allocating capital these days? What are you telling your portfolio managers? What are you hearing from your PMs? How are you guys trying to position yourselves?
Well, first, Paul, I should say that I don't think it matters whether the Fed starts cutting in March or at the April 30th, May 1st meeting. I do think we're going to see more cuts than the Fed has suggested there will be in its December dot plot. So that's sort of the background. What I would anticipate is that we do see an economic slowdown, what I'll call a bumpier landing in the first half of the year. You can't have the kind of aggressive tightening we've had without some economic damage, but not a recession. And I think it's going to be really brief, and that we'll have a reacceleration sometime in the back half of the year. Markets tend to discount what they anticipate to happen with the economy. So I think what we're likely going to see in coming months is a stock market that is discounting that back half recovery. So I do think we're going to see some broadening. I think we're going to see small caps performing better. We're going to see cyclicals performing better. And I do believe the US dollar will resume its weakening, which should be a positive for asset classes outside of the US.
Okay, so broadening out in the equity market. What about on the fixed income side? Where are you seeing the most risk reward if we do get this slowdown, but a brief economic slowdown?
I think investment grade credit is that sweet spot because we are going to see something of a slowdown. We'll want quality, and I think it will benefit from an environment in which we're likely to see rates come down over the course of the year. But there's a lot of opportunities in fixed income, I have to say.
Yeah, I said that kind of the same thing, same time last year, and then investment grade just ripped last year. I mean, I'm sorry, high yield ripped last year. What do you think about high yield versus investment grade?
Well, high yield certainly is attractive, but I don't see it as attractive as IG right now. However, that could change. If we get a softer landing than I anticipate, and we see a stronger reacceleration in the back half of the year, that should be a real positive for high yield.
What do you make of the New York Community Bank news this morning? Maybe we could just get your initial reaction to like what this means for credit quality and the regional banking sector from here.
Well, I think we have to ask ourselves whenever we see a situation like this, is this contained or is this contagious? And as far as I know, based on what we've heard this far, it seems like it is very much a contained situation. Not that, I think far less significant than what we saw last spring. But of course, we're going to have to stay on top of this as the news unfolds and information unfolds. And of course, more earnings come out for other regional banks.
So, Christina, on the equity side this year, we're just about to finish out a pretty solid January to the market after a really good 2023. What are the sectors that you guys are spending the most time on these days in terms of opportunities?
Well, we continue to see opportunity in technology. I think technology as a long duration asset class is sensitive to long rates, and so it should benefit from an environment in which rates are falling. I also think tech is more defensive, has become a more defensive asset class in recent years. So it's going to hold up, in my opinion, relatively well, despite some of the recent disappointments around earnings announcements. But where we're focused as well is the cyclicals. Those are areas of real opportunity, especially if we see a nice bounce back in the back half of this year. We're also seeing a significant amount of investment. Legislation like the CHIPS Act is having an impact in cyclical areas of the economy. So that is a real focus for us.
All right, very good. As always, Christina Hooper, we always appreciate getting a few minutes of your time. Christina Hooper is the Chief Global Market Strategist at Invesco, joining us via Zoom from New York City. Always appreciate getting some of Christina's time here, sticking with tech. I would too.
Can't bet against tech.
I mean, please. I kind of sound like Dan Ives these days,
Yeah, easy. But you don't dress like it.
I don't dress nearly as snazzy as my friend Dan Ives. S&P 500 off 0.9%. The Dow's pretty much unchanged on the day. The Nasdaq's off about 1.5% here. Yields coming in, the 10-year Treasury down 7 basis points, 3.95% on your 10-year. WTI crude oil's off 2.6% now, down it's just under $76 per barrel. To fill up the car this weekend at the BP station on Route 35 in Walmart.
Company news headlines on Bloomberg Radio.
And I'm John Tucker with some of the companies we're following right now. Remember FTX? Well, maybe you'd like to forget FTX, but the company telling the judge who's overseeing the insolvency case that customers and creditors of the bankrupt crypto exchange who can prove their losses will likely get all of their money back. FTX, you'll recall, filed bankruptcy in 2022 after Sam Bankman-Fried shut down the crypto firm and handed control to lawyers and other insolvency experts. Now, since the company filed for bankruptcy, restructuring advisors have been tracking down assets. They've been trying to untangle a pretty complex web of debt owed to various creditors, including customers who put cash and crypto on the trading platform. Ameris Sports telling prospective investors it's considering pricing shares in its U.S. IPO below the marketed range. The maker of Wilson tennis rackets and Solomon ski boots weighing pricing the shares at $13 each. Ameris had marketed 100 million shares, remember, for $16 to $18 a share. That's according to the filing. Ameris Sports is backed by China's largest athletic apparel producer, Anta Sports Products, which owns brands including Louisville Slugger baseball bats. That's news to me. A Chinese company owning Louisville Slugger. Anyway, it's unclear exactly how he's going to pay for it, but media mogul Byron Allen extending yet another multi-billion-dollar takeover offer, this time a $14.3 billion bid to buy all the outstanding shares of Paramount Global. Allen offering $28.58 for each of the voting shares of Paramount. That's a 50% premium to the recent trading. And that is the latest company news. I'm John Tucker.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, looking at these markets right here, the S&P 500 is off 0.9%. The Dow Jones is pretty much unchanged. NASDAQ is where you're seeing some of the action here, off about 1.5% there on some of the weakness in some of the tech names reporting. Yields coming in 3.95 on your 10-year. And we're going to call out WTI crude oil because it is moving today, reversing some of the gains it's had over the last week or so, off 2.7%. So WTI crude oil just under $76 per barrel. Right now, let's head down to Washington, D.C. We'll get the world and national news with Amy Marsh.
All right, thank you, Paul. Iran warns it is prepared to hit back against any U.S. strike as President Biden readies a response to a drone attack that killed 3 American soldiers over the weekend. Bloomberg Middle East editor Patrick Sykes tells us what options the White House may be considering.
Going to be weighing up the relative risks of, at the very far end of the spectrum, a direct strike on Iranian territory, less extreme than that, an Iranian abroad, perhaps a member of the IRGC who's involved in supporting the proxies that the US has blamed, and then one remove from that, targeting the proxies as well.
Bloomberg's Patrick Sykes reporting from Istanbul. Iran insists it was not involved on the strike in Jordan. House Speaker Mike Johnson will allow a vote today on a $78 billion bipartisan tax bill. Bloomberg Government's Jonathan Tamari reports this puts him on the side of corporations over a group of Republicans who had objected to the package of business and child care tax breaks.
It looks like there's probably enough bipartisan support. We understand that the speaker is going to put it forward under a system where they don't need to pass the rule that really goes through Republicans. They can get bipartisan support to pass this, to clear that procedural step. And if they're putting it on the floor, they must think they've got enough votes from both parties to get it over the line.
Bloomberg Government's Jonathan Tamari reports the bill would need to pass with a 2/3 majority. Russia's defense ministry says Russia and Ukraine have exchanged 195 prisoners of war each. The announcement comes a week after Russia alleged that Ukrainian forces shot down a military transport plane carrying Ukrainian prisoners of war who were to be swapped for Russian POWs. And the CDC is warning of a syphilis resurgence nationwide with the highest number of cases since 1950. The CDC says more than 207,000 syphilis cases have been reported in the U.S. in 2022. That is an 80% increase since 2018. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. Paul and Emily.
All right, Amy Morris, thank you so much. We appreciate it. Emily, here's a story that got my attention. Ken Griffin, big hedge fund dude, he wants to exert more influence in Florida politics. One of his top priorities, stopping new casinos in his backyard. The state's second richest person is opposing a bill that would allow new gambling venues in South Florida cities such as Miami Beach and Doral, home to the Trump National Resort. Quote, allowing casinos to harm thriving communities and undermine Florida families is like willingly dumping toxic waste into the Everglades, Griffin wrote in a letter to the Miami Herald. So he just recently moved down there. He's bought a ton of property, moved some of his business down there. He's a player.
He's not exactly concerned about actual toxic waste, right?
No,
this is not an environmental.
No, he just doesn't want the casinos
He
there.
doesn't want the casinos. He doesn't want gamblers, I guess.
Yes. I mean, the Citadel founder, worth $36.8 billion, according to Bloomberg Billionaires Index. Rich Go, by the way, on the Bloomberg terminal. He moved to Miami in 2022, relocating parts of his business and snapping up real estate, including almost $200 million in Miami Beach's Star Island. He described the casino proposal as, quote, gimmick created by lobbyists and special interest groups that blatantly disregards our voice as voters and puts Florida's momentum at risk. Filed this month by Republican State Representative Alex Rizzo, the bill would allow casino operators to relocate their current permits to new locations within 30 miles, circumventing local restrictions. That would allow real estate mogul Jeffrey Soffer to create a gambling venue in the luxurious Fontainebleau Hotel in Miami Beach. So I actually kind of thought there always was a
A lot of
Miami
scene,
Beach.
right?
But I guess it's just elsewhere in the state, but not necessarily in Miami Beach. And Ken Griffin's like, hey, this is my home here. You know, I can't go down here, and I could probably get my opinion heard. Right now, we've got Balance of Power. That's coming up with Joe Matthew right now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
The swing states are swinging harder for Trump. Welcome to the fastest show in politics, as the latest Bloomberg poll of 7 critical states shows Trump leading President Biden thanks in large part to voters' frustration over immigration. We're going to dive into the numbers this hour with the help of Bloomberg's Laura Davison and Eli Yoakley from Morning Consult, our partner on the poll. Later this hour, do we need a new CHIPS Act? The last one left out some pretty key components here. And we're going to discuss the national security implications with David Child of the Printed Circuit Board Association, a conversation you'll only hear in Washington and here on Balance of Power. It all starts after a look at Wall Street. Let's go to New York for an update now from Charlie Pellet. Hey, Charlie.
Well, hello there, Joe Matthew. We are looking at a mixed day for the U.S. stock market right now. Dow Jones Industrial Average advancing by 15 points. S&P, NASDAQ, they are both in the red right now. Just under 2 hours to go until we get the Fed decision. Of course, 2:30 Wall Street time, we will have Fed Chair Jay Powell's news conference for you live right here on Bloomberg Radio. U.S. Treasuries rallied as data this morning showed hiring slowed at a faster than expected pace. 10-year right now, 3.96%. The 2-year, 4.22%. Gold up $13 the ounce, now at $20.50, higher by 0.6%. We've got Bitcoin today down 0.1%. Little change, 43,515 on Bitcoin, while West Texas Intermediate crude is retreating down 2.1% right now, 76.20 for a barrel of WTI. Lots of economic data today, specifically on jobs, and with that story, here's Bloomberg's Vinod Judice.
There's more evidence inflation is easing. The Employment Cost Index, a gauge of wages and benefits, moderated in the fourth quarter, rising at the slowest pace since 2021. Separate data from the ADP Research Institute show U.S. firms added a smaller than forecast 107,000 jobs in January, while income growth slowed. Looking ahead, the government issues official January payroll data Friday. Vinny Del, Judice, Bloomberg Radio.
Lots of weakness in tech stocks today after last night's batch of earnings reports. Microsoft down 1.2%, Alphabet lower by 6.3%, Advanced Micro Devices, AMD down 2.7%. New York Community Bancorp shares are plunging. That's the regional lender that bought deposits from Signature Bank last year. It fell a record 45% after reporting a surprise loss for the fourth quarter and a cut to its dividend. Right now, New York Community Bank trading lower by 35%. Recapping, stocks are mixed. S&P down 39, down 0.8%. I'm Charlie Pellet. Joe Matthew, that is a Bloomberg Business Flash.
All right, Charlie, we thank you, and good to see you in New York. We'll get back to Charlie for more updates on Wall Street throughout the 2 hours here that we're going to be talking about politics. Live from Washington, Kaylee Lyons off today. And greetings on this Wednesday edition of Balance of Power as we start with Bloomberg's poll that's making waves throughout the campaign cycle here. We're doing this month to month, tracking 7 critical swing states, and the latest now out. We ran this poll between Iowa and New Hampshire, and the findings are not great for Joe Biden as we see Donald Trump continuing to lead the president in these states that will likely decide the election. We're joined by 2 experts to talk about this. Here inside the Bloomberg newsroom in Washington, Laura Davison, who's got her fingerprints all over our reporting here. It's great to see you and great work, Laura. Also from Morning Consult, our partners on this poll, Eli Yoakley, the political analyst. Eli, it's great to see you. Thanks for being a part of the broadcast today. What are we learning here that is new, Laura? You've added a legal component here as I read are reporting at Bloomberg, it's not just the horse race you're talking about, but how voters in these important states might react to a conviction or even a prison sentence, which is incredible to say out loud about our former president.
Yeah, so as you mentioned, the top line here, the horse race is not good for Joe Biden. He is trailing Trump in all 7 of these swing states that we're looking at. And these are the states that are going to decide the general election, most likely.
Do you want to start there and see what these
we
look like?
We can, but here's the flip side. On the legal issue, that is one of the few bright spots for Biden in this poll and one of the few dark spots for Trump. It shows that in these swing states, 53% of voters say they would not vote for Trump if he's convicted of a crime. So that's not great. I mean, obviously that's not a huge majority that isn't necessarily handed over to Joe Biden. It's also important to note that it is not certain by any means that there will be any sort of conviction before Election Day in November. There's 4 different cases pending, but there's a lot of delays, and Trump, of course, is the master of delays and stalling tactics. So he could, this data point is only relevant if there's a conviction, which there is no certainty of that.
We don't even know when a trial might start. In fact, Eli, it's good to see you. Welcome back. Just to add on to what we were just talking about here, 23% of swing state Republicans say they would not support Trump if convicted. What does that number tell you about the way voters are watching these trials, most of which have yet to unfold?
It lines up pretty closely with what we're seeing in our national tracking of the primary, which shows that about 1 in 5 Republican primary voters still don't back Trump. Clearly, there's a chunk of the Republican electorate that's still wary of this guy. I think the number that stood out to me the most on this question was the fact that 8% of people who are saying right now that they're planning to vote for Donald Trump would be very unwilling to do so. Right now, it's Joe Biden who has a big base problem in the general election electorate. That's something we've seen month after month in our surveys with you in the swing states and in our national tracking. This could help negate that for Biden when it comes to Trump. It could help weaken a chunk of Trump supporters and open them up as we look forward to November. It's not certain. And the other thing is timing matters a lot in politics when this is top of mind for voters. But clearly it's a vulnerability for the former president.
Let's be a little more specific here on the states, Laura. We're talking in all of these polls that we've been running with Morning Consult: Arizona, Georgia, Michigan, Nevada, North Carolina, Pennsylvania, Wisconsin. Trump is ahead in all of them in a hypothetical matchup. Some more than others. We see a 3-point spread in Arizona, but a 10-point spread, for instance, in North Carolina. Give us a broader view on why these 7.
So these are the states that historically have been the decision makers, as well as states that Democrats, like North Carolina, for example, have kind of been eyeing as states that they may be able to win in the future. Obviously, a 10-point spread is not a good sign for Joe Biden, at least right now. But this is really a worrying sign. We've been doing this poll for a couple of months, for Biden at least, in that he is trending downward. When we first did this poll, he was tied in Michigan. He was up in a handful of states, but we've only seen this gap between Trump and Biden widen, all in the favor of Trump as we've been doing this since November.
Amazing. And it seems, Eli, that Donald Trump has the border issue, immigration issue at his back here. What did we learn, and what does Joe Biden need to worry about? We just came from Iowa and New Hampshire, where immigration, the border, topped the economy by a long shot for voters, Republican voters in both states.
I mean, the border issue, immigration generally, has been a problem for President Biden since day one. Even when he was pretty popular with the electorate, more voters than not disapproved of some of his early executive actions on this. Clearly, this is a spot where Republicans have an advantage. And as we've seen the numbers, as folks are less likely to cite the economy as their number one issue and forced to pick one, the uptick has gone to immigration. And I think you're seeing Republicans right now jumping on this pretty heavily with the efforts to impeach the Homeland Security Secretary. It was going to be interesting to watch moving forward. I mean, right now, Joe Biden, more voters blame him than any other domestic actor for the state of the border. The question we're going to be watching is if conservatives listen to Donald Trump on Capitol Hill and kill this immigration compromise measure that's emerging from the Senate, will voters take notice? And what will President Joe Biden do about it? I mean, right now, only like 14% of swing state voters blame Republicans in Congress for the situation at the U.S.-Mexico border. It's about the same as who blame Trump. The Biden campaign, the White House, had a very good case to make that Republicans in Congress and President Donald Trump are to blame for something not happening to fix this. The question will be whether voters are willing to listen or whether they care about some of this inside baseball that's playing out in Washington right now.
This is really smart. And Laura, I don't know about you. You wear a couple hats around here. You spend time covering the Hill. I'm just not sure I have a lot of enough faith in the messaging machine coming from the Democratic side on this to get people's attention to realize in the minutia of this process that there's some sort of blame game going on here that might favor Democrats. But let's talk about these numbers. 61% of swing state voters say Joe Biden is at least somewhat responsible for the wave of migrants at the border. 30%, in contrast, blame the Trump administration. 38% congressional Republicans. There's a lot of work to be done, a lot of wood to chop for Democrats there.
Yeah, immigration is not an issue that Democrats naturally want to talk about. And they realize, the White House realizes there's a problem here. But Republicans certainly want to talk about this, and they have been talking about it. And there's been this deal on Capitol Hill, a bipartisan deal that they've been trying to hash out in the Senate. But just in the past couple weeks, we've started to hear rumblings from Republicans being like, whoa, 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 let's not cut a deal. This is an issue we want to run on. And if we hand Joe Biden a win, that takes away a lot of our leverage. We even saw James Langford, Republican from Oklahoma, who was helping broker this deal in the Senate, was censured by his own state party because they were saying, look, he's giving things to Joe Biden, giving things to the Democrats. So this is really kind of where you see the divide of Republicans see this as a winning issue, and this poll really bears that out. They're able to come out on top here, and they want this to be an issue. You see this talked about on Fox News. You see that's borne out on the data. We call it sort of a Fox News effect here. Republicans, 65 and older, particularly men, see immigration as a top issue, and it's only rising.
Well, the Speaker says it's DOA in the House after all the work that Langford, Sinema, Murphy put together, never mind a guy named Mayorkas who's apparently going to be impeached in the next 7 days. Those were the people at the table, and I wonder your thought on where Eli is going here. Let's say this deal really falls apart. Democrats start blaming Republicans. Do the numbers move in our poll?
It's possible. It certainly hands Democrats the argument to say, look, Republicans aren't serious on the border. They don't want to find solutions. They don't want to govern. They just want to have this be a political issue, and real people are suffering in the interim. Whether that message resonates. We've seen it time and time again. Biden just can't get credit for anything, and this could be another one of those situations.
Well, I'll tell you what. You start looking at this more broadly, Eli, and I don't mean to put words in your mouth here, but when you see Joe Biden losing to Donald Trump, realizing this is hypothetical and we're early on here, in all 7 of these key swing states that you've seized on in our poll, what you're telling our viewers and listeners is that if the election were held today, Joe Biden would lose, right?
Yeah, I mean, that's what we saw last week. We saw Donald Trump's strongest standing in our national polling that we're conducting every day here. Clearly, Donald Trump isn't in the driver's seat of the general election, just like he is in the Republican primary, or at least what exists of it still. Joe Biden has a big base problem. It is something that he could try to recover from. It seems like the easiest way of going about this. But, I think as we look ahead and Donald Trump starts to take more center stage on the minds of the American people who haven't really been tuned in to a lot of its legal problems, a lot of the things he said during the Republican primary, a good chunk of the electorate we're going to be watching is the folks who don't like either candidate. And it's a good chunk of the swing state voters. And this might be the one good thing that we're starting to notice in this polling for Joe Biden. It's that since we started doing this in October, the share of these double haters, as I think Amy Walters from the Political Report calls them, who back Joe Biden has been increasing, and the share who backed Donald Trump has been decreasing to the point where Joe Biden has a bit of an advantage with these voters. A lot of them are still on the sidelines. I think those are the folks we're going to be keeping our eyes on in the coming months as we continue to do this.
Yeah, this is, the moment that No Labels has been waiting for. And I feel like I need to ask you about RFK Jr., because maybe we're not talking about him enough. He raised $7 million, Laura, in the last quarter. I heard as much about RFK as some other candidates on the trail in both Iowa and New Hampshire. In New Hampshire, he's resonated quite a bit with potential Trump voters. What kind of an impact could he have if it is a Trump versus Biden race?
So what polling has shown is that he's polling relatively equally between Trump and Biden, but as his name ID gets higher, as people kind of understand more, his policy issues certainly would seem to pull more from Trump supporters than from Biden supporters. One caution, though, he did raise $7 million. That's not too shabby, but he spent 7.7. So, he's spending more than he's brought in, but he's been able to appeal to, sort of a swath of the donor class, crypto folks, other folks who have been giving him money. But, as we see the race consolidate, there may be, and people are kind of in this point where they're going out of wishing season. Here's who I'd like to have run to, okay, it looks like it's going to be Trump and Biden again, and I need to, either get behind one of them or just throw my hands up and not vote.
The donor split is fascinating to me because we're getting fundraising numbers now. Eli, we'll get more today from the FEC filings. But of that 7 million I mentioned, it breaks down in an interesting way. 5 million came from itemized donations greater than $200. Roughly 224 grand of those itemized donations were from donors who had given to Trump in 2020. Just over 100,000 came from donors to Joe Biden's last campaign. Should we be paying more attention in mainstream media coverage of this campaign to RFK Jr.? We certainly see Democrats get real upset when no labels comes up. Eli, how about RFK Jr.?
I think the data suggests that over the long term, that RFK could probably end up being more of a problem for Donald Trump. I mean, the kinds of things he talks about on the campaign trail, the kind of conspiracies that he's leaned into are much more attractive to the kind of voters who we think would be inclined to support Donald Trump moving forward. The thing to watch here is the fact that every time we've surveyed in these swing states, RFK Jr. has gotten more famous and more popular. People are taking note of him on the ground in the way they aren't other candidates like Cornel West or Jill Stein. He's got quite an advantage when it comes to attracting voters' attention. The question's going to be in November whether they're willing to pull a lever for him.
You also wonder the contrast. If we had three, and this is possible, candidates on stage in the general election debates, assuming Donald Trump shows up for them, imagine that stage with Joe Biden, Donald Trump, and RFK Jr., and the impact that would have optically on this race.
And it would change the dynamic drastically. Both that gives another option. It also gives permission for people who, if you're just looking at a binary like we were in 2020, people pick one. If if RFK Jr. is there, then maybe you see Miriam Williamson or Cornel West or some of these other candidates. People say, oh well, if Republicans kind of have their second place option, maybe I could pick someone else, and that totally blows open the whole race. We know this is going to be close.
Sure.
A couple percentage points matters a huge deal.
Well, that's right. My gosh. You get three on that stage, Eli. You do a Ross Perot, you get 20% here, or 19%, and that's the race, potentially. Fascinating. We'll do this again in a month. Is that right? We're doing a monthly roll here.
Yep, every month until the election day.
I want this exact same panel for next time. Laura Davison, we rely on you, and thank you for great reporting. And Eli Oakley, of course, our partner at Morning Consult. Great to see you, Eli. Thanks for the deep dive on the numbers. We have a lot to learn, and we're going to compare notes later in the program with our panel, Rick Davis and Jeannie Shanzano. Up ahead, do we need a new CHIPS Act? The last one left some important stuff out that we're going to talk about next here on the fastest show in politics. As I mentioned, we'll have the panel a bit later on this hour, and it's Fed Day. Special coverage starts 1:30 p.m. Washington time, as you would expect, here on Bloomberg.
Bloomberg World Headquarters. I'm Charlie Pellet. 1 hour, 38 minutes to go until the Fed decision. 2 o'clock Wall Street time, 2:30 Wall Street time. We've got Jay Powell's news conference for you live on Bloomberg Radio and television. Treasuries rallied as data showed hiring slowed at a faster than expected pace, and the shares of a New York bank, New York Community Bank, tumbled after it reported a surprise loss, raising concerns about the health of regional lenders. Here's where we stand. We've got the Dow higher now by 18 points. That's a gain of less than 0.1%. Little change right now with the S&P 500 index in the red, down 39, drop there of 0.8%. Nasdaq Composite Index now down 211 points, drop there of 1.4%. This after earnings last night from Microsoft, Alphabet, and AMD. 10-year 3.95% with a 2-year at 4.22%. Gold up $12 the ounce, higher by 0.6%. And West Texas Intermediate crude now down 2.2%, $76.12 a barrel. So we will be getting the Fed decision at 2 o'clock Wall Street time. As for what to expect, here's Bob Michael, Chief Investment Officer for Global Fixed Income at J.P. Morgan Asset Management.
Today is the best day ever for the Fed and Jay Powell to walk in and give a 30-second press conference. He should walk in, survey the room, and say, 6-month annualized rate of core personal consumption expenditures, 1.9%. 2% inflation target met.
And again, you can hear the news conference 2:30 p.m. Wall Street time right here on Bloomberg. Boeing shares are rallying up 6.4%. Boeing declined to give financial guidance for 2024, sending a message to investors that it is focused squarely on addressing a troubling string of quality slips. Again, recapping, stocks are trading mixed. Right now we have got the S&P lower by 40 points, down now by about 0.8%. I'm Charlie Pellet. That's Joe Matthew. This is a Bloomberg Business Flash.
All right, Charlie, we thank you and appreciate your being with us here on Bloomberg Radio, on the satellite, and on YouTube. This is Balance of Power, the fastest show in politics. I'm Joe Matthew in Washington. Been hearing a lot lately about reshoring as the chip companies deliver their quarterly earnings results. Been hearing a lot about money being doled out as well. Big grants for the chip makers from the CHIPS Act. This is the first big chunk of that $39 billion in grants that we talked about during the debate around this bill. And you know, lawmakers love to take credit for the CHIPS Act bringing manufacturing back here in the U.S. The problem is if you don't bring the whole chip here, you still have to go back through Asia. In a fascinating conversation we had just about a year ago with David Child, who specializes in this at the Printed Circuit Board Association of America. He writes in National Defense. Just try to get your head around this. Remembering we're reshoring chip manufacturing here domestically. You hear Intel and even Taiwan Semiconductor talk about their plans for massive foundries here in the U.S. Consider this. As David writes, what was lost in the legislative process was the rest of the microelectronics stack. Substrates connect a computer chip to a printed circuit board, which in turn connects to an electronic device. Chips don't function without those two components. And we now make only 4% of the world's supply of PCBs and less than 1% of those substrates. They're not in the CHIPS Act. David writes what this means is most of the new U.S. chip fabrication facilities, this is the part where your head explodes, now being built with the CHIPS Act funding and private investments, will still be shipped back to Asia to be assembled. And he's with us now. David Schild, it's great to see you in Washington. Thanks for coming in.
Thanks for being here.
You're the executive director of this association. Do you have ears on Capitol Hill?
Yeah, we're seeing encouraging signs. The CHIPS Act generated $52 billion in taxpayer funds as an investment in semiconductors, but the private sector is putting its own money at the table. It's generated almost $450 billion in private commitments, and we think that the private sector will follow public action. We need the same initiatives for the rest of the technology stack.
And that would be a similar investment by the government? Or are we in that $50 billion range for the rest of the stack?
I think we can do it for a lot less. We've got, yes, bipartisan support for the rest of the technology stack. That's printed circuit boards and integrated circuit substrates. There's a bipartisan bill in the House, and we hope to have companion legislation soon in the Senate.
So for the not so tech savvy listening or watching, this is like the green piece of plastic you put the semiconductor on, right? That's part of the, people can picture a circuit board in their head. And those other components in the stack, where are they being made? Let me guess, China and elsewhere in Asia.
Sure. Printed circuit boards are actually a complex laminate of woven glass, copper foil, and other highly engineered materials. And they really make everything possible, from F-150s to F-35s, everything has a circuit board, an IC substrate, and of course that all-important semiconductor. And you're absolutely right. Over the last 30 years, what we've seen is a severe contraction in the ability of the United States to manufacture these technologies. 30 years ago, we had 2,200 companies making printed circuit boards. Today, we're down to less than 150. And as you said, now, instead of having 30% of global market share, we have 4% of global market share. So it's a really steep slide that we need to reverse.
How many members do you have?
We've got 50 members, and we're growing every day. Our industry saw during the CHIPS Act 3 years ago how important government action was, and that's why we were founded.
So where are lawmakers on this? There was a big debate over the CHIPS Act. This thing took months and months. You and I talked about this in the process, but you didn't get the acknowledgement from Capitol Hill.
I think the CHIPS Act was a very important down payment. It was a very important first step. Now we need to finish the fight. Now we need to invest in the rest of the technology stack. Lawmakers hear this. They understand how we can't have foreign dependency in these critical national security supply chains. So we've seen a lot of positive indications on Capitol Hill.
Talk to me about the scale of this whole industry. People think chips, they think about their laptop computer, their phone, maybe an EV. You're talking about jets and missiles here. How far-reaching is this?
Printed circuit boards and integrated circuit substrates are ubiquitous. Without that full technology stack, most of modern life isn't possible. And so, our chip makers would tell you, we have 13% of the world's supply made here in the United States. That's unacceptable. We need to grow not just capacity, but we need to innovate. We need to make the next generation of semiconductors here in America. We would say the same thing about the rest of the microelectronics stack. Let's build the boards and substrates of the future right here in the USA.
Did you come up with F-150s to F-35s? Whoever came up with that should get a raise. That's
I appreciate
very good.
that. Thank you.
Now, but you're writing in national defense. There's a reason for that.
Yeah, absolutely. Almost every critical national security system has these technologies as a core of what makes them the world's best. And what we're seeing in the recent National Defense Industrial Strategy is the Pentagon saying to Congress, we have identified gaps in our supply chains, we have identified single points of failure, we've identified weaknesses. Now we need to act to correct those, to make sure that we can get the raw materials that we need, the complicated microelectronics that we need, to fund the systems that keep our men and women safe.
Is the Pentagon an ally? Are the defense contractors allies in this movement?
Absolutely. I think everybody wants secure and resilient supply chains. Everybody wants to make sure that we're working with partners and allies to deliver these goods and services. And I'm encouraged by what you're seeing with the Assistant Secretary of Defense, all the way up to the Secretary of Defense. I think there's an understanding now that looking inside our supply chains and asking hard questions is going to lead to real action.
Yeah, look, we talk about what would happen if Taiwan were cut off. It's a little more nuanced, I guess, when it comes to these printed circuit boards and the other components that we're discussing, because a bad conversation between President Biden and President Xi can lead to a disruption here. We've seen certainly the impact on components that NVIDIA is making, the ASML story. These can creep out of nowhere. It doesn't, I guess my point, only take a blockade to cause a disruption here.
No, there are natural and man-made disasters. The COVID-19 pandemic was really a wake-up call about the fragility of many of our supply chains. Just in recent weeks, we've seen seaborne transport be disrupted in a way that I don't think anybody really anticipated. So it's an argument to make more of what we rely on right here at home.
Well, so to that end, how long would it take to reshore this technology? The type of proposal you're looking at, what would this legislation look like?
Well, it's taken 30 years to create this problem, and it's not going to be done in 30 days or maybe even 30 months. But the key is that we need to start now.
Well, I know it takes years just to open a chip foundry. I'm guessing you wouldn't have that.
This work back on shore. Secretary Raimondo has talked about manufacturing nodes. And what I think she's referring to there is a concentration of technology that brings you that end product. And so if you're going to build a chip factory in Arizona, why not make the substrates? Why not make the PCBs right there as well?
You shouldn't have to guess what she means by that, though. Are you in a dialogue with the Commerce Department?
Absolutely. They're very supportive of an expanded view of microelectronics manufacturing. I think they need to implement the CHIPS Act as it was written by Congress. But that's why we're working with a bipartisan coalition to bring forward our own legislation. It would fund at billions of dollars direct investment in PCB and substrate factories, and very importantly, it would bring a tax credit to the table for the OEMs, for the purchasers. It creates that Buy American demand signal that's so critical for our industry.
Well, that's important, and this would be for U.S. makers only, I presume.
It would be for anybody making chips and substrates and boards, boards and substrates in the United States, and it gets us back to a cost-competitive position with Asia.
What's this coalition look like? How many people do you have on board? What's the geography look like?
You know,
Is it
we're
the
in
states where your makers are located?
Absolutely. PCB factories and substrate factories are all over the United States, sometimes in places that you might not expect. And that diverse coalition obviously brings us a good political footprint.
It's quite a story. And I suspect you're going to be sitting in front of the China Select Committee at some point. Is this on Chairman Gallagher's radar?
Yeah, absolutely. You know, that committee has recently released a report talking about 150 critical technology areas, critical imperatives where we need to lead the United States. Number one, top of the list, our capacity to make microelectronics, including printed circuit boards. The committee's very aware of this issue, and we're hoping to talk to them soon.
The chip makers have got to be behind you on this, right? They need these components to do their work.
Yeah, absolutely. You know, they're focused obviously on what the CHIPS Act brings to the table for the direct investments we're seeing. Right, we're seeing these factories come online in places like Ohio and Arizona. They're focused on expanding capacity. We've got to be a partner for them in this.
Well, I'm glad you could come talk to us about it again. We'll stay in touch with David Child. It's the Printed Circuit Board Association of America. Yes, there is one. A conversation only here in Washington. David, it's good to see you, and thank you again for your time here.
Great to be here.
Let's turn to world and national news before we assemble our panel. Nancy Lyons has that in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Hey, Joe. The CEOs of 5 of the top social media companies are being grilled by the U.S. Senate today about child exploitation on their platforms. They've been accused of filling children's feeds with posts promoting eating disorders, suicide, drug use, or sex abuse. Senator Dick Durbin is the chair of the Senate Judiciary Committee.
Today's smartphones allow users to make and receive calls and text, but they can also take photos and videos, support live streaming, and offer countless apps. With the touch of your finger, that smartphone that can entertain and inform you can become a back alley where the lives of your children are damaged and destroyed.
Durbin says it is no coincidence that in the past week, ahead of today's testimony, several of the social media companies have taken new steps to address child exploitation. FBI Director Christopher Wray is sounding the alarm that Chinese hackers are preparing to target Americans. During congressional testimony, Wray warned that Chinese hackers are already working to target critical infrastructure, including water treatment plants, electricity, and natural gas pipelines.
We cannot afford to sleep on this danger. As a government and a society, we've got to remain vigilant and actively defend against the threat that Beijing poses. Otherwise, China has shown it will make us pay.
Wray says China has the largest hacking operation in the world, outnumbering the FBI's hacking experts by 50 to 1. He says his agency needs more funding to address the growing risks. Drought-stricken New Mexico is teaming up with Google to hunt for leaky water pipes using satellites. State officials made the announcement as they rolled out a 50-year plan for addressing dwindling drinking water supplies. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet. 1 hour, 20 minutes to go until the Fed decision. 2 o'clock Wall Street time, 2:30 p.m. Fed Chair Jay Powell's news conference. You'll hear it live on Bloomberg. Claudia Sahm is a Bloomberg opinion columnist and the founder of Sahm Consulting. And she told us this morning she would like to see a cut today, but says that's not going to happen for months.
They should be cutting this afternoon. Frankly, the case is there. Inflation is coming down. We're headed to dual mandate. Nobody's asking for 200 basis points this afternoon, right? 25 basis points, get moving. And yet I see May as the absolute earliest that the Federal Reserve is going to cut.
And you can hear more of the conversation with Claudia Sahm on the Surveillance podcast. You can download it wherever you get your podcasts. Stocks are lower across the board. The Dow, the S&P, NASDAQ all declining. Weakness in tech after earnings last night. Right now we have got the S&P down 43 at 48.81. A drop there of 0.9%. Dow Industrials right now lower by 8. Little change, down less than 0.1%. NASDAQ Composite Index down 220 points right now. That is a drop of 1.4%. 10-year 3.95% with a 2-year that's yielding 4.22%. Gold up $13 the ounce back at $20.50, a gain of 0.6%. While West Texas Intermediate crude down 2.3%, 76 even a barrel on WTI. Walmart says it plans to build or remodel about 800 stores in coming years as the world's largest retailer seeks to reach more customers and fuel growth. Right now we've got Walmart up by about 0.3%. Recapping, stocks lower, S&P down now by 0.9%. I'm Charlie Pellet. That, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, thanks. I appreciate your being with us here on the fastest show in politics. On the radio, on the satellite, and on YouTube. I'm Joe Matthew in Washington as we assemble our panel now. It's not that often we get breaking news headlines at 1 o'clock in the morning from Capitol Hill, but that was the case in the wee hours today. Good thing I don't sleep very well because I saw it pop in. Impeachment coming out of the Homeland Security Committee, voting just past 1 in the morning to advance articles of impeachment against Alejandro Mayorkas, the DHS secretary. With us now, Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors, their take on this, because I guess we saw this coming, and it's a curious bit of timing here with Alejandro Mayorkas being involved in negotiations over a border deal. Rick, was this appropriate timing? It looks like it's going to the floor next week.
Well, it's all part of this broader political effort to try and make this whole issue at the border number one, and we've seen in the recent Bloomberg poll that was just released today how that is now the case, that in many of these swing states, immigration is the number one issue. So this part of it is working, but like, as you point out, a 15-hour congressional committee hearing that ends at 1 a.m. I mean, we only see those when they're voting for appropriations, spending taxpayer money. This is quite unique. And so Republicans are railroading this in. It was a straight party line vote. The question now is, can, the Speaker Johnson actually hold all these Republicans in an actual floor impeachment? Because there are a lot of Republicans that were concerned about this, that we haven't really made the case that it's, politicizing impeachment, and that it could unleash impeachments for any cause in future administrations. And so there is some concerns as we move forward in this process.
Jeannie, indeed, it was a party line vote, 18-15. Op-ed in the Wall Street Journal this morning. A policy dispute does not qualify as a high crime and misdemeanor. What are we in for when this hits the floor next week?
Yeah, as James Madison liked to say, policy differences does not a high crime and misdemeanor make. He really didn't say that, Joe. I just said it. But this is what we are facing. It is a futile effort on the part of the Republicans in the House. They are politicizing impeachment over policy differences, not even letting Mayorkas testify in front of the committee. And these are folks who I agree with John Thune. You want a new Homeland Secretary, you should win elections. That should be their focus, because this is a futile effort. Even if Johnson is able to keep the House together and keep his caucus together and get this thing passed, Can you imagine the Senate being required to hold an impeachment trial in the Senate now? How much energy and time that is going to take? If there is a crisis at the border, and there absolutely is, wouldn't we be better off legislating that and passing the bill rather than this futile effort at impeachment? The Republicans know that this is a political show, and they may pay the price for it in a way they don't expect.
Well, I'm starting to wonder if this is going to be the ultimate action that's taken on the border here. There's still no text out from negotiators who say they're still working at it. And lawmakers are getting ready to leave town for 2 weeks. Rick, are you giving up on a border deal?
No, I'm not giving up on a border deal being voted on in the Senate and passed. There's a meeting literally going on right now in the Senate, policy lunch, that they're trying to hash out whether or not they have enough Republicans to move forward with this bill. And so if they do, I think you'll see this emerge before weekend.
What is apparently going to move is a tax deal. This looked like it might be held up by Republicans in your state of New York, Junie. There's not any salt in this deal, but pretty interesting to see Speaker Johnson turn away from the New York delegation. He says he will bring this $80 billion tax bill to the floor today, and it looks like this is going to pass by a wide margin. You know, people listening to and watching Bloomberg are obsessed with salt. If not now, when, Jeannie?
Well, I have to confess, I am one of them. Being a New Yorker, this has been a huge, huge challenge for us in New York. And so the New York Republicans are critically important to, of course, Johnson, because they are the majority makers in the House. And so he does have to think about their interest. And we may see them do something like move a parallel bill to address salt relief, which again is something I joined the Bloomberg community of watchers in being obsessed with. But it does look like this bill, it's bipartisan, bicameral as it stands, is going to pass by a wide margin. It has to, because it has a 2/3 vote requirement, because it's under suspension of rules. But it does look like it's going to pass, and it is important, the child tax credit expansion, in terms of helping to address the critical issue of child poverty.
Did we learn anything about the speaker here, Rick? He sat down with New York lawmakers who were very upset. By the way, they're still threatening to disrupt floor action over this. Is it a good moment for Mike Johnson to say, no, we're doing this the way everyone planned here? It's going to pass by a wide margin.
Yeah, he can stand up to moderates from New York, but he can't stand up to right-wing extremists from the South. I mean,
yikes!
Look, I mean, this is a tax bill. It helps small business and children. I mean, like, you'd have to be nuts not to want to move this. And I get, while you know the New York delegation and some of the California Democrats want to see assault included. You know, they've tried to attach that to everything they can get their hands on for the last 2 years, and it hasn't been successful. So at some point, I think you got to wave the white flag and say, until Democrats get control of all three chambers, the White House, the Senate, and the House, you're not going to see any movement on this bill.
Wow, amazing! It's amazing something gets done. I guess it says a lot about where we are here, that this is something to celebrate, Jeannie. I guess the question is the store closed after this? What else passes this year after a tax deal?
Well, you know, I was just listening to the hearing with the social media companies. I would love to see something passed on that. So there may be other areas of bipartisan and bicameral support, if not protecting our children from social media companies. I can't imagine what else. And I would just remind Rick, those were New York Republicans. We're all suffering here in New York, Rick, on the salt. This is my big stand, so please consider it.
You're not done yelling about it either. Boy, talk about an issue that will not go away, and half the country doesn't even understand what it is we're talking about. Look, we'll let you know what happens later. Looks like it could be a late vote on the tax deal. We'll be talking about it on Balance of Power a little bit later on this evening here, but we do have a couple of things to learn today. We're going to stick with our panel for their thoughts on the campaign trail. Fundraising numbers are coming out, and we're learning as well how much Donald Trump is spending on his legal bills. It's a bigger number than you've heard of before. We'll talk about that with Rick Davis and Jeannie Shanzano. Coming up next hour, not only our Fed special, before that, our conversation with Congressman Chuck Fleischmann, the Republican from Tennessee, will be with us in the throes of debate here on Capitol Hill. Thanks for joining us. I'm Joe Matthew. This is Bloomberg.
Now, your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Microsoft, Alphabet's Google, and Advanced Micro Devices, three companies working harder than nearly anyone to weave artificial intelligence into their products, are finding that investor expectations for the technology are hard to meet. All three are lower after earnings. Advanced Micro Devices now down by 2.2%. Alphabet, parent of Google,